today we're going to talk about life and annuities, and so Troy is our resident expert on life and annuities. I'm going to ask some questions and act like I know what I'm talking about more than he does. So we'll get into that. And so we're going to just talk about some stats real quick, and maybe we can just kind of tee these things up about what's going on in the marketplace if you don't already realize it or see it with what we're dealing with. But we get publications from all over, KFF.org and CMS. One in particular that caught our eye here recently was the Employee Benefit Research Institute. And one of the things they talk about is how much individuals are going to have in savings to cover all the out-of-pocket costs associated with health insurance, associated with just everything financially in their life, with health and life. And, they said that healthcare costs remain the major financial challenge in retirement, even for people covered by Medicare. And I think that applies to even people covered by an ACA plan or a group health plan or anything like that. We still all have a lot of those out-of-pocket costs to jump into. And it says retirees and workers nearing retirement should not assume Medicare will fully shield them from potentially high healthcare costs. So it doesn't matter anymore. I mean, we got max out-of-pockets over $10,000, and we got folks that are retiring that can't really live off the Social Security that they're getting. So, we're going to be talking about the RSSA program and how that affects our agents and how they can use that as a tool.
Absolutely.
And, in that, I think the RSSA conversation, as we were talking before, lends itself to a conversation about income.
Yes.
And that's where the annuities kind of fall into place. So, anyway, we got a lot of information to cover. So we're going to do this more of a Q&A. We got some stuff we're going to pull up here in a minute. But as we're going through this, we're going to kick off talking about life and annuities today. From that perspective, I have personally, been in the field for a long time, and I can tell you I've sold a lot of term life policies and whatnot. But I've really not gotten into a little bit more of a comprehensive approach on selling life insurance. So right. I think that's, what I'd like to
absolutely
understand a little bit more today.
Yeah.
As we're going through this.
Yeah, sure. And Jacob, if you could put up the stat from LIMRA, I wanted just to touch on a couple things. The big thing that I want to point out, if you scroll down on this page, this is given basic demographics of those who haven't, at what ages, what generations. But if you scroll near the bottom, it says almost about 50% of Americans believe that they don't have enough life insurance, and close to 50% of Americans basically feel that once they get beyond 6 months, their surviving spouse wouldn't be able to pay their living expenses.
You mean they don't have enough?
Yeah. So like if they have it, it's only going to last them about 6 months. That's the way most people feel.
Wow. Okay.
And you mentioned about just the rising costs in health care and in out of pocket, all this kind of stuff. People are feeling that just with inflation. Mm-hmm. People are feeling the financial stress, the uncertainty, and it's a perfect time. It really always has been a perfect time to talk about that, identify that, ask them what their plan is. If they only have a policy through their work and maybe it'll only cover them for 6 months, or maybe it'll cover them for a year, ask, okay, what's the plan once you're a year out? Are they going to be in a better situation at that point? And some of these people might have kids that are depending on them, that they're going to want to get through college. Some might be single income households. So each situation is different, but the need is always there to protect that family. And that's where, especially as we're talking about Financial Literacy Month, to have those plans in place for your family is paramount.
Well, that correlation between how much it's going to cost you just in healthcare cost, I think about if something were to happen to me, what I leave my wife, is she going to be able to just cover the healthcare costs over the
Exactly.
next 15 to 20 years?
Exactly.
If that's the thing. So how do you recommend agents introduce life insurance to their book of business? Well,
Yes.
let me rephrase that. How do you compliantly introduce it? Because we got some Medicare folks
Yeah.
out here that shouldn't be talking about that
Right.
during the Medicare appointment. However, there's times and ways that we can introduce this.
Yeah. Well, and I like that you use that word compliantly because, as we know, those of us that have sold Medicare, there's regulations on when you're allowed to sell those Medicare policies and even how you reach out to those clients, how you market to them. And that's one of the benefits when it comes to life insurance is you don't have those enrollment periods. You don't have those regulations.
Right.
The one thing I would say from a compliance standpoint is Medicare does have, or CMS has rules around obviously not bringing up life insurance during your sales appointment for that Medicare Advantage plan, right? But beyond that, if they're your client, or even if they're not your client, it's a lot more lenient on how you go about with bringing up that conversation.
Yeah, because on the
So-
ACA side, you can talk to them pretty much anytime you want.
Right. And so the
even
same
during
goes
your
for life
appointment.
insurance. You can
Right.
sell it year round, and it's a great way to add to your revenue for sure.
Okay. It, you know, I think when I think about that question, it really goes back to as you're going through, in a lot of ways, you're going through as a revisiting that summary and revisiting that person about what their needs are coming up to AEP or OEP. That might be a good opportunity there. Again, with ACA, it really doesn't matter. You can reach out to them anytime you want. But just starting that conversation, what does that look like to you sometimes? I mean, when you're reaching out to those folks.
Absolutely. Yeah. So when it comes to life insurance, if you're an agent that's only selling life insurance, it's a struggle. There's a high failure rate. It's in like the 90s, really, of people,
So an agent coming
people,
into the market
if they're
just
only
doing
selling
life.
life insurance, the dropout rate it's in the 90s within the first year.
Oh wow.
So that speaks to how hard it is to get new clients if you're only selling that one thing, and that's the benefit of the cross sell, right? The benefit of if you already have these clients, you've already built that trust, they already know you, because that barrier that exists with those life only agents that are just starting out is how do I get more clients? How do I build trust and rapport to where these people don't feel like I'm being too salesy?
Right.
All that. But it's a huge benefit if you already have a book. I think the big problem is a lot of agents just don't ask,
Right.
right? Because as we can see, about 50% of Americans do have life insurance, but they don't have enough, right? So just simply asking the question. If you already have that book, you've already developed that trust, ask the question, what do you have in place for life insurance? And you could use the month that we're in as a reason for reaching out. As a part of the service I'm doing for my clients for financial literacy month, I'm reaching out to see if I can help you with any protection gaps.
Yeah. And
So-
tailing off what you said before, I mean, just the fact that people don't realize that they can't go more than 6 months in a lot of ways after they a life insurance benefit claim is paid.
Right.
So maybe bringing up that conversation, maybe asking, hey Troy, how's your family going to survive after 6 months? Because most people don't have enough life insurance to carry their family for 6 months.
Exactly.
So just starting out with that conversation, whether they have life insurance or not, you're just trying to feel it out, and it's more of a broad engagement that you're trying to, feel them out to what conversation we need to get into.
Yeah.
And
sometimes a simple question just creates the need in their mind.
yeah,
Right? So let's say they have a policy that's covering them for a year, like one time their salary versus maybe 5 times, maybe 10 times. all of this is going to be specific to the age of the client and obviously eventually their budget and other things. But asking the question, what would it look like for your family 2 years out with the coverage you have in place right now? Do you feel like that's enough? And in most cases, statistics tells us no, it's not enough. But that simple way of asking that question creates the need in their mind, creates the problem in their mind. And I feel that's a big place where maybe agents might go wrong if they're focusing too heavily on one product that they want to sell or too heavily on price.
Right.
And not first trying to create that need in the client's mind.
So, well, speaking, since you mentioned price, one question. And just to let everybody know, I kind of went around as we're preparing for this, and I asked questions to a lot of the agents that we have, and they gave me some questions back that I think that they wanted to know. So one of them was, in a market where clients shop price, like you just said, whether it's Medicare or ACA, how does life insurance help with that value?
Yeah.
I think that was a big question.
Absolutely.
That was a common question.
Yeah. And what I would say with that is really in any sales that you're in, there can be a tendency to sell based on price, right? I mean, you could do it if you're a car salesman. You could even do it if I know there's a lot of zero premium plans.
Yeah, on ACA, there's a lot of zero premium, so it's
But
much
at
easier.
least as it pertains to Medicare, because I'm certified to do that, I know sometimes there's some plans that might give them a little bit more benefit and it's a little bit more cost. But yeah, I think in that world, in really any sales role, if you're only talking about price, that can be problematic because you're not adding that value as an advisor.
Yep.
So with something like life insurance, you can even shop that at price, like with term carriers. And that happens sometimes where you're spreadsheeting a bunch of term carriers. But if you know to point out, hey, here's this one term carrier that has these extra benefits for only $3 or $4 more a month, that creates the value in the client's mind for you because you know what you're talking about. You've kind of shopped around with these carriers, and you're really looking out for their best interest.
Yeah, I mean, I think we get into more of that's really the retention conversation too.
Exactly.
The more policies you have with a client, the less likely they are to leave. I mean, and I think you even said this to me the other day. People will leave if you have one policy with them. They'll leave for $5. $5 more, you might lose that client. But as we add these plans in, they're less likely to leave you because you have more value. That's, I think the value part of it is to answer that question. I think it really comes down to value. What value are you bringing to that client?
Exactly.
How do you represent that?
Yeah, and that's the beauty. You mentioned retention. That's the beauty of selling life insurance policies, especially if we're talking from a health agent's perspective, where there is kind of that focus and that goal is keeping that book for as long as possible. And if you sell life insurance, these plans often are 20, 30 years or even longer than that if we're looking at a permanent plan.
Right.
And so selling them the right life policy up front, and the key word right there, the right life policy up front. Because and this is something that Benchmark can help for those that are new to life insurance and you're wondering, okay, how do I quote this? How do I do an illustration? What's the difference between this carrier and that carrier? That's something that my team at the Messer organization can help with. Our team is Benchmark Insurance Group, and we lead life and annuities. So we've done that a lot and really helped guide both new agents or new life agents and also their clients.
Yeah, I mean, if I was in the field, I would definitely use y'all as a resource. I think because I have my niche that I've focused on my pretty much my whole career, and I'm not a specialist with life insurance, and you are, so I would definitely be reaching out to you, especially when we get into the annuity conversation.
Absolutely,
because that's a much bigger one. But I like what you're saying, and I think basically what you're saying is life turns price conversations into protection and value conversations.
Absolutely.
So
Yeah.
I think offering that and finding a way to ask those questions, even if it's just simply, do you have enough life insurance, or do you have enough life insurance to carry you after 6 months, or
Right.
what's your family's financial life look like
Yeah.
after you've passed, and how much what do we have to do to
Yeah.
figure that out?
And when we're talking about the protection conversation versus the price, that's really building rapport with that client, right?
Yep.
Because you're asking specific questions about their child or children. You're asking specific questions about, their spouse, really with the goal of how do we best set them up for protection long term,
Yeah.
right? So that's the conversation, and I feel like that really helps you to get to know them better on a personal level. And as we all know, relationships are everything, especially when it comes to trust as an insurance agent.
Well, I think I even told you this before. When I was starting out, I was in my early 20s, and I had this guy that I worked with, and he was dead set on selling term life insurance. That was
Right.
it. I mean, he made the greatest argument in the world just for term life insurance. So, I'm 23, 24 years old, and I took this 20-year term policy.
Yeah.
Well, guess what? 42, 43 years old, it's coming due, and now I got to renew it at, I got maybe some health conditions at the time, or maybe it, just my age is going to make it way more expensive than if I were to take some whole life when I was, or even blend it. So I think, listening to you over the last year and talking to you about, building that need and finding the right conversation and drilling down into the conversation with a client to figure out their best needs for their family is the better way to go. Because I don't know if you can say, hey, term's the best, or whole life's the best, or final expense, or whatever it is. I don't know. You're the expert. How
No,
do you?
yeah. So, and just like I'm sure as it pertains to health products, right? It's never where we would say, hey, each person does this product, because it doesn't work that way. The products are all different because people's situations are all different, right? Their needs are all different. Their budget's different. Some of the things that they're concerned about from a peace of mind perspective might be different. So, for sure, you mentioned the 20-year-old. I was running a quote this morning for a 20-year-old for $100,000. And this would be for just like a basic IUL. $30 a month.
Oh, wow.
Right? So you think about if the person, locks in that rate, keeps that policy their whole life, $30 a month. I mean, you run that same amount on a permanent basis for someone in their 70s, you're probably looking at least a couple hundred a month. So there's value there to lock that in. And generally, when I'm talking to clients, maybe if they have children, they could do a policy on their children that they can have throughout their life. The parents would obviously start paying on it, and then they could transfer it over to the children when they're older. That's always a good solution. But even someone in their 20s, hey, if you can lock in something while you're young and you're healthy for $30 and have that the rest of your life, it's a great way to go.
Yeah.
Now, again, it's sometimes it'll come down to budget. So maybe it's someone in their 20s or 30s and they're looking to protect a mortgage, right? That's another big conversation when it comes to term. So that's why it could be good to do both.
Okay.
Always offer that.
Yeah.
So.
All right. Well, let's jump into annuities real quick. I'm just going to ask you the most simple question there is, and
Right.
I'm not the sharpest tool in the shed sometimes, but when I get into annuity conversations, I get nervous. I'm just being honest. As an agent, I know what they do. I can probably give you the Cliff Notes version of an annuity, but the moment somebody starts asking me questions, I'm going to retract and try to
Right.
divert and call you, basically.
Yeah.
So
Yeah.
if you had to explain annuities just in an elevator pitch or something along those lines, what would that look like?
Yeah, so a basic explanation of annuities as it pertains to us, insurance agents who don't have a variable license. So
Okay.
they're basically insurance products that can be used for several different purposes. One of the popular ones is a guaranteed lifetime income, and that can be on an individual or a joint basis. And that's real popular for those that are approaching retirement,
Okay.
because they're looking for basically a safe place to put their nest egg. And they do have concerns when they retire of, am I going to outlive this money that I've saved up?
Right.
And that's a very common concern that people have, retirees have. So as an insurance agent, if you have a life license, you can sell fixed and fixed indexed annuities. Variable annuities are tied more to the stock market, so you do need a securities license for that. But there's a lot of good solutions to problems that retirees have when it comes to annuities. So the guaranteed lifetime income. Also, just for those that are more conservative and want a guaranteed rate of return. So maybe they have money sitting in a CD earning 3 or 4%, and you can put it into what we call a multi-year guarantee annuity
Okay.
that has a higher interest rate that it will earn. But the beauty of that versus a CD is there is tax deferred, meaning they're not paying, today's tax day, right? Meaning they're not paying taxes on their interest every year.
Okay.
So it's deferred.
Okay.
And so, and then there's those that just want to accumulate as much as they can, and there's specific products for those goals as well. So could be income, could be guarantees, could be accumulation, and based on which category the client's looking for and what their needs are, that's where we help with our recommendations. And that's a way that you can utilize, again, the benchmark team to help you with those sales proposals.
Gotcha. Okay. Before we jump into another set, we're jumping into annuities too much. Do we have any life questions? Let me see if we got any in here. I don't think we have any questions so far.
Let's see.
So what's the annuity landscape look like moving forward? I feel like there's been a lot more conversation about it lately. Over the last couple years. I've heard more about annuities more than I ever have, and
Absolutely.
it may be just me. So I'm wondering, is there a push for this, or is there, why is it becoming more? It feels like it becomes more important these days.
It does. And Jacob, could you pull up that annuity attachment? It's a one-pager. So what Jacob's about to pull up on annuities, it's a little article that's kind of, I think it's from LIMRA, that's going over the fact that annuities have had the fifth straight year of record growth. I think it was in the billions of dollars, 450 billion.
Mm-hmm.
And so what does that mean? That means people are interested in annuities. They're wanting annuities. They're buying annuities. There's a lot of money going into annuities. The beauty of being a health insurance agent and maybe working with Medicare clients, again, is you've developed that trust. You've helped them with a Medicare policy, and maybe for years you've helped them, and they've gotten to know you, right? You've helped them maybe with a life insurance, with an ancillary. Now you can help them with this money that they've saved up. So you're not only protecting their health with health insurance, you're protecting their family with life insurance, and you're protecting their income with annuities. And it's a complete package. It's kind of like the three-legged stool of protection, to where you are their protection advisor, right, for all three of those things, to have peace of mind. And that's a big thing with annuities, is it gives clients guarantees. It gives them ability to grow without the risk for loss, right? And tax deferral is another big thing. So lots of reasons that your clients are going to be interested in annuities, and you've got a gold mine if you have a big a large book of Medicare clients.
Really? Okay. So, what responsibility do we have when we're talking about annuities? I know there's some, there's always these terms like fiduciary responsibility and,
Yeah.
and things like that. Or is there
Mhm.
anything specific to that conversation we need
Absolutely.
to be aware of?
Absolutely. So when it comes to annuities, the king is suitability, right? The suitability is everything. It does take a little bit of fact finding up front to kind of get an overall picture of their financial situation, maybe get an idea of what assets they have, what liquid assets they have, what expenses they have, things of that nature, just so you get an overall financial picture. And we have fact finders where you can do that. We can help you with those. So reach out to the Benchmark team for that. But yeah, to your point, disclosing things like the surrender charges on annuities. Some of these annuities might have multi-year surrender charges, which is normal because that's basically protecting the insurance company as well, so they can make money off of the money that they're investing for the client, right?
Mm-hmm.
So disclosing things like those charges, those fees, there's new state regulation. It's called the NAIC Best Interests. It's a 4-hour CE course.
Oh, okay.
So if you haven't sold annuities before, you're looking to sell annuities, you can go out to any CE vendor. The popular ones are Reg Ed and Web CE, and you can do this 4-hour course, and that's what any annuity company will make sure that they check before they appoint you.
Oh, really?
To be authorized to sell.
So I can't
Yeah.
you can't just appoint anybody you want with an annuity product. They have to have some
Right.
you know,
So
credibility there.
just like you go through a little bit of checks and balances and training when it comes to product training and AHIP with Medicare, it's not as extensive per se as the Medicare training, but there is that 4-hour one-time course that you do, right? And then once you've done that, it's basically a product training type of requirement based on which particular annuity you're going to sell. So if I go out to Equitrust and I'm going to sell one of their products, once I get appointed with Equitrust, I can log onto their website, and it might be a 10-minute overview of the products that they have, and that's considered the product training. And so that's what authorizes me to then take an application.
I'm going to make a recommendation right now. If you're like me and you've been doing all these other things over the last several years, and annuities is something you're trying to get yourself into, my recommendation, and for myself even, is I think if I ran across stuff like that, I would want to get you involved. I would want to, because I'm not going to be able to have the same conversation with my client, and my fiduciary responsibility
Right.
is to make sure that I'm educating them as best I know how. So I think, using you, especially in the beginning,
Yeah.
would that be your recommendation?
100%. Yeah, and so that's what we're here for. That's what we were brought in to Messer Financial to do. We do have decades of experience, and if I'm talking about Bob Long, we have multiple decades
Yeah.
of experience in this industry, selling annuities, selling life insurance, knowing the differences between the carriers and the products, and knowing the questions to ask. So I mentioned a fact finder that we've developed for annuities. I would highly recommend using that, and we can get that to you if you reach out to us. We also have great software. So once you start getting your feet wet and maybe you want to get more experience with quoting it yourself, we've got access to basically half off the retail price of the software we use that basically goes out and it compares all the annuity carriers, over 100 annuity carriers.
Okay.
And you plug in, based on your suitability fact finding, you plug in some of that client's information, and you plug in, okay, here's the goals for
Right.
what this client wants to do. If they want guaranteed lifetime income, here's when they want it. Because they might put money in an annuity and let it accumulate for maybe 10 years, maybe 5 years, and then they can turn on that income.
Okay.
So just like with Social Security planning, which we'll talk about next week.
Yeah, I mean,
right?
I think this conversation and the RSSA program kind of complements each other and goes well together.
Yeah,
So,
100%.
we'll definitely talk about that next Wednesday. I just, and we're getting on our time limit, so I just had one more question. Could you just share with everybody like an existing circumstance or situation where an agent called you about an annuity product, or how that unfolds, and just kind of give us a glimpse into that?
Absolutely, and this might be a little bit of a teaser into tuning in next week.
Right.
But we have an agent that's a very successful agent with health, has a large book. She's just crushing it. And she registered to do the Social Security, the RSSA. So that's the Registered Social Security Analyst,
Yep.
is what that stands for. And the good thing about that program, and we'll get more into it next week, but the good thing about that program is it identifies the financial situation for that client, the specifics of what they might be getting in Social Security. So you're already talking about their finances. You're already talking about, okay, what's the most efficient way to use the funds that you're going to get from Social Security. But when you're talking about those finances, it comes up. It just naturally comes up.
Right.
Money that they might have, and that's the perfect lead-in to say, hey, I'm licensed to sell this. I work with a team of experts that can help.
And again, we're getting to the end here, and if you have questions, any of y'all have questions about any of what we talked about today, we have how many carriers on the life and annuity side? I mean, tons.
I've lost count.
Yeah, we have
it's
tons
a
of
lot.
carriers. I know some of you may be licensed with a few life carriers, but it wouldn't hurt to reach out to Troy and benchmark and to talk, or your marketer, the marketer numbers in there, to talk about, what you have in your portfolio of life and annuity opportunities, and then get some advice from you. Maybe we need to add, a couple more plans in there to kind of diversify your life portfolio, if you will.
Yeah.
I know there's life companies that can give you the self-enroll links. I know there's life companies that specialize in guaranteed issue or child policies. So I think it's important for us to know that we have to diversify even within the life and annuities conversation.
Yeah.
It just feels like if I have one carrier, it's going to limit me from the things that I can offer.
That's right.
In some cases.
Yeah.
So, do you have a recommendation about how many carriers does a
Yeah. I
agent
mean,
need?
if you're just starting out with life insurance, and I've seen this from time to time where some people are just starting out with life insurance and they go and select like 50 carriers for life insurance. I would not recommend doing that. Come to us and ask us, hey, which one should we start out with? And what we'll do is we'll offer a very competitive term carrier that we've had really good experience with in the past 10 plus years, and I'm saying that as a shorter time frame because if you're doing a longer time frame, carriers change, plans change, all that. But we'll recommend a term carrier, a good final expense, a good universal life, a good whole life. So we'll get you maybe with like 4 or 5 carriers to have just a well-rounded portfolio to start with.
Is that the same for annuities? I mean, do you recommend the same situation
For
annuities?
annuities, I would recommend come to us and we'll get you some more training material on what steps you need to take. I reference the best interest course. So we'll get you information on that. We'll get you some of our fact finders. We'll get you some of our 101 training PowerPoints that we've done. And then I would also use on your first 1 or 2 or 3 cases, use my team as a resource to help with the case design. So we'll use our software to help find the most suitable annuity for your client. We'll help you with any questions you have with it, so you'd be ready to answer any of the client's questions. And so usually we treat annuities on a case-by-case basis.
Okay.
Based on what that client's
sense.
looking to do.
Yeah, that makes sense. Okay, well, I think that's that. We don't have any more questions from the group, and I thank you for asking or answering some of my questions. Those are some personal questions I had in there, and I think it applies to everybody. But just to let everybody know, again, next Wednesday, we're going to have RSSA conversation, and we're probably going to bring some annuity conversation into that webinar as well, because like we talked about before, having that RSSA conversation lends itself a great lead in to
Big time.
annuities and
Big
even
time.
life insurance.
Yep.
So make sure
And
if you're looking,
Medicare.
and Medicare
Yeah.
and ACA. So
Yeah.
I mean,
Yeah.
it's but if you look in the chat box there, you'll see the links for signing up for next week for the RSSA. So I would really encourage everybody to jump on that webinar because it's an important piece. I would definitely do this if you're in the field and you're looking to expand. RSSA is probably, in my opinion, the next step I think you should take in your education and certification process, along with the annuity conversation, along with understanding a little bit more about life. But RSSA is going to put you in a position where people are going to be coming to you,
Big time.
and
Yeah.
sitting down with you and going through their Social Security and going through their estate, well, not really estate planning, but planning for the future.
Absolutely.
And again, if you have questions about the carriers or anything like that, please reach out to Benchmark or reach out to your marketer. The number's right there. We're going to record this, so if you want to refer back to it, it's going to be in your agent portal on our website. But unless you have anything else, that's
well,
all we got for today.
I'll end with a quick testimonial of
Okay.
this is a series for Financial Literacy Month, right? And someone who works here who has a life license, she may have sold a policy or two in the past, but doesn't sell all that much of it. But she went to a workshop at her church for Financial Literacy Month.
Oh, really?
And they found out, they were like, wait, because life insurance came up. They found out, wait, you sell life insurance. And now I'm helping her with quotes for like 4 or 5 different people.
Nice.
That she can potentially sell.
Heck yeah.
So that speaks to the fact, just bring it up. Bring it up that you offer life insurance. You have all these clients. Ask them about their situation. Maybe do a review. And we can help you to get more sales.
Sounds great.
Yeah.
Well, thank you for answering questions today. Thank you for everybody for being on the call. This concludes our webinar today, and we'll see you next week.
See ya.
Good morning, everyone. My name is Brandon Adams, and welcome to Messer's Webinar Wednesday. Here today, again, we have Troy Felton. Troy, thanks for being here with us.
Thanks, Brandon.
And
Thanks, everyone.
today we're going to be talking about part 2 of our April's National Financial Literacy Month. And before we get started, though, just a couple housekeeping things. If you look in the chat box next to on the webinar here, if you look in the chat box, you'll see some links to our social media. And if you'll click those and follow us on social media, we like to put out a lot of information in a lot of different places, and that's definitely one of them. So please follow us there. Everything in the webinar today and in the future and in the past, we record and we put into your agent portal. So if you ever want to refer back to it, it'll be in your agent portal. And any questions that you have throughout this process, you just make sure you put the questions in the chat box. But if you just want to call in, the number to Messer is right there in the chat box, and you can call in and ask for a marketer, or you can ask for Troy at Benchmark and any of the Benchmark folks. You can ask for me. I'd be happy to help you with anything. But so let's get started. Today we're going to be talking about RSSA and what that entails, and we're going to kind of give you a little bit of information about that and how to have conversations about it and what the RSSA program can lead into. Mm-hmm. So I know you got some stats about this, and I'm kind of eager to hear them.
Absolutely, yeah. So with RSSA, so what that is, it's Registered Social Security Analyst. It's a certification that you guys can do. And what it is you basically become an advisor with people with their Social Security, with their retirement. And some of the stats that Brandon was asking for is over $139,000 of money is left on the table for people not using their Social Security most efficiently, not either taking it soon enough or maybe taking it waiting too late to take it. And
So there's like a sweet spot there?
So, well, part of the problem is just confusion behind when to take it.
Okay.
Confusion behind things like their own benefits, behind their joint benefits, maybe what's going to be the survivor benefits after that.
Okay.
And there's not really any specialists or like experts when it comes to Social Security. Like, one of the things is one of the worst places that you can call for advice on Social Security is where?
I don't know. I'd probably just Google it.
This is the Social Security office.
Okay.
Is one of the worst places you can call for advice on Social Security, which is pretty sad when you think about that. But it speaks to the point that there's not a lot of experts out there, and that's part of the value in getting the certification. Is there's a lot of people out there. We've got a stat here that says 11,000 baby boomers will claim Social Security per day in the next decade. And you've got that amount of people that they have questions about Social Security. They don't have anyone to ask. A lot of confusion. And it just speaks to the opportunity when you have all those people that are turning 65, approaching retirement. You can be that go-to specialist that can help them with their questions.
So you don't have to be turning 65 for this, or you don't have to be, ready to collect your Social Security for this. I mean, you can be talking to people who are, my age, young people like me.
I think it would be probably the ideal age range would be people 62 to approaching 65.
Okay.
Because that's going to be the age range of people that are starting to really think about it, and it's becoming sooner rather than later for them, right? Mm-hmm. And so they're starting to think about things like retirement. They're starting to wonder about their Social Security, what that amount might be. And so I think that would be the sweet spot of the age range to target about this.
Okay. So before they're turning 65, to kind of give them an idea. Yeah.
Exactly. Yeah.
Okay. Well, that's because I've heard this term RSSA a lot over the last year. I know there's been a little bit of a push for it, and I think like myself, most agents are probably confused about what it is.
Right.
And so I think it's probably important to start paying attention to this. The one question I have, probably that every agent is going to have, when I first started hearing about it, is, and I know this sounds weird to say, but how do I make money doing this? Is there money? Like, do I become an advisor, an RSSA advisor, and do I make money off of that, or do I, how does this work?
Yeah, and that's the beauty behind the program is, I mentioned, and let me just rewind a little bit here. Okay. So let's say you're just a Medicare agent. Mm-hmm. Right? And you look at all the competition that you have.
Okay.
Right? So you look at all the other agents out there that are doing different marketing programs or different lead programs to reach out to people that are turning 65. And that's your competition. So it's really stiff competition. And now more than ever, people are looking for ways to differentiate themselves, how to stand out from the crowd. And utilizing something like RSSA can be used almost in an organic lead standpoint. So if you're approaching people 62 to 64, right, mm-hmm. and they show interest in learning more about Social Security, that's building an organic, basically pipeline of future clients. So that's part of the answer behind how I make money on that. Another thing that I really like about it is, and we talked about this last week with life insurance and annuities.
Annuities, right.
And kind of just the overall picture of why it's important to be really just a more holistic protection advisor. Mm-hmm. And when I say protection advisor, I talked about three things. I talked about protecting your health, right, with health insurance. Talked about protecting your family with life insurance. And then I talked about protecting your income with annuities. And that's kind of like that three-legged stool of overall protection. And, you know, when you're offering that full spectrum of protection, you're gaining more of the trust there. And the good thing about RSSA is almost everyone is going to collect Social Security, right?
Right.
And so there's a need for that from everyone. There's a lot of questions from everyone. And when you don't have a lot of people that are certified for RSSA, if you go and you get certified, this helps you really gain access to start talking about things like Medicare once they age in. After you've talked to them about Social Security, you've already built their trust with advising on their finances and when would be the most efficient way to take Social Security. And then you eventually get that Medicare business. But then when you're sitting down with them, you're looking at their finances. You're looking at possible gaps that might be in their income in retirement years. And that is a perfect lead-in for something like an annuity. That's what an annuity can do, is provide them a lifetime income. It's just the perfect lead-in for that.
Okay, so your Social Security is talking about your income. I mean, what better way to lead into that conversation than to talk about when you're in there talking about somebody's Social Security?
Yeah. So like a second part of that question that you asked was, how can I make money? So with this particular certification, some agents will use it and not charge anything at all for it. So they use it basically to build a pipeline of clients that they're advising on Social Security, they're building a relationship with, they're going to sell Medicare to, and possibly an annuity to. And that would be their reason for not charging anything. But then some agents also charge a fee. So the average fee that an agent will charge with advising on RSSA is anywhere from $400 to $600.
Oh, wow. Okay. So you can charge a fee.
Yeah,
if you want to.
And a lot of people do.
There's no regulation against it,
right?
Or anything.
Right.
Oh, okay. Wow.
Yeah.
So, if let me back up a second. So, if I become a RSSA agent or advisor, am I going to get is there a place that people will be able to find me in that? Do you think is that what?
Absolutely.
Okay.
Yeah. So the way that works is you go through basically an educational program, and I think it's the equivalent of like 20 hours of I'm not continuing ed. I think you get, if you're wondering about continuing ed credits, I think you get around 8 hours of continuing ed credit.
You do?
Yeah.
Okay.
At least that's the case for North Carolina. I think it varies among the different states. But to actually do the whole program, like the studying, the tests, all that, it's about 20 hours of your time. But then once you do that and you pass the test, it gives you this designation as an RSSA, and then the RSSA company will provide you with marketing materials. They'll provide you with a landing page, like a public landing page.
Well, that was my next question. What kind of tools and support do we have on that side? Because this is pretty new to everybody.
Yeah, absolutely. So in that landing page, and they have that a public thing, and they can provide you with marketing materials, whether you're doing advertising on social media, whether you're doing mailers. And where a lot of agents find success with this is seminars. So if you do like a dinner seminar,
educational seminar,
something along those lines, they have PowerPoints that give all the scripts for everything and what to say, and so they provide you with all that.
Man, I think that would probably open up everyone to a lot of opportunities with the educational seminars, because if I tell, if I'm advertising that, hey, come to my educational seminar and let me help you understand what your Social Security benefits are going to be. Am I saying that right?
Yeah.
Okay.
Yeah.
Yeah, it seems like we get a lot of traction with that.
100%. And I was just, the people that run RSSA, he was just talking about a seminar that they held. And at these seminars that, you can expect generally around 30 20 to 30 people. But he said in the seminar that they held, it was a 3-part, so 3 different days, and they had 50 people each day. So ended up being over 150 people that came to this seminar, and a lot of business came from that. He used the example of one person that obviously they were interested in their Social Security, but it, just like I was talking about before, it naturally led to the topic of, hey, has anyone talked to you about lifetime income, guaranteed lifetime income? Because we see that once you retire, you're going to be getting this amount from your Social Security. That amount is no longer coming in if you've retired from your job, right? And then the software also asks more of the client's financial picture. So it'll ask, what other expenses they're going to have, or what other assets they have. And so it takes a look at all that, and it quickly identifies gaps that people might have. And it's just the perfect lead in to, well, would you be interested in looking at an option for guaranteed lifetime income? And especially when people are looking at their future retirement financial picture, they're going to be very interested in something like a guaranteed lifetime income with an annuity.
Yeah, because if you come to an educational seminar, there's some rules and regulations that you have to abide by when you're talking about Medicare. You can't sell that day. I know we got some final rules that just came out that are going to relax some of these stipulations on us. So I think everybody's going to be looking forward to that.
Right.
Come October 1st. But it feels like that would be something that we could get into anything you want and during that conversation. Is there like a enrollment period that we have to abide by here, or is there like a certain time period that we have to do this?
No. So you basically can hold these seminars whenever you want. It's really just about getting the word out to those that are interested in learning more about Social Security. Obviously, you do need to complete your certification. So you need to take the tests. You need to pass the tests. And then each year they have, I want to say it's like a 3 or 4 hour continuing ed requirement to get updates on what new things have changed in that given year with Social Security.
Well, I was kind of researching and reading through this stuff. I did see where they do have ongoing trainings and training modules within the RSSA program, I think, once you get in and once you pass your course. So I did see that. So that's kind of nice.
Absolutely.
Do you have have you have a situation or a story? Have you taken somebody through that process that you can kind of
talk about
a little bit? So I mean, not naming names, obviously,
right.
But.
So we rolled this out, and one thing that I'll say with Messer Financial, because we talk about RSSA a good bit. We've been promoting it really for the past about 2 years now, and I know some might ask, okay, what's in it for us? Like, are we getting some kind of money from showing this link that shows half off of the retail price of RSSA? And the answer to that question is no, we're not. We're not getting money for promoting that. The reason that we promote that is because we believe in the value behind, number one, getting that education about knowing more about Social Security as an agent. It makes you more of a well-rounded agent that can, like I was mentioning before, stand out from the crowd. So it gives you that education, that expertise. But we really believe in the fact that, hey, this can just naturally lead to more business. And even though it is somewhat of a upfront cost for whoever's signing up for this, if you utilize this properly, this will lead to like multiple times return on your investment.
Right.
So to answer your question about some personal examples, I do have a couple in the past year or two that we've been promoting this. Both of those come from agencies that are Chairman's Council agencies. So they're some of the top agencies, and they've looked at the program and they believe in the value of it. One of them just recently went through the program, and this was one of her first RSSA meetings. So she
did an educational meeting.
Well, it wasn't a meeting where there's a bunch of people. So This was more of a consultation one-on-one type thing. So she was running the report for this guy, going over his different options for Social Security and when it might be best to take Social Security. And that led to him asking about Medicare, but it also led to him mentioning, hey, I've got this amount of money and I'm looking for a safe place to put it. And it was just the perfect annuity conversation, because he was worried about what's going on in the market. He's at that retirement age. It is a large amount of money, $650,000, and he wanted a safe place to put it. And he was okay to let it grow as much as possible for the next 7 to 10 years.
Wow.
And we helped her out with that sale, and it's going to lead to probably tens of thousands of commissions for her.
Really?
Yeah.
Wow.
Yeah. So great success story for that.
I'm trying to sit here and thinking, like, in that situation, like if I'm in a Medicare selling situation, I really can't talk about a lot of the stuff. I mean, I can talk about dental, and I can talk about some ancillary products and stuff, but I can't talk about life insurance. I can't talk to that person about annuities. It seems like this will be a great door opener for
100%.
that conversation, because how do you get into that conversation if you're in a Medicare sale,
right?
Or even in an ACA sale,
yeah.
And I got 5 appointments deep for the rest of the day, and I'm trying to hit my marks and hit my time frames during the day. It's hard to do that,
right?
So I feel like this might be the answer to that.
Yeah, and the beauty of it is, and I mentioned, I kind of view RSSA as kind of the glue that holds together that 3-legged stool, right? So if you're out there just churning, just doing health sales, like the difference with this is this one meeting, sure, it can lead to the health sale, but it can also very easily lead to that annuity sale and even a life sale.
Wow.
Yeah.
Okay. That's pretty awesome.
Yeah.
How much do we have a price on this?
We do. So the retail price is, I believe it's $3,400. And if you do the link, that's through the Messer landing page, and we're going to put the link in the chat feature. If you check that out, it's basically $1,200 off. So it's about a little over $2,000.
That's not
for
bad.
the cost for the agent.
Yeah. I mean, we're spending a considerable amount of money. All of us are trying to get leads and put these educational seminars on. So I think this probably needs to be a part of your investment,
right,
into this.
And that lump sum is it's a one-time thing, from the sense of once you pay that money, you can maintain that certification. It is after that, it's a $500 per year charge, because they continue to make updates to the software. And there's costs behind that, so they need to make up those costs. But it's money well spent, even if you don't even make any sales, which I'm of the strong opinion that you will make many sales, and you'll make a great return on your investment. But even if you don't, it's still a worthy price to pay for the amount of education you're going to get.
Right.
Talking to people about Social Security, you can help them sign up for Social Security.
Right, because how do I know what your Social Security is, or what you're going to be paid, or what your retirement's going to look like if I don't have access to that, or I don't know how to, or if I'm calling a number to the Social Security office and talking to somebody who probably is not that invested in the client in the first place.
Exactly.
So
yeah.
Wow.
Yeah.
And just to let everybody know, and Troy talked about in the chat box, we're going to have those links are in the chat box right there. So if you have a question, please type your question in the chat box. And remember, if you raise your hand, you still have to type the question. But we got that link in there. We'll have the 800 or Messer 800 number in there for when if this is something you decide you want to do and you have more questions, please call that number. You can call and talk to the marketer. You can call and ask for Troy or myself. We'd be happy to help you. So I know there's a lot to this, and there's probably a lot of moving parts, and I know that I have probably 1,000 more questions that I want to drill down into. But for today, what would you tell somebody about this? I mean, how do they get started, or right. what's the next action item? I guess I'm asking.
Yeah.
That they need to take to get this going.
The big thing is click that link in our chat feature. That's going to bring you to the Messer landing page, where it will have that discount. The big takeaway right now would be to sign up for it, because it's going to be well worth your money. Once you start to get certified for this and learning more about this, this is going to get you in front of a lot more clients organically. It's going to help with more sales, with Medicare, with life insurance, with annuities. So that would be the main action point I suggest right now, is just sign up for it, start to learn how that process works, and then also reach out to the Benchmark team, especially if you start, just like the situation when I was talking about the Chairman's Council agency, where the annuity conversation came up, and this was a person that had never sold an annuity before. And so
Really?
you think
Okay.
of a $650,000 annuity being your first annuity sale. That's a
What?
massive.
That's insane. That's
Yeah.
awesome.
Yeah, and it's so
Heck
it's
yeah.
a great success story. But she didn't even know. She's like, "Hey, oh wait, Benchmark can help me with this," and we certainly did help her with that. We represent all the top annuity carriers in the industry. So when those conversations start to come up organically, my next takeaway is, hey, reach out to the Benchmark team. We've got great fact finders for annuities. We've got good training material for annuities. We can walk you through from A to Z how to sell that annuity in a compliant way, a suitable way that's going to really benefit your client.
I'm just sitting here thinking, can you imagine how many opportunities that we have right now with just our existing book of business and all the agents out
It's
here with
massive.
their existing book of business?
Yeah.
Just by being able to sit down with a client and have that conversation, I think that's probably going to be. Now I can see what the big push is. Now I can kind
Yeah.
of see a little bit more of what this means to all of us and all of our business.
For sure.
Wow. That's
Yeah,
awesome.
it's massive. I wanted to read another testimonial, because I reached out to another one of our Chairman's Council agencies. This guy, he told me at the last Top Producer Summit last year that he was really getting into the RSSA program. We didn't have time to have him be to give like a live testimonial, but maybe at some point we'll do that.
Yeah, we can do that.
But I have him just sent me a quick snapshot of where things are right now with him, and I'll just read a little snippet of what he sent me. So he says, I've been marketing it to do Social Security signups, and I recently started charging for it. So
Okay.
that's the piece that I mentioned before. Some agents charge for it, some don't. If you're charging for it, you can make a decent amount. You think about if you're sitting down with a client for maybe an hour or so, and you're in the average cost that someone's going to charge for it is around $400 to $500. It's not bad. So, and it, that's a service that's well worth the money too. Because
Right.
when you think about how most people are confused about it and they don't have someone that they can go to advise them properly, it's a very valuable service for them. So he says that it's a very useful way to look into annuity opportunities and, of course, get new Medicare signups. And he says, I'm now more confident than ever knowing about Social Security and being able to assist someone with a filing strategy and a plan. So a nice, positive experience that he's having with it.
That's great.
Yeah.
So he's writing business out of this by
Yep.
doing. Yep.
Yep.
Awesome. Wow.
So
That's
annuities and new Medicare plans.
Okay.
Yeah.
Well, I know we could probably get into some details on this in a big way, but for now, I agree with you. I think everybody should just, if this is something you're interested in, which I think you probably should be now that I hear some of this stuff, just call Messer, call the Benchmark folks, and you can talk to us, and we'll get you pointed in the right direction. If you have a question about something, you can also email us as well. If you're wondering about this, but this seems great. Man,
Yeah.
Seems exciting.
Yeah. And another good next step I would recommend would be to go out to the Messer website, sign in to the Agent Center, and there's a link on there that says past webinars, right?
Okay.
And if you click on that link, you're going to see all of our past webinars. And if you go back to January of this year, that's when we did kind of an update of the new improvements for RSSA. We've done multiple webinars on RSSA, but the good thing about that webinar is there was some refreshed updates in 2026, and the rep from RSSA went through all of that.
Oh, okay.
And so that would be a good next step, maybe prior to signing up for it, because it's going to give you the ins and outs of the opportunity. He gives a little demo of the software itself, so you can see what it looks like, see how it works, see where it naturally leads into the annuity and life conversation. So definitely encourage checking that out.
Okay. Yeah, and when they're doing this, I think it would probably be advisable to talk to you anyway, because we might not have the right life contracts, we might not have the right annuity contracts, or we got to do something to get those annuity contracts. So while you're doing this, it might be a great idea to talk to Troy and his team about that very thing.
Yep.
So, well, thank you for kind of going through this with us today. I know this National Financial Literacy Month is all about that. It's about tying this all together and being more of a well-rounded agent. I think this is a huge part and huge step to becoming a better well-rounded agent, especially understanding Social Security, because I understand none of it. I know I'm supposed to get a Social Security check. I know, if I think about my parents, my mother, she gets a check from Social Security, and I know she gets the money, but that's about it.
Right.
And I have no idea how it was formulated on the back end or in the previous years. So it might be a great thing to, like you said, have a better conversation with your clients.
For sure.
About this. So,
it definitely helps to be a more well-rounded agent, because it's a lot more sticky.
Yeah.
Because like I was mentioning before, it's kind of like the glue that kind of brings everything together, because these products that we're talking about, the life, the annuity, the health, they're all interconnected. And today more than ever, it's important to be a more well-rounded agent and to diversify and to offer that additional value to your clients, build that rapport. And when you're dealing with something like Social Security, which that's the thing, a lot of agents out there are not doing that. And even the Social Security office, the reps there are not advising people properly.
No,
so that's what's great about this certification, about the software, is it makes you the subject matter expert on that. And then these people will have a lot more loyalty to you and a lot more trust when you're advising them on that.
Well said. Yeah. That was great. Now I got to go sign up for RSSA. So, well, thank you, Troy, for going through that with us today. And thank you all for being on the webinar. We're obviously, like Troy talked about earlier, this is going to be recorded. So if you want to log into your agent portal, you can find this recording in your agent portal. And also remember to follow us on social media. Again, we push all this type of information out all the time in different ways. So make sure you follow us on social media to get that information. But again, thank you all for being here today. And this is part 2 of our National Financial Literacy Month. And the next week, we're going to get into a little bit of what we've already talked about, but going into some of the ancillary products and how these ancillary products can help, especially retirees at this point in their life, save some money and offset some of those out-of-pocket costs that they're going to be experiencing after retirement, and especially when they turn 65. So thank you again. This concludes our webinar. Hope you all have a great week.
Thanks, everyone.
Well, welcome everybody to Webinar Wednesday. Today we have with us Jeff Street. Jeff, thank you for being here with us today.
Good morning. Thank you for having me.
Yeah, and this is part 3 of our April's National Financial Literacy Month. So today we're going to jump into having a different conversation about ancillaries, just to pose some questions. I mean, we've all gone through all the stats, and every carrier in the world has given you their opinion and their take on ancillary, and it's all saying the same thing. So just maybe today we just get into some different conversations about how to have different conversations with your clients.
Okay.
Just posing different questions. We can go through some stats, and I got a bunch of questions that we've filtered in from the field.
Okay.
And people that have called us about certain
Well,
things.
I want to put a disclaimer in there right
Oh,
off the bat, because
okay.
you said financial literacy, and I'm also from Alabama, so I want to
Yep.
make sure that everybody understands that they should take my thoughts and advice with a grain of salt today. Okay.
Okay.
All right.
We don't want to get into
long live the tide. Yeah.
Roll Tide.
Yeah.
It's not financial illiteracy month, so yeah.
All right.
But before we get started, let's do some housekeeping stuff real quick. So as you're looking at your webinar there, you have a chat box on the right side of the page, or a question box. So if you have any questions as we're going through this, please feel free to type those questions in. Again, if you raise your hand and you don't type a question in, I still don't know what you're wanting. So when people raise their hand, I think they're just saying hi. So,
Okay.
But if you got a question, please type that question in. And also in the chat box, you're going to see some things like our link to our social media. And if you go and follow us, you're going to get a lot of information from us. We're trying to push information out a lot of different ways these days. So social media is going to be a big one for that. And also these webinars are recorded. So if you go into your agent portal, you can pull up these webinars if you miss it, or if you want to refer back to it, and get into some conversations that we have. If we have some questions that you didn't get a chance to write down, please make sure you refer back to that. And as we're going through this, we might be mentioning carriers. If you don't have these carriers that we're talking about, or if you need to ask one of the marketers about what carriers you want to get into when it comes to ancillary, the phone number to our marketers and our Messer team is going to be in that chat box as well. So, Jeff, we got a lot of stats. I guess the first thing a lot of people, when they think about ancillary, agents, they just start jumping into statistics.
Mm-hmm.
We say a lot of things like 1 in 3 people are going to come in contact with cancer at some point in their life.
Yeah.
That's a stat we get from the American Cancer Society, or, the heart disease comes from American Heart Association, and strokes. And you can probably put a stat on every ailment that we have these days.
Mm-hmm.
And so that's really where we start. I mean, to me, I've been in the ancillary field for most of my career. Okay. And this is all I did for the longest time. I just sold ancillary products. So this is definitely a policy that you have to build a need on. There's no skirting around this, because a lot of times, people need health insurance, so they're gonna purchase health insurance. When they wake up in the morning, they think, okay, I need some health insurance today because my other policy is canceling or whatever it is.
Yeah.
People don't wake up in the morning and think, oh, I need to go buy some cancer insurance today. That's just really not a thing that people do. So, it's our job to build that need and find those pain points as we go along in that health conversation.
Yeah.
So really the question starts to come into is like, how do we have that conversation, with our clients? And you really get into where to introduce these types of products. I make a joke about this all the time, but a lot of agents tend to have this crystal ball. And so when a client walks in the door, they think, okay, Jeff's coming in. You know what I think? Jeff needs an accident plan. He just looks like he needs an accident plan. So like we're almost clairvoyant when it comes to these things. And so we have to filter this down to like getting ourselves into a rhythm of how we're introducing this and how we're asking these questions as we go along.
Okay.
And really the main part is for us and what we've seen and what we've experienced, and any success I've had and success you've had and as a whole of Messer is when it comes to ancillary, is having that conversation while you're in the conversation with health insurance. Let's take an ACA plan for an example, or a Medicare Advantage plan, or anything really.
Mm-hmm.
All of those have a summary of benefits attached to them, and per FFM and AHIP guidelines, it's our job and our duty really to go through those summaries with each of our clients and hit every single point of those summary of benefits with each of our clients. And we found that that's where having these conversations really kind of start, because it's just easier. It's easier to talk to you about an initial hospitalization benefit, and what your copayment's going to be and what your deductible is, because right out of the gate, there's a pain point. So as we get into that, that's really a great start. So, if agents are wondering, like, how do I get in this conversation, or because I have a fear of I'm going to get objections or whatever it is, right there is the best place to start as far as I'm concerned, because you're already talking about their benefits. It's just easier to ask questions.
Well, I would say that by and large, the very premise of insurance is the idea or the concept of risk management, right?
Right.
And then you take into account human behavior and the thousands of decisions that we make every day that dictate what our appetite for risk is. Do I cross the street? Do I not cross the street? Do I speed? Do I not speed? So I would say that people probably are thinking about it, but we're so active today with all the information that we have that we probably just dismiss it. I would tell you that, you listen to the radio, you watch television, you see commercials about insurance, you see commercials about ancillary products, and you think for a minute, man, that might be something I need, and then you're immediately on to the next ad or whatnot. Mm-hmm. But at some point, the agents need to understand that, and they need to be able to sit down and bring that back up in front of their client, to your point, and do so with a little bit more detail and a little bit more intimacy as far as maybe what their family history is, or really what their expectations or fears are of what life has in store for them going forward. I think as a younger person, you likely will just dismiss that I have time. And as we all know, whether it's in the financial world or in the insurance world or a combination of both, that compounding never stops. And then you wake up one day and you're in your 50s and you think, why didn't I take that particular life policy out, or why didn't I take out that cancer policy when I could have at a much cheaper rate?
Or why did I take the wrong one?
Yes, for the time. That's right.
I thought it just made me think about a policy that I had a client. He took a 20-year policy when he was like 23 years old. Mm-hmm. Well, guess what happens when he's 43? So in this last couple of weeks, we've been talking about that very thing. Whether it's ancillary or life or annuities or whatever it is. I mean, our job and duty is to educate people on the things that we have.
That's right. That's right. I mean, as a young man, do you really think about the consequences of having a life insurance policy? No. But then as you become a husband and a father and you start to consider, what if I'm not here tomorrow? Then
right.
All that starts to add up on you, and who would take care of people you leave behind, or what are you leaving them behind?
Yeah.
And what does that say about you?
Exactly.
Yeah.
And so, as we get into this conversation, I think, probably let's start out with the one question I wanted to ask you, because, you've been visiting carriers and around a lot of these carriers, this time of the year. Mm-hmm. I've been privy to a few of the carrier meetings here recently, and there seems to be some themes that go along across the board with all the carriers. Like, what are you seeing, in this landscape that we're moving into?
Well, I think we're getting into a realm of questions of affordability as we continue to see inflation affect medical procedures and just overall the medical community. And are the things that we have in place growing fast enough to cover those expenses? And in a lot of cases, the answer is no. So the idea to have supplemental insurance alongside of what your major medical might be or your Medicare product, that makes a lot of sense in today's environment. In the original Medicare, you were only responsible for 20%. Now, given the fact that people didn't make a whole lot of money back then, 20% was still a lot, but it sounds better than 80. But then nobody sat down with you and said, well, what if you had open heart surgery tomorrow?
Right.
Could you cover that 20%? When if you were to ask that question today, you're likely looking well into seven figures, right, to handle a procedure like that. So the ancillary products have come to the forefront of we need to have some additional help there in case these things that happen to us unexpectedly.
And I think we're seeing that across the board with our competition as well. If I'm an agent, and there's going to be other agents out here, those agents are going to diversify. So, like, if I'm an agent and I'm thinking I've just been selling ACA and this is the lane I'm in, or if I'm just selling Medicare Advantage plans and this is the lane I'm in, I mean, I feel like with what's happening now, we've got to diversify. If you want to stay in business, I think you have to think about diversification.
Yeah, I think as an independent agent, you can probably look at your portfolio where your income comes from, much like an investor. And I don't think there's ever been anyone who would give you financial advice to tell you to put every retirement dollar into one single account or one type of retirement vehicle, right? You would be looking at a number of different things. So same with an insurance agent, I would say, take into account the different lines that you can write, that you're comfortable. look at how those lines maybe will feed the other lines. If you write under 65, then at some point that's going to turn into a Medicare sale for you. At least you hope it would.
Yeah.
And vice versa. If you've got a Medicare book of business, those people have children. If you do a good job for them, then they're likely going to ask you, hey, can you help my kids and help my grandkids? So it just kind of feeds itself to the point where you'll lose the need to create leads or opportunities for yourself. You'll get inundated with referrals, and then you're off and running in this business.
So you brought up about financial planning and picking the right policies and doing this stuff when you're young, so you don't have to stress out about it when you turn 50. And you're right. I mean, you blink and you're 50, and and anybody that's over 50 will attest to that, obviously. So I ask myself every day how I got to
we got here sitting in this chair today. Yeah.
But it comes up with, like, as one of the things I like to do is I like to sprinkle some questions in that agents can be asking their clients throughout this process. So when you're talking about financial plans, and if I'm let's say I'm in my 30s and I'm really starting to have those conversations about my 401k and my financial plan.
Mm-hmm.
Do you think at any point in time up to the age of you retire, do you think people really start asking themselves, how much am I going to have to pay in medical costs after I retire? That's maybe another question that we can kind of throw into the fold, because and we're saying the same thing. I'm not saying we're saying anything like, ancillary products cover your out-of-pocket cost. Pays you cash if you get hurt, sick, and you can't, can't go to work, or you can't, afford your co-payments and deductibles. But I feel like we need to start asking a little bit differently and making people think and let that resonate with people about, what they're going through on a daily basis, much like we do in that summary. So my question, my thoughts really go to, like, when you were, I'll ask you, when you were doing your financial plan over the last 10 years, let's just say, have you sat with your financial planner? Have you had any conversations with your spouse about, hey, what happens when I turn 65 and I'm probably, health issues start to come up a little bit more, after age 65, and as we get into that conversation?
Good question. I think probably in a normal, if there is such a thing, relationship, there's usually one person that's far more worried about the future than the other. And the other one's more about living for the moment or today. So there's got to be a happy medium, and that's usually where you do need a mediator of some sort. So whether that's a financial planner or your insurance agent to kind of help you walk through that. For those people that are joining us today that are maybe looking at Messer Financial Group and considering whether or not to join us, I would tell you that we have jumped light years ahead by bringing in our life and annuity division, because it's given us a whole nother realm of being able to help agents work on the things that I think their clients are going to need going forward.
Yep.
So now we can talk about your health insurance. We can talk about that. We can layer in the life insurance and the annuities, and then we can add the ancillaries in as well. So they should be able to provide a full umbrella of coverage for every client, or meet every need as they sit in that home if they're willing to ask the right questions.
Yeah, and I think we're just at that point. You're helping. We're helping agents. Agents are helping their clients have better conversations around that to get into those conversations. For an example, I might ask, like, if I were talking to you about whether it's an ACA plan or you're getting into Medicare, I might ask you, when you were doing your financial plan, did you set aside the thought of how much money you're going to need after retirement? I got a statistic.
Go ahead.
That you and I have discussed here, and I just want to read it to everybody as we go forward. But it talks about, there's a 65-year-old man enrolled in a Medigap plan with average premiums. He will need to save over $120,000 to have a 50% chance of being able to cover his premiums and out-of-pocket costs, including prescriptions, after retirement. It says a woman the same age will need to have saved $146,000. That means, I can promise you that is not something that is in a lot of people's financial plans.
Yes.
I've sat with our guy, several times, and I can promise you not one time has he ever mentioned, hey, this is the income you're going to need, but it's all based on what I'm currently spending, or my monthly allowance, or my budget, or what my bills are right now. We're not talking about, once I turn 65, if I were to go through a health event, how much that's actually going to cost me out of pocket.
Yeah.
So this is where I think we get into, this is where we can have better conversations with our clients. This is where we can open up more conversations and that broad engagement, if you will.
Yeah, I think again, it goes back to just the idea of how many decisions you make or what you become aware of on any given day, and then you quickly decide to dismiss that or I'll address it later. You know, the world's worst statement is I'll get to that tomorrow, right? Because the tomorrows are continual until there's no more. So again, for people, it is a kind of a shock factor to think, well, is Social Security going to be solvent by the time I am 65 or 67, whenever you qualify? And to your point, to have $250,000 set aside just for medical expenses, it may or may not happen. There's a lot of anxiety there. So you can remove a lot of that anxiety by doing something on a fixed cost basis now and putting that in play. And I think that's where the agent can help their clients.
Yeah, and it's not like you got to, you're going to be paying, to this example, $120,000 in your first year of retirement or anything like that. But what they do is they're looking at the cost overall, over a 10 to 15 year period.
Yeah,
and people are living longer these days. So I mean, people are living into their 80s and even 90s. So I mean, once you retire, you may still have 30 more years, 35 more
That's
years.
Right. I don't think originally that a lot of these programs considered the impact that both the pharmaceutical and medical industry would have on how long we're going to live. I think it was, if I can get to 65 and maybe make it to 70, that would be great. And the system probably wouldn't have any issue, but it's pretty stressed right now. So again, it's going to be up to the individual to figure out what quality of life they want and to handle that as quickly as possible to put that in motion, their plan.
Right. Some of the carriers that we have, we have several carriers that, we can offer agents, and they're all good. They're all going to, they've been vetted by us. So it's not like we're going to do business with some B-rated company that's not going to pay their claims.
Correct.
So they're all going to pay their claims. They're all going to offer different types of benefits. And, we don't have one in particular that's better than the other one. Some of them have different benefits than others. What advice would you give to agents that are kind of moving into this space as far as getting licensed with carriers? I
think you need to do, well, in the beginning, I think it's good to have a nice blend of carriers that you may consider working with, and that's where you want to talk to one of the marketers in here, some of the more experienced staff members as well, and talk about what you most often run up on. And then as far as when they're with the client, you need to do as thorough as possible needs analysis, and then go back and look at who their core carriers are and which one seems to check off the most boxes for that. Because carriers aren't really any different than individuals. The actuaries make the decisions on what the plans are and what they're going to focus on. So carrier A may focus a little bit more on this type of benefit, where B and C may look at another benefit because they place more value there.
Yeah.
So you really got to do your homework, both before and after your visit with your client.
Yeah, and some agents kind of fall into that space where they just like this one carrier, and this is the one. It's the ease of use. They're familiar with it.
Yep.
They know the benefits well.
Yep.
And there's nothing wrong with that.
Nope.
I think having a couple other options open for certain types of policies. For instance, hospital indemnity. I mean, that's the one that gets talked about probably the most these days, and it's because that's the policy that gets paired with an ACA plan or an MA plan the best. There's probably not one better than the other ones, but if you're just talking about covering hard cost, for co-payments and deductibles and being in the hospital, that hospital indemnity is the best option for that.
Yeah.
We have several carriers for that, and we got, even with the hospital indemnity carriers, we have you can go into their portal and you can match the benefit with what their out-of-pocket costs are. Like if, let's say, I got an ambulance benefit of $300 on my MA plan, I can match that over here and I can build that plan out. So, we got carriers that help pay for prescription cost, and, there's lots of riders that you can add to those hospital indemnity plans. So, I
think you got to pay attention too. I think when I first got to Messer, there were only one or two carriers, maybe even just one, that would acknowledge observation versus admittance to the hospital. And that was some of the fine print that people didn't realize that you needed to have activated for your policy to kick in so that you would qualify for the benefits that you're paying for. So agents have to be aware of exactly what the qualifications are when they go to write that policy.
And then you get into, we got a lot of different types of plans these days, especially one in particular is the short-term nursing and the home health care plan. That seems to be a really popular plan these days. And it's really it's just a short-term version of a long-term care plan. Long-term care came out years ago.
Yep.
And when it came out, it, went off like gangbusters. Everybody, especially down in Florida, everybody wanted to sell it, and a lot of carriers jumped into that market. What we see now is carriers pulling out of that market. Those policies are very expensive these days. There's a lot of underwriting when it comes to those plans. So, the substitute to that are these short-term nursing care plans, these home health care plans, and it's through the same carriers that have the hospital indemnity plans. But they fit into that mold as well, because we are seeing where, if you go to the hospital, like especially if you turn 65 and you're on some MA plan and you go into the hospital, if you need any sort of care after that, you're either going to go to a skilled nursing facility to get some rehab, or you're going to get home care.
Yeah.
The cost on top of that, even let's say your MA plan pays up to the first 120 days. What happens after that? I mean, you're talking about sometimes $200 to $250 a day in co-payments.
Yeah.
If you add up, if I spend 60 days in a skilled nursing facility, the first 20 is taken care of, but after that, I'm going to have to come up with $8,000 to $9,000 to cover that. So, as we go through the questions that we got to be asking our client, those are some points that we have to start filtering in as asking questions to our clients as, have you planned on these types of charges? Have you thought about, what happens if you go into a nursing facility, or, just asking them, what would you rather get? What would you rather have? Go to a skilled nursing facility or get home care? And most people are going to say home care. So, but how are we going to pay for that?
Yeah.
Those charges are $200 a day, all day long.
Yeah. I think our industry's kind of made a shift to that. I think people, again, you can correct me, but I think people have done a little bit better in terms of recovery. Being at home, they seem to be more comfortable and enjoy being there versus a facility that's a little more cold and sterile, if you will. So, and not knocking those facilities, but it just seems to be that people, by and large, especially as we age, we like to be where we're most comfortable, and that's typically at home.
Yep. And that's really more of a an older as you get up in age, that policy really applies to people 45 to 50 and over.
Yes.
As you're talking about that, so
yeah.
Probably wouldn't be talking to a 20-year-old about that particular plan, because
no, but I would say
like they're crazy.
I would say that the relevance of that is that for whatever reason we seem to be dealing, and again, this is probably kudos to the medical industry, but there's a number of illnesses now that we didn't see before that have a longer recovery time or a longer period where you're going to deal with that before you pass away in a lot of cases. So how do you handle that extra burden of costs on yourself and your family? What are you going to leave when your time is done is really the question that you've got to cope with.
Yeah, because, certain states go back a certain amount of years if you're trying to, move assets to your kids and whatnot.
The look-back periods are pretty rough.
That look-back period is, they're going to get that money. So, there's really no money or legacy that you leave your family that's not going to get, taken away if you don't have something to cover those things.
Yes.
You're not going to go into a nursing facility for free.
That's right.
They're not in the business of doing that.
No, they're going to take a look at your assets and see how you can pay for it before they have to pay what they owe. Yeah.
And then, other plans, the accident plan kind of hits home for me with, kind of all ages and all areas of the country.
Yeah.
Just because you have no idea when you're going to get into an accident.
Well, it's almost summertime, right? Yep. So the kids are about to get out of school. We always make a joke about if you have children that are going to play a sport and you don't have an accident plan, you're just biding your time until you get a sprained ankle or a broken arm or some activity. So, and kids are accident prone. And then as you get older, you're, a little bit more prone to trip and fall too. So accident plans are a good idea to look at.
Well, for seniors, it's statistic wise, it's the number one reason for accidents is a fall. And, as you get older, it gets, things happen and you lose your balance and you fall and you hit something wrong and, that you could be out for weeks, months,
Yep.
even longer. So it affects people more, and especially when you talk about the juvenile. I mean, we have plans that with certain carriers that offer just juvenile policies.
Mm-hmm.
And we got coworkers here that have just purchased those juvenile plans because our kids are playing football.
Yeah.
And there's really no plan on the football field that's going to cover them if
or they're going to camp. It doesn't really matter going to the pool. It just doesn't matter.
Yeah.
Kids are going to do things and they don't understand the risk involved with some of the choices that they make, swinging from a tree upside down, playing with their friends, and you're going to get hurt at some point. Yeah. So hopefully not too bad, but.
Well, I got twin grandbabies now, so and I'm watching them crawl around and starting to walk, and they on a daily basis they bonk their head or they're falling down, or one rolled down the slide the other day, and one of them little play slides, and that looked like it was fun, but you're going to take them to the emergency room.
Yeah,
I didn't get out of I had 2 kids, and I promise you we went several times, and it was just rollerblading down the sidewalk with their friends, or
all part
stuff
of
like
fun.
that. And then we also have critical illness and cancer coverages. Again, especially as you age, we all seem to become more susceptible to heart issues and dietary issues, and especially when it comes to cancer. It's just when you're dealing with something on that critical level, I think people don't realize how much it actually is going to cost them, not just their out-of-pocket costs associated with their health insurance, but just being out and having to go through those types of treatments. I can't tell you, I've heard millions of stories, and so has everybody here, about somebody being diagnosed with cancer or something, serious disease, and they don't have the treatment for that particular type of cancer, but down in Jacksonville, Florida at the Mayo Clinic, they do, or out in MD Anderson in Houston, they do. And if I have something like that, and they got a better cure rate in Houston, I don't care if I have to hitchhike. I'm going to Houston.
Yeah,
I want to go get the best care available. And again, as we go through these plans, it's really just finding the right questions to ask. So, just asking, what the history of somebody's
I think
family is.
You got to get to a point in the relationship with your client where you can have a real conversation. Yeah. If the numbers are accurate, and we're talking about cancer or one of these other awful things that we may end up with, the fact that you're just going to deny that it may not happen to you is not adequate coverage at some point. Plausible deniability is not something that is going to work. Science is science, and unfortunately disease is disease. So you have to think that at some point it's likely that if it's not me, which I would rather it be me than anybody else in my family, because I don't want to see them suffer, that it's likely that one of us is going to deal with something that's not a whole lot of fun at some point.
So it's really just asking the right question.
Yeah,
I mean,
it is.
As we're going through this, there's tons of different ancillary products, and it's just really asking the client the right questions, like tell me about your family dynamic. Do you have children? Tell
me about
away
your family history, and we can that kind of starts us down the road. Again, it goes back to that needs analysis.
Yeah.
Once I understand a little bit more about you, then I can start to think about what products are going to best fit for you and your family.
And so that process right there, what we're talking about, asking the right questions as we go, that takes away that crystal ball for us. We really don't need to try to work on our own, what I make a joke, ESPN.
Yeah, I like it.
As we go through this, you don't have that crystal ball where you're just guessing. Yeah. And what happens there is that opens you up to a lot of objections and rebuttals that you have to overcome. And I think when agents get to that point, there's this fear of not knowing what to say next. So we retract, we pull away, and we don't ask those questions. But it really is, as we're going through this process, it's just asking simple questions like, tell me about do you have a history of any chronic illnesses in your family? If you were to ask me that question, I'd be like, yeah, my dad had cancer, and my
got 2
everybody
heart
else
attacks
had
and kidney
heart
disease on this
and,
side.
So we're from the South, and we make vegetables unhealthy. So
right. We like food.
We're going to have some
good.
heart problems in
That's
my
right.
family.
Yeah.
And so as we go through this process, you're just learning how to ask the right questions, I feel like, is the best way to engage into these conversations. It's the best way to expand, your product portfolio and get out of that one lane that you're in. Just understanding how to ask the right questions will diversify you in so many ways, whether it's ancillary, whether it's life insurance, it all comes into play. And that really the theme of this last 3 weeks has just been this. It's been
let me say this. I think for an insurance agent, we're going to say insurance professional for just a second.
Okay.
There is no vocation where you don't need to practice your craft. Okay. So if I know that I'm going to have an appointment tomorrow, I think it would be well worth my time as an agent to maybe take a few minutes and go through some different scenarios in my head. Or if I'm a partner with somebody, that I can sit there and we kind of role play and talk through a conversation. That's one of the things that I think is important, that you have prepared yourself for different scenarios inside of that conversation. You may walk in and this individual has been waiting for somebody like you to show up. Mm-hmm. And almost everything you lay out in front of them, they're going to be willing to take a look at it and likely purchase it. And then there's other people that are going to deny that that's going to happen to them and their family. And what are the things that you're going to say to them to at least leave them thinking about it, so that they'll call you in a couple of days and go, hey, after thinking about it, or maybe it's because while I'm seeing you, if their wife or the husband is sitting there, then maybe I'm really selling to them or telling them about the product while I'm talking to you, because they're going to be the one that's going to benefit from that. And that's always been the difficult thing for me when we hear agents talk about how do I get into life insurance, is you're talking about selling something that individual may not really benefit from. Now, if you sell them something with some riders on there, like some long-term care benefits, that's great. But by and large, you're selling them that policy for peace of mind for the person sitting next to their left or to their right, or for their grandkids or their kids. So that's a little bit different mentality. And I think you have to prepare for that before you go into those conversations. And then over time, it'll just become second nature to you because of your experience. But for younger agents, you got to take some time and practice.
Yeah. And you know, when we're talking about ancillary, it's all about building the need. I mean, you're not going to collect these. You're not going to just show up and collect applications here.
Yeah.
I mean, you have to find that need for that person. Sometimes it's finding those pain points.
Mm-hmm.
You know, that's why we talk about going through that summary of benefit is a great way to start this conversation, because you're literally dealing with pain points right then.
Yes.
You know, you can ask this one question. It's kind of a universal question, but you know, how would this $300 ambulance ride affect you financially? Well, when you're talking to somebody over 65 and they're on a fixed income, it's going to affect them greatly.
Yes.
If you're talking to a family that's, you know, got both parents have jobs and they're dealing with daycare and they're, you know, juggling all the things that we juggle in a day, $300 is sometimes a lot of money. You know, was that statistic? You know, the majority of the people in America can't come up with $1,000.
Yeah. And most bankruptcies are caused by a medical experience. Yeah, it's a little bit about financial discipline too. So again, as an agent, you become almost a life coach for your clients, because you start talking about, did you go to XYZ coffee company today, and did you spend $6 to $10 on a coffee? And I'm sure that was a great enjoyment for you for about 20 or 30 minutes. But if I took that money and I put that towards something else, like a policy that we're talking about today, the benefit from that is going to far exceed that 30 minutes of pleasure that you got from that one cup of coffee or that donut or Danish, whatever it might have been that you spent that money on. So to have that discipline inside of yourself, and you can kind of pat yourself on the back and say, you know, most people aren't going to do what I just did today. I made a great choice.
Right. The other part of this, you know, moving away from the actual plans themselves, you know, the other part of this is about the agent themselves, about their business and how to grow their business. You know, all of this is one thing I've heard since I started in the insurance business in the 90s. It's that if I have more than one policy with a client, they're more than likely they're going to more than likely stick with me and be sticky to me, and they're not going to leave me. Mm-hmm. Even if I do lose the MA plan, or if I do lose the ACA plan and they write it with somebody else, chances are I'm going to keep those ancillary plans with me, so I still keep my client.
Yeah.
If you look at it from a business perspective, that's where you have to be. I mean, if you want to, we're not all here to just write business every day and then keep doing the same thing till we're dead.
Yeah.
Right. We want to build renewals. We want to build our business up, and this is the best way to do that. And then what we found. I mean, would you agree with that statement? I know there's other opportunities.
Well, I've been at Messer for quite some time, and what I found in the most successful agents is that they actually do care very deeply about the people that they work with. And at the end of the day, other than the person that individual is spending their life with or their family members, they know far more about that person than pretty much anybody else, whether that be their doctor, their banker, because you've talked about all that with them at some point. So after a while, you're going to have a pretty good idea of what makes Jeff or Brandon tick and what Jeff and Brandon need to do to make themselves and their families happy. So it's a very intimate business. I think people, we were talking about that earlier today, that people think that AI is somehow going to replace the ability to do what you and I are doing today with everybody out watching this. And it's not there. At least it's not, I don't think it'll be there in our lifetime. And I hope it's not there in my children's lifetime, because the ability for humans to engage with each other and have conversation is really what this is all about as we go around on this marble.
I think now that you said that, I just want to point something out to just as a service announcement, if you will. If you're getting information and stats and things off of AI, I would definitely make sure you're fact checking, because you got to think AI is pulling from all different years, all different sources, and it's combining this information in, just writing a lot of this content out. I'll do some fact checking with AI, but I've found that, even then it gives me wrong information.
Yeah.
So I would always recommend everybody going to either CMS or, the marketplace.
Yeah, best fact checking I do every day inside the facility is go talk to about 3 or 4 different people. Yeah. And vice versa. So we're always making sure that we're trying to provide the right information at the right time inside the building.
Yeah. So if you're using it, if you're citing information for your client, make sure you're fact checking that if you're getting it from AI.
Yeah, I think AI is wonderful. I think it has a great purpose for society, but to replace, again, the human interaction that's needed in this business, I hope that's not the case.
Mm-hmm. Here's a stat as far as retention goes, and I'm just going to read this. Now, some stats show that 25 to 35% lift in. Some stats show that 25 to 35% of referrals are because of families see the agent as a full protection expert. So if you're just selling ACA plans, if you're just selling ACA plans and you got 8 appointments deep, I realize that time is crucial to you. You're trying to jump from one to the next. You got back-to-back appointments. But just remember in the back of your mind that, the more you jump from those appointments and you don't address things like what we're talking about today, number one, you run the risk of the next agent doing that very thing and becoming that full protection guide for your client. And the other part of this is really it's valuable for your client. You're providing value. It is peace of mind. I know it sounds like a cliche sometimes when we say peace of mind, but it genuinely is peace of mind.
Let's go back on that just a second. So as a sales professional, I think you've got to take a look at, if this is the first time I'm spending time with a client, first initial meeting, I should probably schedule quite a bit more time with that individual or that family that I'm going to go see, or they're going to come to the office to see me, because I'm going to want to work through that needs analysis. I'm going to want to make sure that I've got copious amounts of notes on these folks. And it's not necessarily, oh, they said they want this, but it's more of what's important to this individual, so that if I do have back-to-back appointments, again, I've got variances in time there so that I can take those notes and then go back and look and maybe put something together for that second visit with the decision maker and the family, because I may not know who that is, quite frankly, in that family.
Sure.
Right?
Yeah.
Who's going to facilitate the decision to say, yes, I'm going to commit to that and give you a check or ACH at some point. So you got to do a little bit of reading the room, and I think you need to give yourself adequate time to do that.
So you're saying schedule more time. It's a legitimate ask of agents.
Yeah.
If you're looking at money wise, if I'm just looking at commission, I kind of look at it like this. And we're talking about different subjects, all around this, but it's all about offering these additional policies. If I make, let's say, I'm just using an example, make the math easy. If I make $25 per member per month on selling an ACA plan, but then I add a dental, and then I add a hospital indemnity, and then I add an accident, that $25 a month turns into $50 and $60 a month.
Yeah.
So, if you look at it straight from that, you're maximizing your efforts with every single client from a business perspective.
Yes.
And you're getting more. How much would you have to go out and sell to make up that difference? Well, if I'm making $50 from one client rather than 25, then, that means I would have had to sell 2 clients to make the same amount of money.
That's right.
And I'm not providing that value. I'm not, making that that client sticky to me.
Mm-hmm.
So all the way around, if you look at offering ancillary or life insurance or anything like that, all the way around, it solidifies your relationship with that client, and it makes it more worthwhile on your part.
Yeah, and again, I think it's okay to in those meetings to not have the perfect answer, but to commit to finding the right answer for that client. And if you can do that, then you come back and you call on the resources here at Messer, and we'll do our best work to help you put that package together to go back to that client and meet the needs that they've asked for to be met.
And we've had a few questions come in. Some of them are one-offs.
All right. Great.
I'll get to maybe off the webinar here. But
all right. Well, let's try to answer a few of them. What do you got?
Well, why should agents treat ancillary insurance as essential and not optional? Because well, let's just use your major medical. I don't think there's one major medical plan that's completely inclusive. So there's always going to be gaps. Again, you've got carriers who are also in the business to make money, just like an agent is. And then you've got the actuaries that control the mechanisms inside the plan. So when you start to look at those, you're going to find areas that they chose to focus on and areas that maybe they didn't put quite the right amount, or it's not relative to what's happening in the world today. Like you mentioned, ambulatory transportation, or maybe it's air travel, whatever it is, there's likely something there that's lacking a little bit where these ancillary products can fill that gap, which is really what they were created to do. That was pretty good. That was well said. Make note of that. Thank you. I'm glad we got that. Thank you for that question, whoever that was. Yeah, I'm glad we got that on video. Checks in the mail. Yeah. What advice would you give a Medicare-only agent who wants to become more well-rounded? Talk to their existing clients. I think, in the Medicare world, you have the opportunity to read the room, if you will. You walk into a home, and again, this is from years of the experiences that agents have shared with me. You start to look at the pictures on the refrigerator, on the mantle. They want to tell you stories because you may be the only person they've talked to. Yes, they do. Yeah. A lot of coffee and donuts and cakes and everything, pies. But you can start to figure out what might be there in that home for you to look at as a potential client or potential policy that would have a good home there. And you just have the conversation. Again, we're just talking about that human interaction. Right. If I do right by you, excuse me, is there anybody that you know would benefit from the services that I provide? Well, I'm glad you brought that up. Talking about referrals is, is something that we all could do a better job of. And I'm not talking about during the initial sales appointment, right? We're going to do things compliantly, but over time, as I get to know those individuals, I think they become comfortable with me. They see the level of service that I'm going to provide, the resources that I've put into creating this file for them and the product portfolio. So they're going to be willing to say, hey, you should call this guy. He'll take good care of you, or this lady. They'll look out for you. They'll listen to what you have to say. So we're not selling on money in that situation. We're selling on value. We're creating value. Yeah, ultimately I'm selling myself. I think the best agents that we work with here at Messer, those guys and ladies are selling themselves first and foremost, and they just happen to have something that will fit the need of the client. But it's all about the interaction between that individual and the agent. One of the questions we also had was what's the difference between Messer as an FMO and anybody else as an FMO when it comes to offering ancillary products? My response to that was, number one, other FMOs might have the same carriers that we have. One thing that kind of makes me feel like we stand out a little bit more is that the value that we provide our agents in the form of education. I don't know if many people know this, but every morning here at Messer, we have an in-house sales, or not sales meeting, but an in-house training and educational meeting with marketers, producer support, other departments, and it's about a 45-minute training every morning, and we go through these very things. We talk about these very things. We talk about the subjects and the topics that are on brand for 2026 and moving forward. You and I just got out of a meeting talking about ACA and subsidies, and so we are we spend a lot of time educating ourselves and our team educating themselves on how to help that agent. our tagline is helping talented agents close more sales. And the
Yeah.
best way to do that, I think, is, making sure that we're educated from that perspective. But,
Yeah, I think basically it's the golden rule. If the roles were reversed, how would I want that person that I'm calling in
Yeah,
for some help
right.
today? How would I want them to talk to me? Are they concerned about my family and their well-care and knowing that I'm going to go see somebody or might be with that client, and that might make the difference between if I get a signature on a piece of paper today or not.
Yeah.
So we take that pretty seriously around here.
Well, we have, we have several carriers, just a few off the top of my head. We have GTL and Manhattan and Aflac Tier 1 and, of course, Aetna and Cigna and,
Yeah.
Humana. I think everybody's we got to start looking at the opportunities that are in front of us. We got to start helping our clients a little bit more and providing more value to our clients because, something you said this morning, ACA has been around for several years now.
Yeah,
and
it's hard to believe. 2010.
Yeah, but when it started, the max out of pocket wasn't over $10,000.
Yes.
It was much, much lower.
Yeah.
So the conversation, as to your point earlier, is, as we grow, these policies become more and more, more and more expensive. We're not able to meet some of these criteria, especially if you got a $10,000 max out of pocket and you got somebody making $40,000 and $50,000 a year. That's a quarter of their income in some situations.
There's a lot of conversation going on these days about what are we going to do with regards to how expensive it is to take care of ourselves. And I want to say just recently I heard that the medical industry complex in the United States would be the third largest income in the world, or GDP.
Oh, yeah.
Right. So that's just the United States inside of our own GDP, as we've got something that's grown like that. And part of that is of our own doing. And, the companies are built to be profitable, and that's what they want to do. And I understand that. But until we sit down as a collective group and figure out, what's reasonable, and not just what's legal, but what's right and reasonable, we're going to continue to have to figure out this thing going forward. So it's going to continue and evolve. And for as long as I've been at Messer, anytime that there's been a period of uncertainty, there has always come out on the other side an unbelievable opportunity. So I saw a number of agents that worked with, that I recruited early on in my career. They were able to make the transition from just being a one product agent to multiple products, and it has made an unbelievable impact in their lives, and it's helped the quality of life for their communities as well, because now they can address any need or question that their clients have. And they've kind of become pillars in the community, if you will,
Right.
as the go-to individual for getting some help.
That's the goal, right? I mean,
You would hope so.
Yeah,
You hope you're not just doing this just for the money. I mean, the agents can make a great living. There's no question about that, and have the freedom to be their own boss. But that takes a lot of discipline to make yourself get up and go to work every day.
I think most agents that, get into this business, I think a lot of them genuinely care about making sure they're doing the right thing and taking care of their clients. But, it goes back to, and I'll ask you this question before we close it out, what advice would you give agents moving forward in this landscape? My advice is to start learning how to have deeper conversations and learning how to ask better questions to your clients to elicit that type of thought, to build that need, to find those pain points. And it's sometimes it's not saying, hey, how are you going to offset these out-of-pocket costs? Sometimes it's saying, hey, did you plan in retirement? Did you plan for this?
Yeah.
Are you thinking this way? I mean, how would these co-payments affect you financially or affect your family financially? Do you have savings put aside to take care of these things? And most of the time you're going to get a no to those things, and which opens up the conversation. But, I'll ask you the same question. What are your thoughts on that?
Again, I go back to, for an agent, it's about preparation. You are a professional, both as an insurance agent and as a salesperson. So it would behoove you to hone your craft. I think if we were to take a poll like they're asking us these questions, if we were to ask a question, how many sales books have you read in the last 6 months? When's the last time you read a medical journal? I'm amazed at the breadth of knowledge that Medicare agents have when it comes to what drugs do what because they've spent so much time looking up formularies and doctors and whatnot.
Yep.
So again, it's just about what you know, and the more you study to be a true professional at this, you can shorten your learning curve by having the discipline to prepare every day. I think it's great that you're your own boss, but again, that takes a level of discipline and commitment that a lot of people struggle with, and that's probably why they aren't as good as they could be. And that's one of the things that we try to talk about at Messer when we do recruit agents and bring agents on is what do you want? Tell me about where you are today. Tell me about where you want to be, and then we can kind of work our way into a plan about how you get there. And I think ancillary and life are two of those ways to get there.
Absolutely. And, we went through the RSSA thing. I don't know if you got to see that.
Yeah, great
RSSA,
certification.
But, after digging into that and going through that, I can promise you if I were to jump out into the field, it would be one of the first things that I do.
Absolutely.
Getting that certification.
Absolutely. But it's really, again, RSSA is just asking the right questions about where you are and where you want to be, and are you aware of what your options are?
Yeah.
Right.
I want to be into those conversations. I want to open up more opportunity for myself.
Yeah.
If I'm an agent out in the field.
Yeah.
So, as we close this out, really, the advice that, we just discussed was really, learning how to ask the right questions and educating yourself and spending some time educating yourself moving forward, because it's going to take that. It's going to take some extra on the agent's part, and I kind of go back to asking the agent questions, and these are rhetorical. So, but just, ask yourself some hard questions. Have I went to my book of business and told everybody in my book of business about what I do? Mm-hmm. That's the first thing that you need to ask yourself. Have I actually done that? Have I prepared myself like what you're talking about, educated and had the discipline to prepare to get up the next day and hit a certain amount of clients in my book of business, and just telling them what I do?
Yeah, we're not even the 80-20 anymore. I think we're probably in the 95-5 at that point.
You think?
Yeah, I do.
Right.
I do. Those are the folks that join us every year at Chairman's Council and the Top Producer Summit. Yeah, so you're getting into some rarefied air there when you're talking about people that prepare that way.
Yeah. But even there, I mean,
they too have not maximized.
Yeah.
I've yet to meet an individual that has 100% maximized what they do. Right? We talk about that all the time. It's not comparing yourself to the industry standard. It's comparing yourself to what you could achieve. Like, let's find out what your 100% is and how close we can get to that. And then I think we'll have enough fun and you'll have enough success along the way that we'll say, man, that was a great decision I made.
Now we're getting into Michael Jordan conversations.
That's right.
Yeah.
That's right. Well, we are in North Carolina, so
exactly.
It makes sense. Yeah. Go be the GOAT.
Yeah. And so, as you're having these conversations, just ask yourself, am I really going after my book of business? Have I educated myself? Have I pulled up some of these webinars that we've done in the past? Am I going out and looking around the internet and finding different ways to approach my clients? And have I written down some questions that I can be asking, some poignant questions and some thought-provoking questions that will help that person identify some pain points and you will build that need with these ancillary plans.
Yeah.
That's what it takes.
You can do that too through your yearly marketing as you continue to touch base with your clients. To your point, let them know that you're out. Maybe you've gotten a new certification. Just wanted to let you guys know that there's some new life products out. If you have an interest, contact me.
Yeah.
Spend a little bit of time sending out postcards, sending them email, make a few phone calls, send a birthday card out, do all the little things.
Yeah. It's
and
those
little things add up.
Yeah.
Yeah. Those are your fundamentals.
That's, I mean, every CC agent I've ever talked to, they talk about that little thing. It's those little birthday cards. It's those little, hey, how you doing?
Yeah.
How's your mama conversations?
That's right. I mean, you hear somebody has a grandbaby or a baby, take 5 minutes out of your day to call them, leave a voicemail, send a postcard, like you said.
And on top of that, every month there's some sort of, right now we're talking about April's National Financial Literacy Month.
Every month there's something.
But every month there's something else.
Yeah, every day it seems like, right?
Yeah,
we put those on the board here in the office.
Dental Month and Vision Month, and you can attach those, and those are ancillary products. Speaking of the dental and vision and hearing policies, I feel like we overlook those a lot because, well, we don't make that much commission on them. And do you feel like that's the biggest reason, or is it just?
Good question. You kind of get the same question a lot of times with agents say, I don't want to mess with PDPs.
Right.
I'd just rather let the member do that themselves, and that drives me crazy when I hear an agent say that, because we've just spent a good amount of time here talking about don't leave anything on the table.
Right.
Because whatever that commission is, whether it's a new or a renewal, those things add up. That's why you got into this business to begin with. So I would always address any need, because I wouldn't want another agent to have an opportunity to talk to my client. Yeah. And I think dental, vision, and hearing is important, especially on the under 65 side. It's probably more addressed on senior products by and large, but on under 65 products, absolutely. You've got to have that conversation. That's just one more question in your needs analysis.
Yeah. I mean, dental health can affect other parts of health issues.
Evidently your teeth and your heart talk every day,
Yeah,
I guess, regardless of stomach getting in the way.
Yeah.
But yeah.
And as we get older, our hearing sometimes fades, our vision sometimes fades.
Yes.
So, it's a legitimate conversation. We got to start asking.
It is.
And
in the United States, we're probably not very good at preemptive care.
Yeah.
So when you're looking at these benefits, make sure you use the opportunities to go see these folks before you have a problem.
Right.
Encourage your clients to use the benefits inside the policy. And that's also a great way to make sure that those renewals stay up, because once they start to do that, they'll want to keep that thing in place, because if they find something, then they're going to be like, man, Brandon, he may have saved my life.
Right.
He really may have saved my life. And what a cool thing.
I was about to say, I can tell you the first cancer claim that I ever helped somebody with and paid, it probably made the biggest impact about being in this business.
Mm-hmm.
Because I got in the business when I was young.
Yeah.
And it was all about, the sales pitch to get in this business was how much money I could make. And, after 10 years, you don't have to work.
Right.
And, you can buy all the fancy cars and live in the big houses. And there was this big, this big bright light that I was, thinking about and chasing, and it all had to do with more like money, in my career. And then, at that first year, I started selling policies, and then the next thing I know, I'll help somebody with a claim, and I was like, oh, okay, this is much bigger than me just thinking about how much money I'm going to make these days. And it really, I started having a better understanding of what I was actually doing. And it made me better at having the conversation, because I didn't fear that unknown. I didn't fear that anymore. I felt like I was there for a reason. I was there to actually help somebody and offer somebody, and a lot of us get in that situation, especially in sales situations, where when we're talking to somebody and you look uninterested, or you're, distracted and looking at your phone and stuff. And I'm sitting here like, God, this person might not be interested, but it just means I haven't found that right pain point.
Yeah.
Now, to me, that's how I see it. I don't feel like I'm doing anything wrong. I feel like, I'm just not doing a better job of communicating with you.
Mm-hmm.
So that's when we talk about finding the right questions. It's really about finding those pain points and connecting with somebody and engaging somebody.
Yeah. I think agents don't need to make light of what they do.
Sure.
I think oftentimes insurance agents are kind of the butt of jokes, but it's only because we allow it to take place. I think what they can do for somebody individually or their family is unbelievably impactful. And they should take great pride in that. They should look people straight in the eye and tell them what they do. I'm an independent insurance agent. And if you have a question, I can answer it. And if I don't have the answer, I'll go get the answer and I'll come back and help you with what you're looking for. Not many people can say that. I mean, outside of attorneys or medical professionals, how many people can impact somebody else's life the way you can as an agent? So embrace that. It's a serious responsibility.
I have delivered a claim check back when we could deliver claim checks, but I delivered a claim check to a school teacher, and her husband had been going through cancer, and he had, eventually passed away. And, she totally forgot she had the policy.
Mm-hmm.
So when we come back to do the enrollment the next year, she was reminded of that, and we quickly helped her get that claim paid. And I can tell you right now, that was probably the most impactful claim, because this lady went nuts.
Yeah.
She went ballistic. I mean, she couldn't believe it. She was so happy. She was jumping, hugging me, and, just breakdown.
Yeah.
Total breakdown.
It's one of the best parts in my mind of when we get together, the Top Producer Summit or even the Chairman's Council, when we meet, is that you start to hear these stories. And it's not about, look at this commission check that I made. I mean, we do talk about that, and that's exciting if you write a big annuity or a big life case. But But for them to talk about, I changed somebody's life, or I put something in position so that when this individual passes, that their grandchildren are going to be able to go to college, they're going to be able to start their own business, or I'm leaving my insurance business to my grandchildren or my children, that's pretty cool. And they're very appreciative of the time and effort that the staff here puts into that.
I don't remember the big checks that I got. I remember the stories.
The
I remember
story, the person.
I remember helping people with claims.
Yeah.
You know, that when I, eventually retire and I sit around and, some old guy telling his stories all day long to people that don't want to listen.
Yeah.
Those are the things that I'm going to talk about.
Yeah. I hope so. I hope we remember those things.
I'm not going
right?
to talk about, hey, I got a $5,000 commission check on this one policy.
Yeah.
I'm going to remember that lady that, we literally made it to where she didn't have to file bankruptcy. We literally made it where she didn't have to, sell everything she owns because she didn't have enough money to pay for some of those.
So think about the level of connection with that individual, right? How could they not refer you to somebody else?
Yep.
That's the kind of relationships you want to create with your clients. How could they not?
And you want to talk about retention?
Yes.
We've had that group for 25 years.
Yeah.
That's been a group that has been with the same agency for 25 years.
Mm-hmm.
And it's because of that. It's because of how they step in and help. It's about the personal relationships they have. It's never about what policy pays more. It's never about who's going to make the most commission. It's never about we're not doing comparisons all day long. It's about those are good policies, but we have this team of people behind us that's going to help us navigate all this.
Okay.
So that's the biggest part.
You got any more questions?
Nope, that's all the questions I have today.
Okay.
Unless you got anything you want to add.
No, I just appreciate the opportunity to join you today. I know you're pretty busy, and I thank you for that. And just want to encourage the agents that attended today to go find the best version of themselves.
Yeah,
and let's see where that leads us.
Call your marketer or call somebody at Messer if you have questions about this. Please reach out because all of our folks here are well equipped to have these conversations with you. Can help you have better conversations with your clients, and that's really what this is all about. It's about being diverse. It's about offering other products to your clients. About letting them know what you do. Going after your book of business, especially your book of business, because you don't want to lose what you worked so hard for.
That's right.
And that's really what this last 3 weeks have been about. Is about opening yourself up and diversifying yourself to think about other ways that you can help your clients and help your business at the same time.
Sounds good.
All right.
All right.
Well, thank you for being here. I appreciate you, and thank you for everybody for being on the webinar today. Again, if you have any questions, you can refer to your agent portal and go back and look at some of these webinars that we have. We have a lot of great information, especially over the last several months. We've added a lot of information to the agent portal. So if you want to do some self-education, it's a great place to start. And again, follow us on social media. But other than that, that concludes our webinar for today. And hope you have a great week.
Thank you, guys.
Here today we have Sophia. Sophia, thank you for being with us today.
Thank you.
Thank you for jumping in and helping with this. I think you're probably the best person here to go through some of these questions because today we're going to be discussing, and it's part of a series in May that we're doing. So we're gonna it's really about Messer, about what all the value props that Messer has, all the benefits that Messer has to the agents and the agencies that we have out here. So I'm kind of excited to start getting into this and going through all the features. This week we're going to be talking about just an overview of everything that Messer has. It's important for especially new agents coming in. They don't have a lot of information sometimes. So it's important for us to go through this again. I know y'all go through it when you bring people on and you onboard people.
Yeah.
But it's like drinking from a fire hose.
Oh, absolutely.
And so there's a lot of information that we take on all at one time. So it's good to kind of go back through these programs that we have, all the benefits that we have.
Yep.
And so I'm excited about
going through this with you today.
Oh, thank you, Brandon. I'm
yeah.
excited. Thank you for inviting me to come over. Hello to all of you. It's a pleasure to be back here and doing this, I guess, more of a podcast style with Brandon Adams. And for those who don't know me, if you're new here, my name is Sophia Xavier, and I'm the Managing Marketing Director here at Messer. And it's a pleasure to be here. I'm really excited. Like to Brandon's point, one of the things that we do with not myself only, but our marketers and our marketing team is we help you guys get the contracts you need to support your business and your clients. And we also go over the programs and benefits, how to qualify for them, what the benefit are. And I think it's funny that you say, because really sometimes when we're talking to new agents and we understand there's so many options out there. And at times they want to just interview us and find out but what is the difference that Messer brings to the table. And it's funny because we want to answer everything, but if you don't tell us about you and what you do and what is important to you, we can't provide the information that's important to you, because
Right.
we do so much. We have so many different departments and so many different resources that are for all different markets in the insurance industry, so that whenever somebody's like, but tell me about Messer, I'm like, well, okay,
Where do we start?
where do we start? Yeah, exactly.
I get that. And I don't want anybody to think that this is just about new agents, especially if you're an existing agency and you're recruiting and you're trying to build a downline for yourself. These are important. This is important information that you need to have if you're going to recruit and attract and retain talented agents.
Absolutely.
So
yeah.
It's a big part of it.
Well said. A lot of our top agencies have taken advantage of these products and the programs and used it to their advantage in recruiting and finding good agents to be part of their business. That's for sure.
Well, today this is gonna be a question and answer format.
Okay.
And so I get questions from questions from the field and the agents and the agencies that we have.
Yep.
So these are not just things that we make up. These are questions that come in on a daily basis, and especially from your folks.
Oh, yeah.
On the marketing team, it's you guys kind of hear front of the line, hear it all day long. So we just compile these questions, and we want to break them down a little bit. I'm going to ask Sophia questions. She's going to ask me questions, and I'll probably chime in on stuff, and you do the same. But so let's get started. Really one of the first questions that we have is always just like you just ask. Can you start by telling me what sets Messer apart from other FMOs?
Yeah. I think obviously, like we said, there are so many things that we do, and typically we like to try to target, ask the agent what is it that their primary role or what they're trying to accomplish when they find a partner or looking for a new partner or just exploring partnerships in general. But I think one of the things that stand Messer apart is that we are one of the last standing truly independent FMOs or NMOs, in the country. And that says a lot, because that brings value to the agents, because if they're, with Messer and we're typically, connected with a carrier, based on our relationships, it just brings them, it's that whole tagline that we have is do you want to be, one of many or the one that matters? And one of the things I've learned recently, I've known that, when you're with Messer, you're vested from day one. And you own your book of business from day one. And what I thought it was interesting is that I'm so used to saying that, right, Brandon? We know this. If Messer has always done this, but as I'm going and meeting agents out there that are not with Messer or have never heard of us recently in recent conferences, the vesting clause from day one is actually a big deal, obviously, but it's not common. A lot of our competitors, a lot of the options out there don't offer vesting from day one.
They do not.
They don't. And so that's one of the things I was like, I have to make sure I'm always saying that, because at times, yes, you can be independent and yes, you can be vested, but if you're not vested from day one, sometimes it means that you have to wait 2 years, 3 years, 5 years until you're fully vested to actually make a change. And that's not the case with us. Obviously, the legacy program is another
legacy
one.
Program is probably that's a big separator.
Yeah. There's again, I think it's interesting how to see in our industry. When we launched the legacy, soon after we started, we actually had people when we would talk to agents, they're like, oh, my current, FMO does that. I was like, are you sure though? Did they give you a paper that says it's a document that really is a legacy? And later they will look into it and it wasn't an actual thing, or they never got actual paper documents saying it was. And then fast forward now, some out there offer a type of legacy program so that they could say they offer something, but it's not 100%
Right.
of the commissions to your unlicensed loved ones, right? Beneficiaries. So, and then lastly, I think it'll be the technology.
Oh yeah, absolutely.
Yeah. Yeah. So, I mean, my MFG in itself are proprietary quoting and enrolling tool. And then my MFG data, which is something we just recently, you're about to launch it mostly, right?
Yeah, we're going to be launching it in the MyMFG data conversation is going to come, I think, in 2 weeks. We're going to do some webinars starting to get everybody familiar with what that is, and it's going to be a huge reporting and benefit to the agent, to all agents, whether you're an agency or an agent. It's knowing where you are in this business is going to change a lot for a lot of people. Knowing exactly what your book of business looks like. It's going to be huge. So,
the full breakdown. You want to know your persistency. You want to know where is your how is your book going, and what are your agents doing, and vice versa, how you can actually guide them through what's the opportunity, the heat maps. Because I know that a lot of this information, we've had it for years. We have this, right? But agents would have to get access to that. They would have to call us. And that was one of the benefits too for Messer. We've always had this information. But the fact that most agents will really just get that by really just calling, now we're just giving that access to them at their convenience, which is one of the things that we love to do. I mean, if anything, we want to make the agent, do all the things that they need to do without having to depend on, calling somebody or doing the things they are able to do it on their own. Obviously, we want them to call always. But,
Sure.
Well,
from an agent's perspective, I looked at it like if I can see my entire book of business and I don't have to jump through 67 different carriers to find it, and I can audit my book in one place.
Yeah.
And I don't want to steal any thunder for in
Let's
a couple weeks from
thunder,
now.
Brandon.
Well, I want everybody to realize that and Sophia's right. What sets us apart are all the things that she just listed out. But we're on the cutting edge of a lot of stuff.
True.
And we're constantly updating. We're constantly looking at new ways to make the agent's life a little bit easier. But all these things coming out are very exciting. So I'm looking forward to promoting that a little bit more.
Yeah. So tune in, folks. Please make sure you go to the events calendar in our website and go register.
Absolutely.
And if you don't see the link, please call us.
Yeah, the link should be popping up here shortly if it's not already there. So Messer's philosophy is you don't work for us, we work for you. How does that mindset actually play out day to day? And I think we should ask that question from internally, from a Messer internal standpoint. How does that message play out day to day with when you're dealing with agents and when you're working with agents?
Well, really is like you mentioned internally, everything that we have here is geared the idea that we are all working for you, for the agent. So, you don't have to go through the contracting process on your own. You don't have to go through your commission reconciliation on your own. We know how much of a time-consuming task that is, to the point that we have agents who have one or two or more assistants just to get that done. And when they did the switch to be able to partner with us, they have more of that support, right? We have a huge team on the commission side. We have a huge team on contracting. We have producer support.
So the departments, that's where I think of it when when that question comes up. I think about the different departments within Messer.
Yeah.
We have several people in marketing, but we have the same amount or more in producer support. We have the same amount or more in contracting. I mean, our technology team, I think they have probably 15 to 20 people,
have a lot of people
in that team. All the way to commissions and finance. We have a lot of people. I mean, you got to think about it. Just on the commission side, that seems like an overwhelming task when you have all these different carriers and then you have all these different agents and agencies. So we have to have a big team.
Yeah.
So I think that's another separator for us too, is that we have the staff and within the departments and the education within the departments to handle anything that our agents are dealing with.
And we're a company of exceptions. So the fact that we are a company of exceptions, that we create things for agents to really cater to their business needs, that's another layer of complexity that we bring to the table to allow them to, and that's, again, is how we work for you, right? Is how we work for the agent, is to make sure that we can make sure that they're well set up, and then they can have the nuances of our industry like well set up on their side of their business.
So they get that one-stop shop experience, with Messer. And then you have, just the industry experience within this organization. I mean, everybody here, there's a lot of people here that work at Messer that used to be agents. So they have that field experience. There's a lot of people here, that may have worked for another carrier. So they have that carrier experience. So we have a big melting pot of individuals here that have just years and years and years of education.
True.
I think we got some folks here that have been in the insurance business for over 40 years.
Absolutely.
So that's experience not just in the field, but experience with working with carriers and understanding where we were before compared to where we're going. It's huge for the agents to have access to that.
Yeah, it means a lot for sure.
And then Messer's grown from a small team in 2004. Back in 2004 to now we have thousands of agents across, all the states in the United States. What do you think has driven that growth mainly from your perspective?
I think, from my perspective, I think it's really the wonderful resources that are always geared towards the agent and having the agent front and center and the agent experience. Like I said before, and it's our part of our messaging, right? Being one of many, or the one that matters, is for them to be able to do the best that they can. And so, and I think it's, like when you have a really good business and you grow word of mouth,
right?
Because agents have a good experience and then they grow and they grow and they grow. And so we still have that experience. We still kind of even operate as a boutique kind of shop, right?
Sure, I get that.
More, we want to be close to the agent. We want to have that relationship because it is a relationship business, right? So, and we know this on our end. We know this us with the agents with the carriers, and our carrier relationships, and all that makes a huge difference when you're trying to do business, right? In general, when you go to help your clients and you have an issue, you need to call somebody. You have someone to call who understands what you're going through, and that's us.
I would think that. Probably to answer that, there's one word that answers that question to me, is that's the relationships. I've seen the relationships that Messer has with all of our agents, and that's I believe that's the reason for this growth, and that's what we promote, to our agents, and agents should be promoting within their businesses, that the relationship you have with your clients is the reason you're going to grow, and you're going to grow organically, and it's gonna take off for you. If you're taking care of your clients, they're going to take care of you, and
exactly,
and we have that. Definitely have that mindset.
Yeah, exactly.
Jumping into some of the technology, MyMFG, it was described really first to me as more of a CRM with a quote and enroll feature. But how does that single platform approach save agents' time? How does that, one of our taglines is helping talented agents close more sales. How does that platform help agents close more sales?
I mean, that's a great question, and we get that a lot from agents. And again, like obviously to get access to this MyMFG platform, you have to have partnership with Messer, and typically being part of the program. It's one of the values that we're able to bring to the table.
So you have to be licensed. You have to be appointed with Messer to have access to MyMFG.
Exactly.
Okay.
So you do
You
have
can't just
to
buy
have,
it off.
You can't, great point. Like you can't just let me just, pay a fee and have access to it. We could have done that, but we really chose to do that. That's part of our resource to you when you decide to have Messer as a partner, is that you get access to this fantastic platform that we created with agents, right? So all our chairman and councils always give us feedback on how to continue to grow. Every agent that works with it and uses it gives us, and that's how we get to develop it. And so you are able, truly the only platform still, Brandon, in our industry that allows you to quote, enroll, MA and ACA, And then now we have ancillaries as well, because the idea is to save you
Right.
time and cross sell. And I say this because there are so many now out there. Again, I love that we're like the leader of the pack of
Right.
always starting with the new things. But we have had this platform for so long, and we're still the only one. There are others out there that are going to say that they can quote and enroll, but it's not the same system. It's a different system. There's multiple systems. So you're going to log into one and then it's going to take you to another. While my MFG, you can quote and enroll and you're still in the same system. You don't have to log in and out to another portal. And you can quote and enroll MA, ACA, and the ancillaries. So that saves you a ton of time right there, because you can then do reporting, help yourself know where the opportunities lie, right? When you're trying to grow your Medicare side or your ACA side, and just the cross-selling opportunity.
Well, so that I want to touch on that point.
Yeah.
Talk about that for a second. So,
Yeah.
like for me, having that quoting and enroll platform, being able to do both, it's great. It's the ease of use is easy for me. Like I can navigate through it, and you can navigate through my MFG with minimal training.
Oh, yeah.
You don't have to have a big giant training class to get through my MFG. But what sticks out to me is that and what separates us from everybody else is because you have your contracts here, we're able to show you that data where we can't do that if you're licensed with other, outside of Messer, and we can't get that information. That, enrolling and having that data stored in MyMFG allows us to create what we were talking about earlier, is the new program called MyMFG Data, and be able to see your book of business. That right there is the special part for me, because if I got one place that I can go and I can pull all this information, that's the route I'm going to take.
Yeah, and one of the biggest things too, and I love that you pointed that out, because at least for newer agents or agents, they're always, I hear a lot that being overwhelmed with a thousand different logins.
Right.
I mean, myself, like even though there's a password that saves my password, somehow it forgets the password too.
Right.
So the computer forgets your password. You don't know where you put your password. And so a lot of agents sometimes struggle with the fact that they have to log into multiple carrier and learn different types of systems. This one is one login. You learn one thing and how to enroll. So even though you're able to see, even if we were to sell make it for a purchase, you would be able to see every single carrier there. It doesn't matter if you have it with Messer or not.
Right.
Because obviously that's what a proper quoting tool does, would allow you to see everything available there. But to your point, you quote and you enroll in MyMFG, that data is there. It can help us help you, because if there's something goes wrong with that enrollment, because it was made through Messer, we actually can go above and beyond and have that conversation and do things on your behalf. And then again, back to, we actually save you time, and this is how we work for you.
Well, that brings us to a couple other. Well, one more question is, what are some of the other features aside from quote and enroll? What are some other features that we can highlight on MyMFG?
I mean, it depends on the market, but I mean, agents typically love when we mention the BEQ feature in the Medicare side, because it allows you to see, what is the Medicaid levels and everything, and you're able to decide what is the best plan for them. Super, super easy to navigate that. Additionally, I think what we use to protect the client data is one that is truly works. And I don't want to put anybody, in a bad spotlight, but, a few years back when there was a leakage and, all that client information was out there, we didn't have that problem. And they couldn't see like the Medicare numbers, they couldn't see the LIS numbers. We didn't have that problem because our data, where we get that from, we secured. And so our agents were able to continue to make those enrollments that they needed to and find out the LIS levels, because we used the BEQ instead of the other options. The other thing I would highlight is the links. So you can actually send your client links, and then there you have a scope of appointment. Or on the ACA side, they allow you to, you get the consent forms that you need to be able to make that sale. They can even go into thinking that they chose their plan, and then that just generates a lead for you. And we have a lot in the pipeline, which I'm excited, because I know that we're creating that client-facing link on the ACA side that will make, way easier for agents to self-enroll
programs. Yeah,
exactly. I mean, those would be for me. What about you?
I just think that, for me, it's always about having my data in one place and being able to look at my book of business. I mean, we're all insurance agents, so we don't really punch a clock.
Yeah.
So I always kind of look at that aspect of our business as, well, how do we punch our clock? Well, it's based on ratios, And how do I know what my ratios are if I don't have my data? If I don't know, you
Yes.
know, how many people do I need to talk to? And it's as simple as this. How many people do I need to talk to make this amount of money? You know, as far from my business perspective and from me learning how to go out and
Yeah.
make money every week. And
what
that
about
is huge.
the ability to be able to look at your client and see, okay, you also not only sold the Medicare and then the wife has the ACA, but you also sold them the ancillary products all in one place.
Right. Yeah.
You don't want to have to, let me create a separate log and I have to, you know, John Smith, I sold this, this, and this. These are all the products I have. You have all that in one place. Yeah.
We just came out of National Financial Literacy Month in April. I think that was a good webinar series for us because
Yeah.
the theme of it all, the theme of some of the what do you want to call that where you just came from?
Oh, like a conference?
The conference that you
Yeah.
just came from,
Yeah.
the trade show you just came
The trade
from.
show, yeah.
All the trade shows and conferences and carriers, there's one theme right now
Mm-hmm.
going around, and I think it's about diversity.
Yeah.
And if everywhere you look, it's about how do I diversify? How do I get off of this one road that I'm on and multiply that? You know,
Yeah.
whether it's selling ancillary products or life insurance or annuities or anything. So we spent some time last month talking about that. And my question is, you know, how do our carrier partnerships and our product lineup protect agents and their clients across their entire family? Like what do we have that fits that diversity need for agents?
I think it's interesting, like you say, because we have been talking about this forever. I mean, since I'm going to complete 5 years here at Messer, and since I've been here, the whole motto of Messer is being ahead of the curve to make sure that the agent has what they need to be able to support their clients. No matter if their business is focused on Medicare, they don't need to say no to ACA. They don't need to say no to ancillary life. Like, they should be going in there and be able to be the one agent, one-stop shop agent. And not have to do that alone, because it could be really overwhelming. So I do love that everybody seems like everyone's now talking about it. And again, you know, we're steering the way, but it's not new to us, right?
Right.
So, I mean, we have group, we have ICRA support, we have annuities life, and we have experts on those. We have the ACA, we've been in the ACA game since it started, and Medicare, we've been doing this for over 20 plus years. And again, to your point, we have people who have been doing that for longer than that. So it's a combination. You know how Aetna, or other carriers, they go and they are bigger because they combine all the years of experience. So, I mean, we should actually calculate ours for real for next time and share. Like, it's a lot. It's like definitely 100 plus. What more?
Right.
Because folks have been doing this for, like I said, over 40 years. So
Yeah.
I love it. I love it. I did hear some folks. So some people were really excited that they were going to, okay, how do I diversify? Like, how do I get to do this? But a lot of folks too, they're like, it's a lot. Now I have to be an agent, a jack of all trades. I have to be an expert on every single product. You know, it's a lot.
It is. I mean, I think when you see this, first of all,
Yeah.
there's a national something month every other day. You know, it's National Dental Month, or it's National Wash Your Car Month, or whatever it is. But what I think that did is just shine a spotlight, put a bigger spotlight because of what's going on in the marketplace. You know, there's changes in the marketplace. People get a little unnerved about what's going on in the marketplace a lot of times. So the diversity conversation is a bigger conversation nowadays.
Yeah.
I think though, you got to back up and think, like, the majority of the time what we're talking about when it comes to that is you got an ACA agent just selling ACA plans. You know, and so what's going to happen there, and what is happening there, is they're losing business. So if you're wanting to think about retention in your business, you know, Messer is the best place to do this because we have programs and plans and carriers in place to help you with that retention side. So, you know, if you're talking to an ACA agent that, you know, that's all they're doing, they don't want to expand, they don't even sell dental, you know, some of them.
Leaving money on the table.
You know, the next person, what we're trying to say is the next person that comes along is going to offer all those things,
Yeah.
and you have the potential to lose that client.
Yeah.
So, you know, by diversifying, you're retaining your business. From a business perspective, that's
Yeah.
what I want to say. I don't I don't want to write business and lose 60 and 70% of my business in the first year. So, and to get around from doing that, we have to start thinking about other avenues. But it is a lot.
Yeah.
If you're an ACA agent and you're wanting to get into Medicare, well, now you got to take AHIP and you got to study Medicare, and there's a lot of education on that side.
True.
However, are you just going to lose your folks that are turning 65?
Right.
I mean, you're basically just giving away your clients
Yeah.
if you don't step up and start thinking of it that way.
Yeah, exactly.
yeah.
And to your point, to agents who, don't want to start offering other products, but I think that was mostly like more in the past and last year until now I'm hearing more and more agents who were like that, saying, no, I really need to diversify. I just don't know where to start. I think starting with a partner that has been doing those for a while is your best chance to succeed. And then knowing that is like, you don't take it easy, it's one step at a time. Like you said, if you're an ACA, do your AHIP, do the steps. It doesn't mean that you're necessarily like, okay, now I have to offer no, at least you're ready. You're ready for when that opportunities come. You have your partner to rely on. You can call your marketer. You can call your producer support. You can call us. We'll make sure that those first enrollments are well. You can call you, Brandon, and your team to like do the trainings and everything. The deep dives and the Medicare 101s and all the things. And so you feel prepared to have that first sale. And the more you do, then you feel more comfortable. And again, even though agents have been doing maybe the cross-selling for years, even if you're a subject matter expert, you never know everything.
No.
So you're always going to continue. This is why we're in this together. You're looking for a lawyer partner to the end of the times so you can actually do everything and not feel so overwhelmed that you have to be doing, that you are doing everything.
Yeah, and the other part of that is I don't want to feel like I'm on some island by myself. I want to, if I'm venturing into new areas and and diversifying into new product lines, I'm going to have some support behind me. Especially if you're going from ACA to Medicare, you're going to need some help and training and some people to bounce some stuff off of and questions that you're going to have. So, we and just to let everybody know too, we spend our entire team here at Messer. We have training every morning. We call it our in-house training from 8:15 to 9 o'clock every single morning, Monday through Thursday. And so we are constantly, bringing up new subjects and introducing new material to help us make sure we're all on the same page and we're all saying the same thing.
Yeah, exactly. And like a lot of agents, that reminded me a little bit of when an agent sells Medicare, which we come across many of them, and they're, ACA is not like, it's a waste of my time or whatever. But then at the same time, we have agents that are doing that and they're also saying, I need leads. That is your opportunity right there. You don't have to focus on selling ACA, but be ready to be able to, because you go into a household of somebody who's turning 65, maybe their partner are not turning 65 yet. Are you going to just miss that opportunity to support them? They're going to have to find another agent?
Right.
No, right?
That's kind of crazy.
And the opportunity is as good, financially, we know how the residuals work. And so agents that have been doing this for a long time on the Medicare, they really just will be open to the opportunity to learn more about it, right? What is the opportunity there?
What new products do we have coming out or coming online,
yes.
that are, really for Messer agents?
For Messer agents?
Yeah.
I'll touch on the one that I do know of that is, it's newer this year. It's been newer, the ICRA space, right? We have the systems in place. We have the opportunity to help you find a TPA and then how we do it. We have different ways and models. So definitely call the marketing team so they can go over that with you, and producer support can also go over it. Obviously, my MFG data. And then there's another one that I'll let you touch on.
Presidium.
There
Yeah. So
you go.
we got a new identity protection product that we're working with. We had the old one. We decided to expand on that and to add some different benefits and get some new plans. But the Presidium, the identity protection plan, we've not, as insurance agents, we've not sold that type of specific plan before. And I think we're on the front of this wave that's coming out. And I can tell you, in any ancillary situation, Sophia, you have to build the need, because you're not selling free plans here. You're not selling food cards. And so you have to build the need for ancillary products, and that kind of falls into it. And what's funny about that one is I always just ask this one question to build the need. And you can ask your client, you can ask agents, you can ask anybody this question. How many times this week, so it's Wednesday,
How many times this week have you had a text, an email, or a phone call that you knew was a scam? So
I had 3 so far.
right. So that answers a lot of questions. Is
Yeah.
there a need there? Yes, because everybody's getting hammered on this, especially
Yeah.
like seniors are really getting beat up on this. A
Yeah.
lot of people don't realize that your children are at high risk these days.
Oh,
And
absolutely.
with the onset of AI and who knows what's going to
Exactly.
happen on that front. So
No, exactly.
we all need to protect ourselves, from financial devastation. I really feel like this policy falls in our wheelhouse.
Yeah.
For
Yeah,
our-
protection.
having a portfolio of products. So it's definitely part of that. And so y'all everybody will see that new product that's coming out here in the
Love
next
it. We're
few
going to be
weeks.
rolling out
Yep.
like a webinar style to introduce
Webinars,
everything.
marketing
what
materials,
emails.
and all new stuff. So
Fantastic.
it's
Okay.
it's really great. And we started it a little bit before, but people are, I think they're coming online with us now and seeing
Yeah.
the benefit. So
Yeah. And anyone who've had, would get, there's options of those out there, but I do agree that ours is one of the most competitive in the market.
it is.
So
Absolutely is.
you need, so if you have one yourself, please tune into ours so you can see how much ours is much better.
Yeah.
And the ability that you'll be able to sell it to yourself, obviously. And it's a foot in the door, right?
Yep.
It's that foot on the door. No, there's less issues in terms of solicitation, right? Rule regulations, as we all know, on the other markets. So you're able to go and talk about something that's super important. It's scary nowadays, to be completely honest with you. I love technology. Love it. The facility of it, the way that it improves our lives. But it also brings that other side of it, that it is maybe not as regulated as it should be, or looked
And
into.
there's a criminal element to that.
Yeah.
Just like anything
Yeah,
else. So.
exactly. So very important for us to protect our folks and ourselves with ID theft protection.
Yeah, and one more point I want to add to that question is what's new is that, it's not a new program, but our Messer programs are
True.
just stellar, honestly. I mean, we have the All-In program.
Yes.
We have the Medicare and ACA Star program, the Legacy Addendum Legacy program that we have. Those are all programs that we have within Messer that are genuinely focused on making the agents' lives better
Yeah.
and giving them some benefit to being a part of
Yeah.
our team. And we push as much benefit into those programs. So, and All-In means if you have all your contracts with Messer.
Yeah. All life and health.
The Star programs, whether it's Medicare or ACA Star, if you have all your Medicare Advantage contracts with us, you have all your ACA contracts with us, you can
Yeah.
be a part of that program. That's great for everybody, especially newer agents coming in. They haven't had a chance to go out and get licensed with several different carriers. You don't have to. It's all here. It's all in one place, and it gives you that one-stop shop. And by doing that, we try to provide benefit for folks that are doing that with us.
Yeah, it's not uncommon for agents there's some folks who, from before have contracts direct to carriers when that is an option. There's some that have contracts with different partnerships, and they're kind of scared it out. So the idea of consolidating your contracts with one partner it's a big deal. And some folks sometimes are a little bit on the fence because they believe that they're going to become captive. And that's not at all the case with us. The idea of you getting all your, exclusive contracts with Messer for Medicare, ACA, or life and health is so that we can provide all these additional benefits to you at no cost.
But that's the other. It doesn't cost you to be a part of this program.
Exactly. So
It
it's
doesn't cost
not a
you anything.
scam. It's
Right.
not as, people sometimes we're like, but how much does it cost? Or this is too good to be true. I agree. It is. And you should take advantage of it while we change our minds before we change our minds, because we give you so many resources, the quoting tool, the technology, at no cost. My MFG data, that's going to be a separate deal. But everything else, and also it's not even part of an actual program. You can have it, there's different stipulations for that. But in the program, right, there's the free AHIP, there is, E&O, there is lead program, right, on the Medicare side and All-In. We want to be able to support you on the Medicare side with your marketing needs. So, for every 10 apps that you write with the same effective date in the same month, when it's not January 1st, it'll generate a dollar amount to help you with your marketing. And it could be leads. It could be maybe you want to put it back into your business. So you could do, a radio ad, whatever. That's an ability for you. And it's an earned lead credit program, really. So as you continue to write business, you're earning those marketing dollars to use it back into your business
So
to
the more
then
I
grow
write,
more.
the more I get marketing dollars
Yeah,
for leads.
uncapped.
Right.
Uncapped.
Okay.
The same thing on January 1st effective date, that will be up to 20 applications in a month. But again, you're just earning as you're writing. So
What
rather
about right now? What if I write a policy right now with that account?
that would, of course, yes. You write a policy right now, that will count. So
So it's not just for AEP and OEP and that
exactly,
kind of thing. Okay.
exactly. Great question. So it's throughout the year. We want to encourage you and really give you the what you need to continue to market yourself.
Gotcha.
Apart from like the ability to help you with the marketing, because we have resources to help you how to grow your digital space. That's a content we're creating right now that is to help agents who want to grow online and in social media. We are growing some other resources. We have marketing flyers. We have the compliance team to overlook anything that needs to be regulated and ensure that you're not getting yourself in trouble. And all that is part of being part of a star with Messer. So we can still partner with agents at every capacity. So if you just want to like try us out and do one contract with us and see like, how do they really operate? Absolutely. Or if you don't need it and you're happy with your partner, even though they don't give you legacy, sure. Do what you can with us. But at some point, we see more and more these last couple of years, as many more resources we add to the programs, agents are just like, I guess I have to be part of the program.
Right.
Like you're just telling me I can't because I just don't have this one contract with you. Yeah, because the way that we are able to even give you the legacy is because if something were to happen to you and you pass away, we can only really take care of that book if that contract is here.
Right.
If the contract's not here, all those clients will be left off of your book. And we won't be able to pay those out to your family. So it just doesn't work as well.
Give me another benefit to being in one of the all-in or star programs. Because one stands out to me. I'm curious which one stands out to you the most.
Obviously, there's the commitment, but to stand out from one of the particular programs.
Yeah, you said
general?
legacy. The legacy agreement that's one that stands out probably the most.
Yeah.
I think for me, it's the E&O.
Okay.
The E&O benefit.
Yeah.
We provide that E&O service to our all-in members, and we hold the policy. So it's again, we're saving you money.
True.
In a big way, and that E&O is important because if you don't have it these days, then well, you can't even get contracted with most carriers these days without E&O. So,
exactly. And you shouldn't want to either because you
but
need to protect yourself.
It's definitely saving you money. We have a great policy there. The MyMFG platform, all the
Game
bells
changer.
and whistles that go along with that.
Yeah.
So those are a few that we have. There's loads of other stuff in the all-in program, but today is more of a high level overview of what we do. It's really to.
Well, speaking of that.
What?
The benefits, right? Another thing that part of for you to get access to that is to become a top producer with Messer. You have to be in the program, and to be becoming that, you get an opportunity about the Top Producer Summit, right?
You get to be a part of that.
Yeah. So would you share a little bit about the Top Producer Summit?
So we call it TPS, Top Producer Summit, and we bring in carriers. So that there's an expo hall there. We have loads of breakout sessions, and that's where we have panels of carrier reps that come in to talk about what's going on in the industry. You get to, it's a little bit more, interactive. So you get to ask questions to the folks that are, have their hand on the pulse of what's going on in the industry today.
Yeah.
Whether it's Medicare or ACA side or ancillary policies or, we're just talking about technology. We have these breakout sessions are awesome.
Yeah.
We have dinners for everyone that are there, and we have an awards program, an awards banquet. We bring in speakers.
Yeah.
I think
all the juicy things you need to know before enrollment seasons.
I don't have any of the speaker names yet, but some of these speakers are really big names, and
nice.
They give you a lot of insight of what's going on in the industry. But to me, all these over the last however many years I've been doing this and going to these types of meetings, the networking with other agents is the biggest draw for me, as an agent, because I get to be around not only what's going on in the industry and what's going on with the carriers, and you get some FaceTime with the carriers, but I get to talk to folks like yourself and other agents that are successful and kind of get some insight on what they're doing.
Yeah.
last year when I was there, I had a 4 or 5 minute conversation with an agent, and he told me that he was doing something, and I'm like, never even thought of that, and it was a great idea, and he's had a lot of success from it. So that's where I get a lot of ideas from the networking part of it.
Yeah.
So, but
It's
to be a
super
part of
rewarding.
that is huge these days. And again, you don't feel like you're on this island by yourself. You feel like you're a part of this bigger organization and this living thing that is growing.
Yeah. And an all expense paid.
Right.
Event.
It is all expense paid.
So that's part of your reward too of
We
becoming
bring
a
you
top
here,
producer.
put you up in the hotel rooms, feed you, giving you tons and tons of information and education and
Fun.
we have a kind of a fun day an excursion day that we go out, but I think that that we've covered a little bit of it. A lot of agents are already contracted with other FMOs. What would you say to the agent who's on the fence about switching or adding Messer products to their portfolio?
I would say it obviously depends, especially because we were talking this whole time, it's a relationship business, and that's important, and loyalty is important. So, but truly, are they loyal to you? That would be one thing I would ask, because we know we are to our agents. I mean, the level of support that Roy and Bill have given to our agencies and agents is truly one of a kind. And by talking to some of our folks out there, our peers in the other NMOs and FMOs of the world, it is one of a kind. And so and I would ask, what don't you have? What is missing in your portfolio right now that you could add? And then that gives you the opportunity to see if we can support you there.
Ask yourself some questions like, am I doing one thing? Can I be adding additional plans to what I'm doing? Do I need additional education? Am I utilizing the technology that's available to me?
Exactly.
Best of my ability.
Yeah. Find a product. And that, like you said, think your agency as it's your business, right? So what is best for your business right now? Especially if you don't have something in place for your business, right? That is going to protect all your hard work. Is that important to you?
Yeah. Our relationships, it goes back to what you said.
Yeah.
It's about relationships. We really we covet our relationships with our agents in a huge way, and that's how we take care of people, and that's how we've grown so much. I think a lot of our agents would, personally, I don't know if I would do as well out there by myself, trying to muddle through all the information and education I'm supposed to be getting.
Oh yeah.
It would be tough.
Yeah.
It would be tough for me to do that. But we're here to provide the tools and the education so you can write more business, and more importantly, you can retain that book of business. That's the name of the game. And which protects your legacy.
Exactly.
And so, and that's what we're here to do.
Yeah.
But
yeah.
Do you have anything else to add?
I mean, I would say from all the things that we did, talked about, there's so much. I definitely want to encourage everybody to make sure that they're tuning in, to the webinars that we do, the trainings, to give us feedback, like anything that you use and you like. Feedback is super important.
That's very important.
We love when all of you are here and we get to spend some time with you and share.
This entire webinar is based on the feedback that you and I get on a daily basis, and our marketers get, and agent development gets, and producer support. And we all get this type of feedback. We compile this information, and we get you the right answers, and we talk about it in a little bit more of an open forum. I'm not a big fan of just reading slides and reading a PowerPoint.
Yeah.
So
and don't be shy. Don't be a stranger. Call us. If you have partnered with Messer, you don't have a marketer, or you're not sure who they are, just give us a call. Call Brandon, call his team, call everybody here so we can help best support you. And I'm excited with this coming year. There's a lot of good changes that has happened in our industry. Yes. Disruption is it's hard, right? Obviously. But from the conversations I've had, it has been a blessing in disguise for so many folks, at least to help grow their business. It has not been great for consumers, for sure. It's been tough. But if you feel like through these last couple 2 years, if you weren't able to grow, maybe look at the partnership that you have, because maybe they're not giving you what you need to be able to be successful.
Agreed.
Yeah.
All right. Well, thank you for being here with me today.
Thank you.
I appreciate this. And
My pleasure.
And to everybody, if you have any questions, again, this webinar is going to be recorded, so you can access your agent portal and rewatch this webinar if you need some questions answered. You can call Sophia and her team. You can call our team. Anybody within Messer, we're here to help you. Again, I appreciate everybody for being on today. And this concludes our webinar. Have a great week.
Nobody was complaining, right? Like when you talk to agents out in the field, there can tend to be a lot of complaining and just whining about the way things are and all the negativity. But what I really thought about when we were there at this event was just all the positivity, like you were saying, Justin. They were saying about how we are where we are, right? We can't change it. So how do we take where we are and move forward with it?
Hey everybody, my name is Brandon Adams with Messer Financial, and today we have some guests here that just recently got back from a huge trade show, and I'm going to be asking them some questions. So from left to right here, we have Justin McKim, Micah Matthews, and Mr. Jeff Street, all here at Messer. And they just, like I said, they just got back from a trade show. We all have a lot of questions about what's going on in the marketplace today. And so we just wanted to jump in and ask you guys how that trade show was and what you got from it. So really the first question is, like, tell me about the trade show that y'all just came back from. It was out in Vegas, right?
Correct.
So, tell me about it. What did you do out there? What was the theme out there for this trade show?
I think there's a lot of excitement, for sure. It was definitely probably the biggest event we've seen yet.
Oh, really?
Out there. I think there's one thing that I really carried away from it is, there's always going to be change in this industry. While it's been very volatile for us over the last couple of years, there's a lot of opportunity still out there, right? And I think this provides folks like us an opportunity to continue to educate and just reassure people that are in this industry that it is still very vibrant and alive. And we can help be that guiding light for them and educate and explain to them where those opportunities really lie out there for them. So that was my biggest takeaway, but just a lot of excitement out there. And I really enjoyed our time. Saw a lot of our carrier partners out there and some great classes. And we've got two gentlemen here that presented on stage. I thought did a phenomenal job as well. They had a few technical difficulties. They didn't really have their slide deck, but they went out there and improvised and absolutely crushed it. Extremely proud of these guys. They did a phenomenal job. Had to be close to 400 agents in the room. And some of what I just said is some of what Micah and Jeff talked a little bit about is, hey, where there's change, there's opportunity. And I think we've seen a lot of people get out of this business, but that means there's more opportunity for those of us that are still in it. But I'll let them touch on it a little bit more. But again, just wanted to throw a shout out to my two dudes here. They did a phenomenal job. Very, very proud of them.
Nice.
Appreciate
Michael,
it,
what did you take away?
Thanks.
What did you take away out of the meeting and getting out there?
When you're around that many people that are super passionate about the industry like we are, they really care about it. They want to see it prosper. And whether they're competitors of ours or, affiliates or whatever the case may be, one thing I noticed, and I don't know if you guys saw this as well, nobody was complaining. Right? Like when you talk to agents out in the field, there can tend to be a lot of complaining and just whining about the way things are and all the negativity, especially when you go onto these social media sites and everything else, and you just hear like everybody just constantly talking about all the changes and how it was detrimental to their business and all this other stuff. And those are valid points. But what I really thought about when we were there at this event was just all the positivity, like you were saying, Justin. They were saying about how we are where we are, right? We can't change it. So how do we take where we are and move forward with it and keep prospering and keep having these successful business and help each other? When we get together with everybody, it's the combining of ideas and thoughts on the industry that really make things really run well, and you're talking about what, 4,000, 5,000 people. I'm not sure how many. There were tons of people, and it can be overwhelming. But the classes obviously are incredibly beneficial to listen about, what's coming up. But to me, what I took the most out of it was the networking, was the ideas and talking to the competitors and people that are very successful in this business, and just hearing their sides of perspective. Because when you're doing business, you have a tendency to only see things out of your own lens, right? And things can kind of get distorted. You can get down about things, and you kind of feel like you're in your own little world. But when you're talking about all these ideas with all these different points of view, I think gives you a different perspective and a positive refresher and more positivity to keep you going. And that's really why I feel much better about where we are in the space after having all those conversations with the carriers, with the agencies, with the lead vendors, with everybody that's in this business. It really is a smorgasbord of everybody, right? So I took a lot out of it.
I really like that point, though. I think you touched on it. Oftentimes we might be talking to agents on the phone, and that's a one-on-one conversation, and they have valid points about, where the industry is and how frustrating and how a lot of these changes have had, impacts from a negative perspective, for them. But when we get to an event like this, just the overall energy and just positive vibes, I think we all feed off that, right? And I think that was really exciting, and I love that. I'm an optimist, so I'm always going to have those positive vibes, but truly felt that throughout the week.
Yeah, it's kind of one of those things where you're never losing, right? You're either winning or you're learning. And I think that was the biggest thing. We just focused on the learning, on how we can adapt and how we can make changes. And that's the biggest thing in a never-changing business, right? Learning how to adapt and to be able to keep moving forward. So
love that.
Yeah, I wouldn't have taken any negativity whenever I was there.
I like that statement. We're either winning or we're learning. I love that.
Yeah, I'm stealing that. Definitely stealing that.
Sorry, I trademarked it. Sorry.
Trademark.
I think overall, what I saw from an agent perspective is that the agents were willing to embrace the idea that they needed to evolve. You saw a lot of people interested in how they can start to sell other products that maybe they weren't doing before, a little bit like what we talked about in some prior conversations. And to these guys' point, the removal of a lot of speculation, you can get caught up looking at forums and chat bots and all these different things. And, agents start to worry when they start to hear a lot of that. So to be there with government officials from CMS, to hear things from their point of view, to hear things from the carriers, and to hear things from our competitors as well. I mean, we tend to have a fairly good relationship. It's very competitive, I'm not going to lie. But at the same time, we all are kind of in the same situation, right? So wherever our markets are headed, whatever our industry is doing, we're all going to have to find our way through that. And there's plenty of good agents. There's some bad ones out there, and we tend to be weeding those out, which is a good thing for overall. So a great few days together, a lot of opportunity to interact. And to these guys' point, you pick up on that energy from other people, and you start to feel good about where we are as an industry. And as many changes as there are coming or have happened in the last 24 months, I think we're still in a good place, and it's a huge opportunity for individual agents right now.
I think that's an interesting point too, Jeff, talking about our competitors. And you're right. I think we do have some pretty good relationships with our competitors. It is very, very competitive out there, more so than ever before in this industry, right? But regardless of that fact, one of the things that I think has excited me over the last, over 24 months where we've seen a lot of change is that our industry is misrepresented when we start talking about from the political aspect, right? And some of the changes they've made looking at, the insurance industry as a whole. And I think we've seen a collective group of leaders in our industry come together, even though they're competitors, they've come together to, number one, fight for those agents each and every day and really educate the folks that are trying to make those decisions on the direction this industry is going. So that is something that I think is a strong takeaway too, is we have come together as a collective group to fight for this industry and to fight for those agents that depend on us to continue to fight for them, that they have a livelihood to continue to see, week after week. So I think that's a really good point to notate.
And not only that, it's a great way to be heard. Our voice is heard, right? I mean, Jeff and I had the opportunity to actually sit in a class with, as he was saying, CMS, the people that actually work for CMS were there, and they got to hear our feedback. They were asking us questions, and to hear it from, again, the passionate people that really do care and multiple resources of people's ideas. I just don't think you can put a price on that.
Yeah, I mean, we want to be a part of the solution, right? We don't. I think if we focus on trying to get out in front and educate and try to be a part of the solution, that hopefully gives us an opportunity to, to avoid some of the mess that has been created in the past. So I think that's something else that we're really focused on here at Messer, especially is making sure that we are doing things the right way, guiding and advising our agents and agency partners to do things the right way. Because we want to weed out those bad actors too, because that affects the entire industry, not just one agent or agency or FMO. It affects all of us. So, again, trying to be a part of the solution, I think is a big focal point for us as we continue to move forward through, this.
As an
this
agent, I can tell you it's reassuring to see that, CMS was out there. They were asking us questions. They got, actual true feedback from the agents that are there that are producing, and that's another thing, producing agents.
Yes.
They're doing a big chunk of business. They're seeing every little thing, in the industry from a sales point. And, to know that CMS is there asking us questions to try to get this right. Because I can tell you from my point of view, I take my AHIP and then I try to abide by the CMS rules, but I have no idea who's making these rules. And, you don't really know what went in behind these. Sometimes you ask a question like, why is this the way it is? But being able to get in front of them, I think that's strong.
Yeah, I think there's been a presumption that CMS is the evil power that's in the
Right.
room, and that's not necessarily the case. They were willing to listen to the agents, to us, to some of the organizations and associations that Roy is involved in. I don't think I've ever seen him more active in doing that at a high level with other individuals that own organizations similar to ours, is that they recognize that we have to get together and have a collective voice so that we're not misrepresented in some of these situations.
So you're talking about like organizations like NAFA that are
Yes,
part of.
yes, absolutely. Because those organizations are tasked with representing all the individual producers that take the time to join it. So I think it's very important that they choose one of those organizations so that they do have a voice, and to be active with reaching out to their representatives to let them know. We've got to do a better job on our side to make sure that our story is heard. There's a current situation that's prevalent in our business right now of how you negotiate, right? And for whatever reason, the news or the media is not really focusing on what part that these large provider systems, whether that be a hospital or a doctor's group, plays in what's being charged or what's happening at the negotiation table, why suddenly somebody's in or out of network, and what's the reasoning behind that. And people are always just pointing the finger at the insurance carrier or the agent for being greedy, and everybody has to take ownership in that. So we've got to find a way to get back to where you can have a meaningful conversation across the table and find a win-win situation for everybody, so that ultimately the people that we're trying to get coverage for don't lose the doctors, the network that they want to be able to go to.
Yeah, it does seem like there's a little bit of finger pointing going around.
There's a lot of
between
finger pointing going around.
insurance companies and providers and just all the way around.
And the truth of it is everybody is in business to make money, but at what rate do you do that, and at what expense? And that's where we've got to get back to a balanced approach for everybody in this. We're talking about people's health.
Yeah.
Right.
Well, and I think that's a really interesting point, Jeff. I think that's a good segue into, another component that I think a lot of agents have questions about today is, we're in the middle of a 3 to 4 year reset in the Medicare Advantage market, right? And I think a lot of agents just don't know the what, the when, the why. Like, why is it happening, and how does it impact us? I think one of the biggest things that happened was with COVID, a lot of the claims or the utilization went down because they weren't going for elective surgery. So these carriers had a surplus of money. So what did they do with that surplus of money? Let's put in these awesome OTC benefits, fitness benefits, dental going up to $4,000, a year. So you saw a lot of flashy benefits being added to these plans when that wasn't really the core of what these plans were designed to be. The core was to have coordinated care, to truly provide health care for and insurance for those clients. And so what we're seeing in this reset is they're pulling a lot of that back. And now that utilization and claims are picking back up again, they've got to make cuts to their benefits. And so it seems like it's gotten really bad here, but in all actuality, we're really kind of returning back to what this program was actually intended for, which are those core benefits to really protect those clients.
I think if Rhonda was in here, she'd probably smack me on the head to make sure I get this right. But all the carriers are required to spend a certain amount of money, or out of every dollar that they make, so much has to go back into the plan. So to Justin's point, I don't think we really forecasted the true impact of what COVID did in terms of utilization. So you've got a surplus of money because nobody was going to the doctor, so they had to reinvest that money back into the plan. So you get these ultra-rich benefits. And then as COVID subsides a little bit, or we move to the backside of a pandemic, now all of a sudden a lot of conditions that were manageable have become very chronic. And now utilization is through the roof. And we've continued to see medical inflation increase at a rate that maybe we haven't kept up with. So the plans have to reset, and we're really getting back to the core of what Medicare Advantage was about, which is health first,
Right.
and then all the other ancillaries included after that.
So the bigger, and I want to continue this conversation, but the bigger theme of this trade show, that was more on the senior side, the senior market.
Well, it started that way, but because agents are becoming multifaceted, I think there's just as much interest in the ACA, and Mike has got more of a finger on that. But your ACA clients of today are your Medicare clients for tomorrow. So it's imperative that these guys participate on both sides of the market.
Goes hand in hand. Yeah,
it does. So I'll let Micah talk a little bit about the changes that we've seen in the last couple of years on the ACA side, especially with the enhanced subsidies going away, not subsidies going away. So.
Well, and I really think that, especially over the last few years, we've realized that you really can't put all your eggs in one basket. I mean, sure, there are people that do that and they're successful, but I can tell you that being able to pivot wherever the opportunities are when they come up is just so crucial. We talk about it all the time that, this is a relationship business, and it doesn't matter what you're selling. I can't think of a better way to get to get a Medicare client than to get them when they're under 65, right? I mean, because I built that relationship while they were under 65. Why wouldn't they do the Medicare with me as long as I know about the Medicare market? I'm able to do what's in the best interest of their family. I know their family. I know what their concerns are. Building those relationships are so crucial. And it's all the way from the top to the bottom, which is why, going back to the value of conferences like this, is the fact that CMS is there. The CMS, building a relationship with them, you don't think that that's crucial? It absolutely is. Building the relationship with the carriers, building a relationship with the FMOs, the agents, the clients, all the way up and down. I mean, so when you go to conferences like this, you've got your classes, which are very informational, right? You're getting a lot of good information on how to do certain things. Then you can have individual meetings with the carriers. That's a great conversation to have. There's all kinds of things that you can do to build strategies, and all kinds of other things that can come out of those conversations. Then you can go and have the conversations with the FMOs and the agents and start figuring out how you can do any kind of collaboration and how you can help grow each other's business. At the end of the day, we are all, no matter who you are, trying to do the right thing. And that's helping as many people as we possibly can, and also having a successful business. And if there's ways that you can blend ideas into that, that's what makes it so great. So, like I said, I mean, not just the information that are presented in the classes, but also the networking and the conversations and the individual meetings and all of that. It all combines to make it the most powerful kinds of conferences that you can possibly have.
I think too, it gave us an opportunity. Justin and I walked around a little bit. Mike and I walked around. I know, again, Roy spent a lot of time walking around. We were just looking to see if we're directing our ship in the correct direction. A lot of questions about AI and the future and technology and what role it's going to play in our industry, and having MIME-FG and the fact that we control what is put into MIME-FG and MIME-FG data. It was big for us to see, again, are we pointing in the right direction and meeting the needs of today's insurance agent? And I think we've got a pretty good path for that.
Well, that was one of the questions that I had about, AI and technology. What was the theme along the lines of that? I mean, did you see anything that was just stood out, or that you saw that was probably going to be something we're going to use in the future?
I will say one thing. Technology is great, and technology will allow us to become more efficient with some of our business needs, right?
Yep.
But ultimately, at the end of the day, the one thing that I always take away from this is, and I think Mike actually said this on stage, when you look at the ACA, 80% of the people in the federal marketplace have a broker, right?
Right.
So no matter how much technology is out there, that one-to-one interaction with an agent to validate or to seek guidance is always going to be there. So I think I've seen that from the day I walked into this business to today. It's, and Micah said relationship. It is a relationship-based business, so brokers are always going to be needed. But that's a great question. And how do we utilize technology? How do we utilize AI in a responsible way that allows us to continue to, again, make our businesses more efficient, which ultimately means hopefully we're more profitable long term, right? But yet still keeping that personal interaction at the forefront of what you do, because I think ultimately that's what drives us. So I'll just start with that, and then I'll kick it over to these guys to provide some additional insights on maybe some of the technology pieces we saw.
Yeah, the technology and the AI will help you increase your business by reaching out to more people, so you can contact more people, get your name in those relationships out there more. But again, it all comes down to that relationship. It's like I always say, every client can go to any agent and get the same exact product at the same exact price as what you're able to offer. There's a reason why they're doing business with you, and that's because of you. What the technology does is makes it easier to enroll people. It makes it easier to transfer information back and forth to each other. It makes it, again, able to reach out to more people at one time. And AI is also very good at being able to help service things and again, transfer the information to the clients. But at the end of the day, they want to make sure that the person that is making the decisions for you is doing it what's in your best interest. And the only way that you can truly do what's in someone's best interest is to know them and have a relationship on them to some extent. So really get to know them, work them, and find out exactly what it is that they're most concerned about and what their worries are. Because at the end of the day, what is insurance? It's peace of mind to know in the worst case scenario that you and your family is going to be protected. So find out what those concerns are and make sure that you alleviate them, because life can be scary and unknown is even scarier. I think that's probably the scariest thing on the planet is the unknown, right? So if you can say, hey, no matter what happens, because we don't know what is going to happen, you're going to be protected. So that's why you got to have that relationship, even though the technology and the AI is great.
Yeah, for me, it was divided basically into kind of two categories. One is, are we going to use it to replace everything, like the human element? Is that going to go away? Yeah. Or two, do we use it to improve the functionality of the human? And most of the people that I spoke with, and luckily some people that I hold in high value, are of the opinion that this can really make a difference in making you a better agent, so that you may make fewer mistakes in terms of quoting what a deductible is or what this may be and that may be in a benefit, and you'll have that information at your fingertips instantaneously for across the nation. And what a great thing that would be. But we can't replace humans in this. There's no way to do that.
Yeah, I mean, if all you're doing is just one of the three, if you're just focusing on relationships, that's great. But there's a lot of technology and a lot of AI assistance that could have helped you really grow that you missed out on. But if you only focus on the AI part or the technology part, then you're missing out on the relationship part. It's all important. They all work together to make you the ultimate agency, which I think is what we're all trying to achieve as the best person that we could possibly be in the best business that we could be.
Yeah, there's a lot of flash too. I think it's important for agents to kind of take an assessment of where they are in terms of either time in the business or how long they want to be there and how big their book of business is, and figure out the things that they need the most and evaluate from there. Again, I think that's why MyMFG and MyMFG data will be so important to the folks that work with us, is because we've listened to what they've asked for and we're able to pivot onto that with our guys in the back in IT.
Yeah. It seems like another theme there would be the diversity conversation, like, being diverse in your business. I mean, we just came off of a 3-part series, a webinar series about April's National Financial Literacy Month, and the big theme about that was about diversity. So it seems like there was a lot of that going on.
Oh, absolutely. And I think we've been talking about this for a number of years, right? I mean, we've got Benchmark in-house now, so we've got a lot more support directly towards the annuity business, towards that life business. So I think even we've seen that and have pivoted. Because again, you look at what's happened over the last 24 months. There's a lot of unknowns about how we're going to get paid. Are we going to get paid? All those things, right? I still think and firmly believe this, that we will still be around, still get paid. But regardless of that fact, does the compensation amounts change? Ultimately, diversification is key to success as we continue to go forward. I look at this from a number of reasons. One, a lot of agents are like, well, I feel like I can't really grow my book because I'm already kind of tapped out. Well, you know what you can do? Have you sold ancillaries? Have you gone and talked about those hospital indemnity plans or short-term healthcare plans? Yeah. No. Well, how about we go and start with that? How about we go talk about life insurance or annuities? So there's opportunities to grow your bottom line without having to go out and market and just tapping into your existing book of business. The other thing to notate too is if you're not selling it, somebody else is. And what if another agent comes in and sells that? Next thing you know, they might get their Medicare, they might get their ACA, whatever else they might have, they might take that from you. So I look at it as one, I can increase my my bottom line. Two, I'm going to protect my book because the more policies you have in a house, the chances of retention are far greater. And I even found as an agent, if I have 2-3 policies in a home, I typically have a greater chance of referral as well. So I look at all those different aspects, of diversification and why it's important. But I think it's even more important today than it ever has been. And I think we here at Messer have continued to focus on that and develop additional tools and training and making sure that we're able to meet agents where they're at and also guide them in directions maybe they're uncomfortable in going. But sometimes the only way to grow is to be a little bit uncomfortable, right? So I think more than anything is, it's great that you're on board here now, right? Because you're going through a lot of the trainings. And I think just some of the trainings you've done with some of our top producing agencies, we've seen a direct result in those ancillary sales start to creep up and start to grow because we've actually talked about it. We've trained them how to proposition it. What are the right products for the right client, right? So I think, we've continued to really focus on building out more and more opportunities for agents to take advantage of. Now we just got to continue to have those conversations with all of our agents. But excited about where we're going with it, and I think these guys would agree. But I'll let you guys, speak on it a little bit more too.
Yeah, it's kind of funny. I took the family down to Florida for a vacation, and while we were driving through Florida, I saw a billboard, and it was for an agency, and it said, "Protecting you for your auto, home, and life." And I'm like, well, where's the health, right? Like, well, you missed a huge portion of it. Why wouldn't you offer that, especially when that product is covered by the licenses that you do? Is it just because you didn't know or whatever the case may be? But I'll tell you what, that means that every single one of their clients is going to somebody else for the health insurance. They need it. In our world, in the insurance world, everything grows each other. It's like, you want to be able to help everybody. So why wouldn't they offer the health? And that always just confused me. And to your point about the compensation, and to your point about, 80% of the marketplace, even though a client can go on healthcare.gov right now, quote themselves, see all the plans that are available to them and what they would qualify for and enroll themselves, still 80% of them, of everybody that's enrolled, has an agent. So if you're talking about a need factor, I can't think of a better one when nobody's mandating someone to use an agent for the health insurance, but they're still using the agent. So obviously there's a need for the agents, and the only way that they can keep us in the business is to pay us. So if you're talking about job security, what better way than when the need is already there? The market itself is determining it. It's not someone saying that you need an agent. It's the market itself that says, hey, I find value in what you're able to offer me and the way that you're able to explain the benefits and the health plans and the different plans and the different carriers and the networks and the prescriptions and all of that. There's so many things that go into what we do that I just don't see us ever being able to be eliminated from that. So,
to Micah's point, that 20% that chooses to do that themselves, there's probably 18% that probably should have used an agent.
Yeah, correct.
You can look at a line of zeros across the board and not have any understanding of what that true utilization of that plan is going to cost you at the end of the day. So cheaper is not always better, and most times you do get what you pay for in some degree. But for an agent, I think the idea is there's always going to be something that you're most comfortable with. Maybe it's what you were introduced to when you got into the business, but you have to remove that perception of being intimidated by new product lines. You don't have to be a master or an expert immediately. That's not going to happen. But you should have a functioning understanding so that if that question does come up in that appointment, you can answer it. Or, like we talked about before, just say, I'm not sure, but I'm going to go get the right answer and I'll be back. And then get on the phone
real quick.
Yeah, right? Get on the phone and call somebody here, and we'll do what we can to help you get that person in the right product. Yeah, and there's there's two parts to this. What we talked about before is there's, that the benefit to the agent where you get into the, by diversification, you get into more retention, better retention, more referrals in those situations. But on the other side, I think, what we have to also remember is by diversification, it's more of our duty at this point to our clients to make sure that they understand everything that we do. I can tell you just by doing training, I ask everybody to raise their hand that tell me that you're going after every single person in your book of business and letting them know, at least letting them know what you do. And nobody can ever really say everybody in my book of business knows exactly what I do and has a full understanding of my product portfolio.
So it just seems like, right now, that trade show, what you're seeing in the market, that's really the theme moving forward, is to make sure that we are all, understanding what's going on in the marketplace. And to add your point, Mike, I mean, you got ACA folks turning 65. I mean, the moment they turn 65, if you're not doing Medicare, you just lost your client to somebody else. And I can promise you that next Medicare agent is going to be talking about
it's the most common number we hear, 10,000 to 11,000 people a day.
Right.
We're just reaching the peak of the baby boomers. So to think that there's not an opportunity to write ACA for those folks in their 50s who are most interested in medical coverage, right? We talked a little bit before about younger people. They don't think they need insurance. They're bulletproof. It's a fallacy. But to be able to transition, like Michael was saying, take those folks, work with them for 10 years, get to know them, get to know their family, and then move them into the Medicare space, which if you've ever tried to read the Medicare and You book, good luck if you don't think that's confusing.
It's funny because one of the terms that buzzwords or terms they're throwing around, and they still do, but what's the lifetime value of a client, right? I'm like, I think to your point, if you have an ACA and all the way through Medicare, I mean, talk about real lifetime value of a client. That's where it's at. I mean, why stop with just ACA when you can take them from 26 all the way to death?
Yeah.
We get into health insurance for the residuals. That's because we want to be their agent for the life of them. So get them when they're young, all the way till they're old, in the good times and the bad times. You make adjustments as you go. I always talk to people now, obviously, if a call center is taking business off of you fraudulently, not speaking to the client, that's one thing. But if you're worried about a call center taking your clients, keep in mind that these guys that are working at these call centers, they're paid to get volume. That means they're trying to get on and off the phone as quickly as possible. And in the ACA world, if their typical average call time is about 20 minutes with a client, they're on and off. And I'm telling you right now, if you're an agent and you've lost a client to someone who was on a call with them for 20 minutes, then I'm just going to have to ask you, did you do your job? I mean, how can I lose a whole relationship with somebody that I've worked with for years to somebody who was literally on a conversation with them for less than 20 minutes? To me, that just shows you how important that relationship is. Do yourself a favor, take that little extra time, really get to know them, and that's only going to help you keep getting paid longer and longer and longer. That's what the retention is. That's what it comes down to. It will always be and always has been a relationship business. Don't ever forget that. And as long as you do what's in their best interest, it'll keep growing. Why? You helped them out. You figured everything out of whatever they wanted and fit their needs. Do you not think that they're going to tell somebody, or that they know people that are in the same exact position that they're in, that they can refer over to you? Hey, I just have an agent that saved me so much money, that built this plan that really solved all my concerns and needs. You have to go talk to this person. They're amazing. What better referral than that? Do you think they're ever going to leave you? Heck no. A 20-minute call, they're not even going to even think about having a 20-minute call with somebody else on the phone, because they already have that person. Be that person, right? Everybody's got that person for whatever it is. Oh, my car broke down. Oh, well, I've got a mechanic that's perfect. I always go to them. They go to this person. Be that person in the insurance world. Don't be afraid to let them know everything that you do, to your point. Let them know, hey, I also do this. I also do Medicare. I also do ACA. I do life insurance. I do whatever. And it just keeps growing naturally. That's what I love about this business. The more you care about people, the more you do for them, the more you're going to benefit.
I think sometimes, too, I think some agents maybe just lack a little bit of confidence because, as the agent, you're the authority in the room, right? And I think just sometimes there's a lack of confidence. They don't view themselves as that authority. So to your point, I think one, like I'm the agent, I'm here to help you and I'm the authority on the subject matter, right? And then kind of to expand on the call center versus, local, I think for those local brokers, agents, again, play on that. Like I'm here in your community. I'm local. I support the same community you do. We live in the same place. So I think continue to play on that I'm here in the same community as you are. And we support the same things. I think that's something to play on as well. But again, have that confidence as an agent that, again, you're the authority. And I think you made a good point. You might have started in Medicare and I've got a firm grasp. I'm really comfortable here. Maybe not as much here, but again, you still know more than the client in most cases. And if you don't know the answer today, give your friends here at Messer a call, and we'll help give you the information you need to make sure that you provide the right information and are able to close that deal.
That's exactly right. And I'll give you a good example. When I started in the insurance business, I worked for a company called New York Life, where my job was to be able to help people manage their finances. Well, unfortunately for me, when I started at New York Life, I was right out of college, didn't have a dime to my name, driving up in people's driveways with my cracked windshield Honda Civic and my one suit that I wore every day for the week, trying to tell people what they did with their money. Now, if it was just up to me, what I had to understand and what I had to learn is that, to your point about being the authority figure, you absolutely are, but it's not just you. It's the resources that you're bringing into it. If it was Micah Matthews coming in there at the time and I was trying to advise you of money, I would never listen to myself. I don't know what I'm doing, but because I had the backing of New York Life. So when I give you advice of what you should do, it's not Micah Matthews' advice. It's New York Life, who is a proven track record company that's one of the best in the world at doing what they do. So when I'm giving you that advice, that's their advice. It's not mine. So the same thing with you guys that are independent agents out there. You are the authority figure, but it's not based off of just yours. That's why you partner with entities like us who have the best in the business. It's a collaboration of everybody's ideas. That's what you're presenting to the client. So it gives you that much more clout. Like if I said if you go in there saying, this is what I think, that's great. And you can do that as long as you're an expert. But if you don't feel confident in it, or maybe you just don't have the experience needed, or whatever the case may be, just know that you have people like Messer Financial who can give you that advice, that can give you that confidence, because you know that what you're going with is the best idea, because it's what everybody's thinking. This is what we're all come to a group decision about. So that should give you that much more confidence when you're presenting it to the clients. Don't ever be afraid to offer a product because you don't feel like you know it real well, because you have those resources. Use us.
Man, that's awesome. You get me excited. I'm ready to go write some business.
Yeah.
Good.
Listening to that.
Passionate.
That's right.
Good.
Yeah. So before we wrap it up, I know we're trying to get the time short, but I just wanted a question. So, Jeff, how many times have you been out to these trade shows? I mean, for over the last 9 years, or have you been going every year? Or?
We've gone to this particular one three or 4 years in a row now, I think, and we've continued to see a steady growth and shifts in participation with agents and vendors and carriers. So I think it's a good thing. Again, I go back to don't spend your day on the internet, right? Listening to a lot of speculation or whatnot. Talk to us, talk to the folks on the marketing team, find out the truth. That's what we're here for. And just remember that it takes what it takes. There is no substitute for work. Yeah, get your appointment book full, go see those people, learn through experience, use us as a resource, and we're here to support you in whatever your goals or dreams are.
Yeah. Treat your business as a business.
Yeah.
I think that's one takeaway that I have found over the years in this industry is talking to agents. A lot of agents, I'm just Joe Agent, right? You are your own business. Right. Treat it as such, right? Invest in yourself, believe in yourself. But I think that's the key to what Jeff said is you got to get up and go to work every day if you want to see success.
You got to be careful because you can fall into the fallacy of getting ready to get ready all the time. Yeah. And then you find out, I've been to meetings this week and I didn't go see anybody.
You could literally sit on your computer and watch webinars from every carrier that we have on a weekly basis and never be able to leave your house.
Yes.
I think as Roy used to say, it's lining them pencils up. I'm lining my pencils up, but you never get to be anywhere beyond that, right? Yeah. So I always thought that was a funny one. But to that point, again, there is what Jeff said. There is no substitute for getting up and going to work and putting the grind on. Because if you want to be successful, there is no substitute other than the work.
Your clients are going to teach you as much about what you need to know. Gosh. Like we can talk about this all day long, but until you get out in the field and experience what they're asking you for, and then you can come back and say, this is what I need, and then these guys will have it for you.
That's the best learning curve.
Dude, that was the most invaluable experience I ever received. In a short time I took away from Messer, I went out and personally produced. And I got to say that was the best learning experience I ever had. Yep. Because when I started at Messer, I was just a marketer. I'd never sold anything, right? I got licensed within a week. And then I was on the phones recruiting. I had no idea what I was doing, but I figured it out. And to Jeff's point, a lot of it was just asking questions and just listening to what the agents had to say. So a lot of my experiences and my learning experiences were just from asking questions and listening. Mm-hmm. And I think that's something that a lot of agents sometimes fail to do is just ask the question and just shut up and listen. They're going to tell you what you need to know, right? So I think that is essential for any business, but especially in sales and insurance is ask the question, and just listen.
And let's not forget, too, Bill Rice and Roy Messer, the two owners of Messer Financial, started off as independent agents. They were just like everybody else. Everybody starts at even the largest companies, Amazon, all these huge companies started off with just one person with an idea, and they just kept working hard and putting in that effort. And then they just kept doing it over and over again and expanding and keeping their mind open and collaborating and everything else. And that's how they get to where they are. So even though you may be an independent agent, you are your business. You are growing. That's how everybody starts. And whatever direction you decide to go, that's your choice. But just make sure you do it the right way, and you just can never fail.
Yeah, I think Bill likes to close a lot of his conversations with agents when I've seen him present is, why not you? Why not you?
Yeah, absolutely.
If you see somebody in your area and they've got the billboards and they've got all the things that you want, why can't that be you?
Yeah, absolutely.
So talk to us and we'll help you get there.
Yeah. Justin, same question to you. Like, you've been out there a few times, how has that, affected you, with being a part of those? Has it helped you have better conversations? Has it helped you, identify some things and put some things in place? I mean, do we get a lot from going to these things where?
Absolutely. But I think number one for me, again, I talked a little bit earlier, the positive energy. I'm an optimist. I feed on those kind of environments, and that really gets me amped up and fired up. And then I feel like I come back and I'm even more passionate about what we do, because it is exciting. And there's a lot of cool stuff, the networking, some of the classes, and just the interaction day to day, talking with agents, agencies, carrier partners. I mean, to Micah's point too, the collaboration and opportunities to sit down and talk with some of our carrier partners and strategizing about, how are we going to, grow this year? What are our headwinds? What are our tailwinds? So I think, every day, and every interaction, I'm able to take something away and bring it back, whether it's to share with the staff or just implement into my daily routine, or looking at how I'm going to strategize a little bit differently according to what our challenges are going into this next cycle of AEP, OEP, right? So I think I try to take something from every conversation and every meeting I have there, and try to turn it into a benefit for not only myself, but my teammates and the organization as a whole.
I'm glad you said networking too, because that's kind of where I was wondering, I always feel like I get so much out of just hanging out with people after the classes and seeing what they're doing in their areas, and, just getting new ideas.
It is. I think
business.
that's, and to Jeff's point earlier, we are pretty friendly with some of our competition. So it's nice to talk with those guys sometimes too, because, just kicking different ideas around. And I've always been a firm believer in a collective group of ideas is far stronger than just one mind. Right. So I think the collaboration and just general conversation we have with partners or even competitors for that matter, again, there's always some nice takeaways from that. And honestly, the networking part is probably one of my favorite things. Yeah. My wife likes to joke that, I could talk to a brick wall and have an hour-long conversation. So I probably could. So I do really enjoy that aspect of the event.
And there's also, I think, a peace of mind to know that you're not alone. And what I mean by that is just knowing that other people are dealing the same challenges that you are. Because sometimes you feel like, everything always happens to me. But to hear other people, they're like, yeah, we're facing the same things, but this is how we did it. And a blending ideas of how you can get through those challenges, and knowing that you're not alone, that you're on this journey together. That's why independent agents partner with entities like Messer Financial. They want to have that support structure, that the people that they can listen to them and hear what their concerns are and help them work through things. Because I'll tell you, if you're doing this business all by yourself, it can get real lonely. And that's just something that I know I know I'm stronger together than by myself.
Look, I'm not into soap operas, but let us be your guiding light. Right. Because I think there's a lot of people who want that support and want that comfort, knowing that we're here to support them and provide those answers.
Yeah. Time to wrap it up.
Yeah. Yeah.
And don't forget too, guys,
this year's Oscar for cheesiest.
Don't forget too that we do have our Top Producers Summit every single year. And I would love for all of you agents who haven't been able to qualify to one day be able to qualify, because that is another thing. Of all the things we just discussed with the conference that we were just at, it's the same type of things. It's the blending of ideas, the top producers across the country coming together to really just go over what challenges they're going through, what they're doing to succeed, and also the carriers there, and all the things that we mentioned is the same things that happen at our Top Producer Summit and other conferences. So, don't be afraid to come to those things and interact and ask questions, because one thing I know about business owners is they love to talk about their business. So they're not afraid to do so. They're not afraid to give you advice. We all want to help each other grow. So
you've been going out to these as well for a number of years. What do you think?
A number of them. I think over the years we've attended probably 4 or 5 different conventions, and ranging in size and what their focus is on, right? But I think it's imperative to understand what's going on across every spectrum of the industry, so we can be as knowledgeable as possible and understand the whole picture, not just a piece of it.
Well, I mean, if you've seen any, and the reason I asked you guys how long you've been doing this, and going to these things, because I'm just curious about like what's is there any one shift from how it was 5 years ago to now? I mean, like what's the
a lot more money is being spent. I tell you that much.
Okay, more money.
They're larger,
They're
grander.
bigger.
Well, I mean, it's our responsibility as officers and executives of the company now to do a lot of reading and research. So throughout the day, we're all doing that, and then getting together and talking about the things that we've seen or found or heard, and then having conversations with agents and carriers and so forth. Tremendous shift in the way technology is used to create opportunities. So to stay up to date on how all that's taking place, I mean, that's why compliance has become a huge component of our success as an organization.
And I'll give you a perfect example of that. Just a few years ago, Jeff and I had the opportunity to go to it was called LeadsCon. It was called Geek Out. We went to Geek Out, and that was in Los Angeles, and they asked me to speak there. I knew nothing at the time about lead generation or what was entailed in it, and just listening to each person come up and present on how they do it and all that's involved in this thing. I mean, I was absolutely blown away to see how much money was spent, how many resources, how much time, how big these organizations are that generate these leads. And again, it just opened up my world to a whole nother avenue that I never even thought of before. But because I was willing to at least open my mind enough to listen, then I can determine whether or not I want to get into it. But I just think you need to keep your mind open on what's available out there and listen.
That was a pretty eye-opening experience for us.
So you literally geeked out.
Well, you did kind of geek out. You walked in and you've kind of got a preconceived notion of how leads are generated in industry. And then I'm sitting there for 3 hours and I felt like I was back in a behavioral psychology class in college again, because these guys are that detailed.
They went deep.
And what they do and how they do it. Oh, yeah, it was.
But not only that, vice versa. We opened their world up because they had never had anybody from the health business. They've always just sold the leads to us, but they don't know how we work.
They never thought about what happened once that name is created and passed on to maybe whoever purchased it to contact that person. They never thought about what transpired after that.
And I was fortunate enough to be able to go and present to these guys. So all of these lead vendors, the owners of these companies are sitting there and they're just looking at me like, deer in headlights. They were like, oh my gosh, this is what really goes on in the health world. So again, it's just the open conversations that we have that just blend everything together. Even though they sell those leads to us and we buy the leads, we have absolutely no idea what goes into each person's world. So once you get into it, it really does open your eyes on a whole bunch of new avenues and opportunities.
That's what I'm thinking. Like as an agent, you don't think about those things. You look at a brochure or some marketing piece and you're like, why is this the way it is? And I'm just, okay, that's the way it is. I got to go sell it. But I don't think people realize the insight and the level of communication that goes into some of these things. So it's great to hear that.
Well, that's our job. Yeah. Our job is to do the things that allow you to go out and be successful in the field longer, and let us handle those types of things for you. So that's why we do that.
Well, thank you guys for sitting in today. Thank you for letting me host this. Really, I think the theme and the takeaway that I'm hearing a lot of is the networking abilities and the diversity and the technology that's coming out, but the overall is just making sure that you're educating yourself, with what's going on in the marketplace and opening yourself up to other opportunities.
There's still a huge upside in our industry. We hadn't even really tapped into the potential of the agents that we work with.
So today, Micah, just to let everybody know, we're doing something a little bit different. This Q&A stuff back and forth, I think it's really helpful. We've had some success with this stuff in the past, so that's kind of why we're setting it up like this. We do have one slide to show y'all, which you might already see on the screen, and we'll discuss that here in a little bit. But we got a lot of questions surrounding ICRA. We got a lot of questions surrounding ACA these days. There's always all these changes coming out. You and I sat a couple months ago and talked about the changes that are happening with ACA. So this is just another part of that, and trying to understand ways that we can go out and write business and get market share here. So,
exactly, and anybody who's been in this business for a long time knows that it's just nothing but changes, right? Every year it seems like another change. So we're always constantly having to evolve, look for other opportunities, et cetera. There's plenty of successful agencies that do one thing and they do it very, very well, and I have no problem with that. But I think with the ever-changing times, you at least need to keep up with whatever's going on, and then make that choice yourself whether you want to go into it. I can tell you, when I started in health insurance, all I wanted to do was be on the group side. That's what my whole goal was. And the way I was doing that is when I first started with the health insurance carrier, I was on the individual side. And I was like, hey, well, this is my gateway into the group side. This was pre-ACA. So that was back when plans were actually medically underwritten. And I'll tell you, at the time, also, because those plans were medically underwritten, not everybody could get health insurance at the time. It was a huge benefit for an employer to be able to offer health benefits. In fact, people would choose who they're going to work with just based off of those benefits. Things have kind of changed since then, where then now the ACAs come in, and with all the SEPs that came out, it kind of moved to an as-needed type service. So that kind of brought it in. But these new regulations and all the changes that are coming in, the removal of the 150% federal poverty level, et cetera, it's going to be a little more difficult for people to sign up, especially all year round. So it's coming more leaning back towards the group side, where those are going to be very important benefits that employers can offer employees. And when you can save them money, save not only the employer money, but also the employees, and customize and everything else, I think that's where ICRA and QSARAs are really coming in and being more and more popular. So I think this is the perfect time to be doing something like this.
Yeah, and to your point, I think employers are still trying to be competitive and recruit and attract and retain good employees. So, they got to figure something out. And with the rate increases on the group side, sometimes it's hard to do. And so we have to be mindful of that, and it's a great pain point and selling point for the agent when they're going in to talk about this very thing. But, but what is ICRA? The definition of ICRA is individual coverage health reimbursement arrangement. Okay, it's an HRA. And if you're familiar with HRAs, it's the same concept. It's providing you a certain amount of money to go purchase or pay for or get reimbursed for health insurance premiums or medical expenses, whatever we define. But I like to tell employers it's a defined contribution. And that's the part. I think with a lot of employers, they're looking at rate increases across the board. There's a lot of work on HR folks. You've been in the group market. It's one of the things. I even had a rule like you don't mess with the HR people on payroll day, things like that. But because they're very tied in with their employees, and there's a lot going on. So when you add health insurance, you add group health to their plate, it gets much bigger and it expands for them.
And it also gives, I think, some control to the employer, right? When you're talking about a defined contribution, that means that in a time when there's so much unknown, what are the rate increases going to be, et cetera, you can really give some control over the chaos, right? So it's like, okay, so this is what I feel comfortable with, and this is what I can do each and every year. So it gives them much more control and flexibility with what they're able to offer their employees. Yeah,
controlling cost. That's the biggest part of this. So So if you're wondering, what the one big selling point for ICRA and offering these plans is, it gives the employer the ability to control those costs and be flexible. It just things like imagine giving your team just a monthly health budget instead of locking them into a group plan, and so that's basically in a nutshell what we're looking at with ICRA.
Who would be a good candidate? And look, and a lot of you guys, I get it. It's a new product, and a lot of times, and even myself, if I'm not real confident in a particular product or a specific carrier, I have a hesitance to actually offer it to them, right? Because I don't want to get down a rabbit hole where they start asking me questions and all I keep saying is, I don't know, I don't know, I don't know, right? Because that just makes me look like I don't know what I'm talking about. And then why would they even come to me and ask me those questions? How can Messer Financial help me with that type of stuff?
Well, first of all, as far as ICRA goes, now we got another part of this is called QSERA, and we'll touch on that in a minute. But for this conversation, we're going to focus on ICRA. So ICRA is an employee group of any size, as long as they have one W-2 employee. And the W-2 part is important because we've got a lot of small businesses out here and small owners that are just sole proprietors, so they're LLCs or anything, and so they're not really W-2 employees. So they have to be a W-2 employee of the size of one or more.
Okay.
So that you can go from one or two employees all the way up to 1,000 employees if you want. So that's it encompasses everybody in that group size.
And that's great for even family businesses and maybe just a husband and a wife work are there or whatever the case may be. There is no group basically that's too small.
Right. Absolutely. Yeah. So if you're looking at what the employer is going to deal with on a day-to-day basis is they're going to set an allowance for each employee based on class. We'll get into classes in just a second because there's 11 of them, and so we got to find the right one. But they're setting a certain amount for each employee. So if I said, "Hey, Micah, I'm going to give you $1,000 a month," I'm just making the math easy. $1,000 a month to go purchase your health insurance. You get to go and pick the health plan that best fits your needs. Like your situation is going to be different than mine. You have kids. My kids are grown, so my health insurance situation might be different. For another person out there, it's going to be different because maybe they're in the years that they're looking to create a family and make family, and they got little kids. So everybody's got the same different situations. So when you're asking everybody on the group side, hey, we're just picking one plan and it's a one-size-fit-all, it's really not conducive to everybody's situation, right? So and that's the biggest, the beauty of all of this is really it comes down to two things. The employer can define a contribution and control the amount of money they're spending on a monthly basis, and the employees get to go and purchase the health insurance that best fits their needs for them and their family.
So I could base those decisions based off of maybe the benefits that I was most interested in, or the prescriptions, or whatever the case may be, providers. If I had specific providers, you could customize it for each person individually and really fit that plan to make it their own.
Right, absolutely.
And basically what you're saying is, from an employer's perspective, ICRA really can handle any size group whatsoever.
Size group.
And that would be a great fit for them, as long as the price, obviously, because it's very price driven in this industry.
Yeah, sure.
That's what kind of drives the force in almost all lines of health insurance. So as long as the price fits, then the product should fit.
Yeah, and let's be clear from the get-go, okay? ICRA is not a one-size-fit-all, and it covers everything, and it's going to take care of every problem that or issue that a business owner has. There are going to be times where the group plan is going to be the better fit over an ICRA plan. Okay, there's just going to be situations like that. Especially when you get larger accounts, or they got good claims experience, or not having the rate increases. There's going to be situations. For now, you always want to revisit those. I'm not saying like if I come to your business and you're like, we're good. I think we did some math and we looked at the different pros and cons to having a group plan and having an ICRA plan, and you think that the group plan is what best fits us right now. But that's just right now. You have some claims and you have your rates go up over the next couple of years. We can revisit it. Yeah. So it's always an opportunity.
So maybe you can explain to me a little bit, because again, I'm predominantly on the individual space. So this is kind of like a hybrid between group and individual. So I'm still trying to figure out exactly how it works. So how would you say ICRA actually works, like day to day?
Okay, so day to day, I'm going to use for an example. Scenarios seem to be the better way to explain some of these things. But day to day, I'm going to come to you and I'm going to say, would you like more of a defined contribution? And you say yes. So I'm going to provide you with a plan document that's going to spell out every single thing that we're going to do. It's going to decide what money you want to pay toward certain employee classes, how much money you want to pay, and how you want to set that up. Then the TPA, there's a third-party administrator that's going to to help you administer that process. We're going to help you administer that process. But on the day-to-day stuff, it's really the initial setup is the legwork that the employer or the HR person is going to have. After that, the way we set this up is pretty much, set and repeat. It continues to roll every month. You just fund those dollars for somebody to purchase health insurance. Now, as far as the enrollment goes, I want to make sure I tend to go on a rant about this one subject, but it's probably, to me, it's the most important part of this. Explaining the benefits is one thing. We can all read, we can all, talk about these programs, and we can, read from a brochure, but the key to this is not treating this any different than you would a group enrollment. That is the biggest key to this. For instance, I'm not going to set you up with an ICHRA plan and say, okay, Micah, you're set up. You're going to fund your employees with a certain amount of money every month to go purchase insurance, and good luck. Have at it. That defeats the purpose of why I'm there. I am there to sell policies.
Right.
Okay, ICHRA is just a payroll function. It's just an accounting function at this point, right? It's just a way that we're going to do the payroll and a way we're going to administer funds. But I want to sit with every single employee and have enrollment conditions. Enrollment conditions are the key to this whole thing. If you can't get enrollment conditions, I don't care how great the ICHRA sounds, you're not going to sell policies.
Right.
So, my personal opinion is that I want to sit down with each of your employees one-on-one and explain these benefits. I can pull up the marketplace, I can pull up my MFG, and I can go through the different plans for you, and then I can go through the different plans for this employee, and they can pick and choose the types of plans that they want that best fits their needs. But the key is that I set up enrollment conditions and I get those one-on-ones. If you do that, and you treat this just like any other group enrollment or any other enrollment with any other group health insurance company does it the same way. We're not changing any of that. That's never going to change. So I told you I'd go on a rant about enrollment conditions. But, it's just important.
And it's interesting that you're calling it, it's just like a group enrollment, because the reality and what I've seen, and maybe you've seen the same thing, is most of the people that are marketing ICHRA and selling ICHRA are individual producers, not the group guys.
Right.
And it's kind of funny to me because I think about when Medicare Advantage first came out. There was so many agents and agencies out there that only sold Medicare supplements, and still to this day will not sell Medicare Advantage. They're just like, you just get stuck in your ways and you just keep doing the same thing. And it works for them, and that's great, no problem there. But there's a lot of other opportunities. And if group and the guys who actually have the relationships with the groups aren't offering something like ICHRA, and an individual producer comes in behind them and says, hey, this is what we can do, and we're in a state where the individual product is lower than the group product, then I'm going to crush them and I'm going to end up taking that group. So it is very interesting. You're saying it's a group enrollment, but the most of the people that are doing it are the individual side guys, because we're open to changes and we're able to do things and see things under a new light. So I think that's another reason why a lot of the individual agents really need to be taking a look at this, because it's something that it could be a game changer. And when you're like, we talk about ACA and Medicare Advantage, why we love selling it is because it's zero premium, right? Like anybody can sell a zero premium. But how about if I come over there and I start the conversation with saying, here's a bag full of cash that I'm saving you right off the bat. Now let's talk about how would you like to do something like that? And to me, that's an even easier sell than actually a zero premium.
And it's tax free.
Exactly.
That money that them funding that, it's going to be tax free. So you're saving on taxes as well. However, just one of the questions that we have all the time actually is that can they get the subsidy also? You can't double dip. Okay, this is governed by the IRS, so I know all of us can understand that that's not somebody you want to get sideways with. So you can't double dip. So if you're getting this ICHRA plan, you don't qualify for a subsidy. So don't be thinking I can get that bag full of cash and then go over here and get a subsidy and just that's my money.
Sure.
So, and a lot of times, we're going to talk about how we define that in that process. But what other questions we got?
What about if, let's just say that I'm the business owner, can I also participate in my own ICHRA?
Yes, if you're a W-2.
If I'm a W-2?
If you're a W-2.
Okay.
You have to be a W-2. And that's the key. A lot of times, small business owners set themselves up as an LLC, or they're, but with the C corps and things like that, usually everybody's a W-2. But you got to be clear on that one. It's just for W-2 employees.
Now, obviously, when you're talking about an employment opportunity, there's all different ranges of income. There's all different ranges of age. What are the products that you can actually and buy with the ICRA dollars that they're.
So if you're just talking about premiums, it can be on or off exchange marketplace plans as long as they adhere to the ACA guidelines. And if you don't know that it's those 10 minimum essentials that you have to have. It can cover Medicare Parts A and B and C, and so it can cover the Medicare Advantage. Sometimes in some situations, I'm saying this in a possible, maybe sometimes manner, with short-term medical plans, but they got to meet those 10 minimum essentials. I know they're trying to experiment with some products out there that are, make these short-term medical plans a little bit more like ACA plans, but, usually with that comes some underwriting. So if there's underwriting or if they don't meet those minimum essentials, short-term medical plans do not count. Dental and vision, things like that. So if we set it up, if I set your group up and it's just premium only, if we're just doing premiums, then those are the parameters that we have.
But with those defined contributions that I'm receiving from the employer as the employee, I can put that to whatever really premiums that I want based off of the health plan that I want. So again, back to that customization factor.
Yeah, as long as it falls under the typical HRA guidelines. I think the publication is IRS publication 502, which kind of gives you those guidelines. So if you guys want to check those out and make sure you're familiar with that, I always encourage everybody to fact check and do their own research when it comes to this. I think we retain that information a little bit better. But but there's a publication that kind of lists out. So you can do premium only, which a lot of our ICRA plans these days they're just reimbursing the premiums. But there's other health opportunities that we can pay for, and there's prescriptions and But basically anything that falls under that HRA guidelines, you can add into that plan document to reimburse your employees for.
And I know we've been talking about some of the differences between the two, but let's really get into it because I want to make sure it's perfectly clear what the difference between ICRA and a traditional group health insurance product is, because when you're talking about it to the employer, you want to make sure that they understand what the difference is and what the benefits are one way versus the other. So if you could just give us a couple bullet points on exactly what is the difference between the two, I think that'd be very beneficial.
Okay, so let's call it a traditional group health plan is where, as a broker, I'm going to the carrier and I'm giving the carrier a census of all the employees in that group, and they're going to give me a rate. They're going to give me a rate for all the employees, and the employer is going to have to decipher, okay, this plan has this rate and this plan has this rate, so I guess we're just going to offer these two plans at these two rates. Now, as an employer, whether I put a percentage toward that, I can do that. I can say we're going to pay 50% of the individual premium, but you got to pay 100% of the family coverage if you choose to elect family, and then that group plan is pretty static. I mean, it's pretty set in place. So as an employee, you get two choices to pick from. It comes out the premiums come out of your payroll deduction. They can come out pre-tax as well, obviously, but that's the traditional group plan where everybody gets the same plan. The employer is driving that. The employer is choosing the carrier. The employer is dealing with the rate increases and trying to work with a broker on, how to soften some of the rate increases up. Now with ICRA, again, it's in the group market. We're not changing the company that we're dealing with. We're just redirecting how we fund these premiums and how we fund this insurance. Okay, so it's basically, instead of me having it come out of my paycheck, what I'm doing for you, Micah, is I'm going to allot a certain amount of money for you, and I'm going to either load up a credit card or I'm going to reimburse you, but you're going to be able to go out and you can work with that agent and go out into the marketplace or MyMFG and look at the different plans that you want, and you can sign up with all the multitude of plans that are out there in your area. So you don't have to pick from these two plans. So that's in a nutshell, that's basically what it is. It's just I'm defining a contribution on the ICRA side and letting my employees go out and choose whatever coverage they want in the marketplace.
So it's a little more of a deeper dive into exactly what you're most concerned about, what your needs are. You're really trying to fit it. Instead of saying, here's a blanket umbrella plan, everybody gets the same, we're just going to choose between one of these three plans, and usually it's always with the same carrier too. So this way you have multiple different carriers you can offer, and really the sky's the limit on all the different options that are available.
Well, think about it. So let's say you're the employer and I go to you and I was like, hey, I want you to design a plan based on the 12 employees that you have in this building. It would be impossible. there's no way you could fit all of those needs. I think there's an Office episode about that very thing where they're trying to fit everybody's thing into one bucket, and it just doesn't fit.
Right, that's what you said.
Yeah, so it's you got to look at it like the employee has the freedom to pick and choose what they want. Where in a group plan, you have to pick and choose what the employer tells you they're going to be offering. Right. And so, yeah. So I know we say it in a bunch of different ways here, but whatever way helps these agents kind of understand and wrap their head around it. Again, ICHRA is not health insurance. It's just a system of doing payroll. It's an accounting function, and it's just a redirection of how we're going to fund health insurance. Whether we're going to fund it through your payroll and you pick these two plans, or we're going to fund it in an ICHRA plan and you can go out and choose whatever you want.
So, and I know that you mentioned too that ICHRA is not really, it's not a one size fits all for everybody, right? And I keep hearing this other thing about the QSERA. Can you help me understand the difference between the ICHRA and the QSERA part? What's the difference?
QSERA is Qualified Small Employer HRA, Health Reimbursement Arrangement. QSERA is only for employers less than 50 employees. Okay. There's a few there's some stricter dollar amounts when it comes to QSERA. There's a little bit more regulation, hoops, if you want to look at it that way, that you got to jump through. But ICHRA has no size limit, no contribution caps, things like that. So as we're moving forward, QSERA might be a possibility for those smaller employers they don't have a lot going on, and it's like I just want to reimburse my premium. I got like 5 employees. It might be a situation for that. But let's look at growth. I mean, let's say you got a group with 35 employees. Okay, are you going to grow? If I'm asking you as an employer, do you plan on growing?
You would hope so,
we're
of course,
expanding. Right? We're moving forward. Okay, well, QSERA might not be the best fit because the moment you get over 50, we're going to have to change the plan document. So so why not start out with an ICHRA? I've kind of racked my brain about this one, and I feel like it all points back to ICHRA is probably the better option in a lot of cases. You're not going to go wrong with it if that's what you're looking for. But QSERA has its place, and it has some opportunities there.
Can you think of a reason why somebody would pick a QSERA over an ICHRA?
I'd tell you, not really, man. I've kind of went through the scenarios. I mean, maybe if they're a small employer and they just wanting things to be a little bit just simple, they don't have a bunch of employee classes or something like that, and it's an easier plan document. But ICHRA is just as easy.
How about subsidies? Are they able to get a subsidy through QSERA if it's available?
Nope.
So you still can't even do that either.
No. So it's just really you can't double dip on this gig. You gotta pick your lane that you're supposed to be in. And for an example, I think I was telling you this. I was talking to a small business owner just yesterday. And matter of fact, I got a 3:30 call with her today. She has an accounting firm in Georgia, and she has one employee. Both of them are W-2s. So she does some taxes and some accountings for some small businesses around there. And she has group insurance. Her group insurance has gone up considerably over the last couple of years, and that's her biggest gripe and complaint and issue is that the rate increases just keep happening. So I looked at the first thing I said to her is, well, would you rather define a contribution, whether you have a fixed dollar amount that you don't have to worry about these increases? And she goes, well, absolutely. She goes, I'm an accountant. What do you think? So I said, okay, well, we have this program called ICHRA, and we can define a contribution for you. I went on MyMFG and I looked up some different plans and kind of what would fit her needs, and based on her information, she sent me some information about her, and it was considerably less.
Wow.
Considerably less. The plans were, her plans were upwards of $1,500 per person, and I found some plans that $800-900. So it was, I said, if you define a contribution, are you comfortable paying that $1,200 right now? She goes, well, yeah, it was getting a little pricey for me. However, this rate increase going up to $1,500, I can't afford it. So I said, okay, well, let's look at these options. So today I'm going to be sitting down here and going through some of the options with her, and I matched the plan. The plan design on the ACA side, I tried to match it as closely as I could of what they're having with group. So it worked out where this is one of those situations I think is going to be promising for an ICHRA plan.
Well, again, it all comes down to you basically talking to her that says, hey, we can control your costs, right?
Yep.
and we can save you a lot of money. And I believe it, and I'm glad that you mentioned that because, again, like we said, price is a huge driver on what is the best option for the clients. And I think all the agents can see, if you're looking at your screen right now, is you can see the map that's on there.
Oh, the heat map, yeah.
The heat map, yes. And what you're seeing there, so everybody can understand what that is that is a heat map of where the individual product is a lower premium than a group product.
So the green.
The greens, correct. So the darker the green, the bigger the advantage. You mentioned the person that you were talking to is in Georgia.
Yeah, in South
and if you look
Georgia.
at the state of South Georgia,
Yeah.
that's the darkest green you can get, right? So any employer that you talk to that's in those dark green areas, you're at least, if nothing else, going to be able to help them control their costs and lower their premium.
Yeah.
And if you can't sell that, then you might want to start thinking of a new career because that's probably one of the easiest sells that you ever have. I get it.
Yeah.
A lot of you are still going to think, well, I'm scared. I don't know enough about this, but that's why we're here to help you, to walk you through this process. I promise you, we're not going to leave you hanging, and we will be able to walk you through the sales, the presentation process, the enrollment process, everything. So again, don't let the scare of the unknown prevent you from these opportunities because they're, as you can see, they're in a lot of different states right now. So if you're selling in those states or you're looking to market and wondering what states you have opportunities in, I can think of many better than those dark green areas.
Yeah.
So going back, and I keep mentioning the control of the health benefit costs. Mm-hmm. How does ICRA do that? Can you go into a little more an explanation of just how that works?
Well, like in that situation I just told you about, they're having rate increases left and right, especially the bigger accounts, the claims experience, those kind of things. But it's like some of the stats are showing a 20 to 40, 50% savings in some of these situations. I proved that yesterday when I talked to that accounting firm. Mm-hmm. That it was proof. I mean, she sent me her benefits. She showed me her rate increase. It was literally $1,500 or more, just over $1,500 for both of these ladies in this group, and she just can't afford those rate increases. But she can afford a certain amount of money to put toward both of their health insurance premiums. So if that's the case, why not implement a plan that we can go out and go to the marketplace and go find an individual ACA plan that might cut that cost down? And also, I found that both of their plans were the same, but as soon as I started talking about that, she immediately started asking me, okay, well, can my employee can pick something different because she might be in a such different situation. And I was like, yeah, that's the actual beauty of an ICRA plan, is that each employee can choose their own insurance based on their needs for them and their family. And that's how it really helps control costs. And plus, you're not paying taxes on the money that's funded in there. The employer is still, seeing a tax break on the money that they're putting toward those dollars. So that's just that. The control cost is really getting away from that model of, hey, what's my increase going to be this year going into 2026 or 2027? And they might say, okay, well, we're going to have a 12% increase, right? If you've been in the group market for any length of time, you will know that just because I get something from the carrier saying that you're going to have a 12% increase does not mean that it's always just going to be that 12% increase. There's always something added. There's always, oh, we need to add this, or hey, we need to fix this, or this benefit doesn't look right. But the other part, gosh, people don't realize what happens on the other part of that is a lot of times you're not able to choose the same plan that you're in on the group market. Like, for instance, this year, let's say we both are in the same plan and we both have a $2,500 deductible. Okay, so what happens when a rate increase happens? Well, there's nothing we can do about the rate increase, Micah. Okay, well, how do we get these rates down? What are they going to start doing? Mm-hmm. They're going to start chipping away at that plan. They're going to start adding deductible. Okay, well, if you don't want this rate increase, we're going to have to increase your deductible to $5,000. So right out of the gate, you're not getting the same benefit. You're having more out-of-pocket cost, and that's really the driver for all of this is how do we control costs? Well, we can define a contribution. We can choose the right plans that we all want to be in. We don't have to, just succumb to the increases and the benefits getting knocked away. I know that if you're over 40 or 50 years old, you've been in a situation where, 20, 30 years ago, we had deductibles at $2,000, $2,500 was kind of high, right? And then fast forward, what are our deductibles
Yeah,
now?
now it's over 10,000, right?
Yeah, or max out of pockets. I mean, it's crazy. So, and you're trying to talk to somebody who has who's making, let's say, $40,000 a year, and their max out of pocket is $10,000. It's a quarter of their income every year that they're going to have to fork out. I mean, how are they going to do this? We've got to find some other options. You and I did a webinar back in January to talk about what's next after OEP, right? What's going to happen in the ACA market? What's the one thing everybody keeps asking? My over 400% federal poverty level, subsidy went away. So my $800 premium went to $3,000, and everybody's calling in and asking, what can we do? What are our options? This is a viable option to help offset some of those costs. So, yeah.
So we talked about a lot of the advantages for the employer and the employees. Let me talk for a second about the opportunity and the kind of business that this is for the agents. And I really want all the agents here to listen carefully to this, because when you're talking about the quality of business and the sustainability of it, right? So when you're talking about a group policy, let's say that I'm the agent, I just sold this employer a group policy and I've got their employees on there. How many of those employees know who that agent is?
No.
Probably none.
Hardly any.
Okay? So my relationship is only with the employer. Now, on an ICHRA plan, I have to meet with every one of these employees and I have to have these conversations with them. So I'm not only building the relationship with the employer, but I'm also building the relationship with the employees.
There you go.
And when you think about that now, like if my employer goes, I'm just going to change group plans and I'm going to change agents, no employee is going to have any objection to that because I don't even know who they are.
Right.
But with this, well, that's my guy. He knows all about my family. He knows everything about it. So they're not ever going to let that employer leave me because I have that personal relationship and they know that I've dug in and I've built in the plan based off of what their needs are. So when you're talking about a relationship and a retention type structure, I can't think of a better way to do this. And then on the other side too, to appeal to the greed of agents and agencies, one, you're going to keep getting paid every single year on those policies. And number two, you're not just getting paid on one policy. You're not just getting paid on a group policy. Now I could be getting paid on indemnity policies, critical illness policies, dental policies, whatever, life insurance policies, whatever it is that I know that these families need, I'm getting paid on each and every one of those policies. So we talked about all the benefits that we're doing from the employer perspective and the employees, the flexibility, the control, and all of that. But from the agent standpoint too, I can't think, if someone said, Mike, here's your choice of what you want, you can have as far as what your book of business is, and someone said that I have a whole line of ICHRA employers, employees, I'd take that business every single day for as long as I possibly can, because there is no better, in my opinion, for retention reasons and for just amount of products that you're going to be getting paid on, and also doing them a service. So it's not like I'm even trying to rip them off to get a higher. I'm doing exactly what they need, and I'm prospering for that.
Yeah.
So when you're in that situation as a salesperson, you should be wanting to talk to everybody because you know that, one, you're going to help them, and two, you're going to be helping yourself. And when it's a win-win that way, you've got to take advantage of those opportunities. So again, this is another reason why adding this to your portfolio is an absolute goldmine for you, because it's win-win for everybody.
But you hit the nail on the head. I mean, why are we all here?
Right.
For retention. We don't. Nobody wants to just keep doing this over and over and over, and having to start completely over next year. We're doing this for the renewal and the trails and all that goes along with it. And even better, Micah, if that employee that you wrote, if they leave employment, the coverage doesn't go away. Right. It's their policy. Right. It's not like they got to go on COBRA, or it's not like they have to leave it with the group. It's as far as the IRS goes, it's considered it falls under a lot of the ERISA requirements for, because it falls under the group health title. But other than that, it's their policy. They can take it with them and go another place if they want to.
And why wouldn't they want to take it with them? You've customized it for exactly what they're looking for and what their biggest concerns are. Now, obviously, times change and things might change as they go, but you can always make adjustments. That's why they have you, and they trust you to do what's in their best interest. As long as you're doing this with their best interest in mind, there is no way you can fail. There's just no way in doing this. And I know we talked about some of the benefits for the employees, but let's really dig into it. What are the biggest benefits for the employees?
So the employees is actually they get a plan that fits their needs. that, as far as I'm concerned, that's the biggest benefit of all for the employees. It's a tax-free reimbursement, so they're getting the same tax benefit on those premiums as they would with a Section 125 or a cafeteria plan. But and probably the second biggest part of that, selfishly, is the portability. Is the fact that they don't have to leave it with the group. I can go in, they're probably going to hire, let's say they hire a new employee. That's just one more employee for me to go see, but I keep this person out here. That's the key. And not only that, I mean, this kind of benefits the employee, but benefits a lot of the agent, is that when we ask for referrals from every single person that we're sitting down, those people, everybody that knows somebody who's turning 65. They know somebody else who needs coverage like this. So it's a great way to individually ask for referrals instead of asking the group, one person for a referral to get another group. You got 20 employees now. I got 20 other people that I can ask for referrals from. So I can go on a tangent on the referral side of that too. So,
sure.
Yeah.
So we've talked about the whys on why the employer should do it, why the employee should do it, and why the agent should do it. Now let's talk about the how. How does an agent or agency start the ICHRA conversation with a business owner?
If I could provide you with a defined contribution, would that be better than what you're going through on the group side? Is there a difference? But I would just start asking questions to the employer. Do you like getting these rate increases? Of course, you're asking leading questions. What kind of classifications do your employees have? Do you have a lot of different classes? Do you have employees that are in different states? All of those things. You start asking those questions. When you understand that this is an accounting function, right? You understand what the classifications are and how this kind of works. You start asking questions, and finding those pain points, right? It's no different than us going through a summary of benefits to try to find pain points to sell a hospital indemnity plan or a life insurance plan. It's no different. I'm going to be asking you, have you had rate increases over the last few years with your health insurance?
Mm-hmm.
Yep, sure.
Of course, everybody has.
Yeah. Have you been able to keep up with those increases? Would you rather just continue to go down that road and have those increases, or would you rather define a contribution? Mm-hmm. Would you rather be able to control cost? What employer is not going to say, I don't want to control cost? There's not a lot. I guess there's two things you can't overcome in sales. That's ignorance and poverty, and sometimes you'll know when you're dealing with both. So, but if somebody doesn't understand this, it's just our job to ask them the right questions to help them wrap their head around and see the pain points that they're having. I said this morning. We all know how much we go through getting ready for AEP and OEP, right? Employers do the same thing when they're trying to get ready for a re-enrollment or a rate increase or their plan year that's coming up. They're all doing the same thing. It's a lot of work. The more employees you have, the more work it's going to be. So, I would just start initiating questions, based on what like, what's your biggest frustration, with your current health plan? How much did your premiums increase last year? Do your employees? Do you really think your employees like a one size fits all type of benefit? I mean, you're still talking to a person that still. I mean, I don't care if they're the owner or the HR person. They need benefits. They feel the same way as all the other employers. It's not like they're on this island by themselves and they're just controlling this whole thing. They're in it too. Mm-hmm. So playing off that, wouldn't you rather pick a plan that best fits your needs? I know that some employers probably pick the plans that best fit their needs, and then everybody just falls in suit. But those are few and far between.
But see, that's exactly what my point was with the relationship part. Like, I'm not just having the relationship with the employer, I'm also with the employees. And let me tell you, folks, for those of you that are wanting to grow your business, these employees have never been talked to like this before by an agent.
No.
They've never had somebody sit down and really get over it. And do you think that's going to change the way they view how they do business with insurance? Absolutely it will. And I can promise you, if you build the relationship and you do it the right way and they really do believe that what you're doing is in their best interest, what do you think is going to happen next? They're going to refer it to people. Do you think they know people that are in the exact same situation that they're in? Absolutely. And what better way to get into an employer than to go through the employees? Hey, I've got this person that somebody was telling me about, and he was able to save all their employees all this money and da-da-da-da-da. Next thing you know, you've got all these referrals coming in of
Yeah.
business owners wanting to come and have conversations with you. So each conversation that you have with an employer, you're not just having with the employer, you're also having with all the employees. So again, if you're looking to really kind of spread those tentacles out and reach out to as many people as you possibly can, that's a great conversation to have. So really, when you're having that one conversation with the employer, you're really having it with all the employees at the same time.
Right.
So what a beautiful way to get into the door, right?
Yeah. And like, how would you like to go? Like, we're all a part of these networking organizations and business networking organizations around in every county and every town and, all across America, right? Our agents are involved in those. How'd you like to be able to get up and talk about something different? Instead of the same old, you're getting up and talking about, and everybody in those networking situations, they're all business owners. And so now you're standing up and talking about something different. I guarantee you it's going to make people's ears perk up.
I mean, if you ever even just like people talk about, the T65 seminars or
Right.
whatever it is to get in front of people. Who says you can't do a whole presentation for just employers? Like
Right.
send out some kind of marketing piece to just businesses. And guess what? Businesses cannot be on the DNC. So if you're contacting businesses, I know that I can do this and just say, hey, are you interested in saving money on your health insurance? Are you interested in all the benefits that we talked about earlier as to why they should do this? Put that in a marketing piece, send it out to all the employers, and then just sit there on a Zoom call and have 20, 30 employers on there and just talk about it and see what you can get. And I promise you, just think about it. If you could just get 3 or 4, maybe even 5 on a call, my God, how much you just grew your business and just instantly like that.
Yeah, because that's 3 or 4 times however many employees they have, and that's your selling opportunity.
We've talked about a lot of times, do you want to fish with a pole or do you want to fish with a net? Well, this is a huge net you can fish with.
Huge net.
And you don't even need to wait for something to snag. You just drag it in and see what comes in. So, but we know why, and it sounds all good, but what kind of common objections are you getting when you're talking to these employers? Like, what should the agents expect employers to come back with?
I think one common question that you may get or objection you may get is going to be, my employees, HR managers, I've found, especially the smaller businesses, they covet their employees in a lot of ways, especially when it comes to health insurance. The HR manager is the go-to person for a lot of employees these days to answer questions and kind of give them direction. So I think that's probably something along those lines, like, maybe it's giving my employee too much choice or whatever it is. I think the rebuttal to that really is, I'm going to be here for you just like we would in a group situation. I mean, the goal, again, and something that can squash that rebuttal, the goal is, or objection, the goal is to get enrollment conditions. The enrollment conditions is a big part of that. If that's the objection, they're not going to understand this. I'm going to be here to help walk them through the process. I'm going to be their point of contact. The HR person is kind of always going to be that point of contact for them, but I'm still going to be here to answer their questions. I'm their agent now. And you're going to treat them just like you would any other sale that you make, away from this kind of stuff, on a direct side. So that's probably the biggest objection that I've had. Other than that, there's been a lot of one-offs, here and there, but the common denominator is, that part of it where an HR person or employer, really watches over, their little flock there. They're going to make sure that they have the right questions answered and pick the right policies and choose the right benefits. I can't tell you how many times I've been in an enrollment and I'm talking to a person. They're like, all right, I'll be right back. And they go and talk to the HR person about what they want and they come back and that's what they sign up for. So I see a lot of that. So that may be an objection. I think we just have to reassure them that we're going to be there to answer all the questions. We're going to do the enrollment the same way we're doing it on the group side. There's nothing going to change as far as that goes. So that's why I press on enrollment conditions as much as possible, because there's a big element to that.
Well, and to that point, so so let's just say that we've already explained the why to the employer. The employer's on board; they're ready to go. But we all know that it's the HR person that's going to be handling all of this and has to do all the work. And he's also going to need to talk to that person, and that person's going to have to give them the go-ahead or yes or no or whatever. And I'm sure they're going to have questions as well. So I guess my question then is, how would you explain ICHRA to an HR person? Because obviously it's a different pitch than you were doing on the employer, because you're trying to show them how they can save money. From the HR person, it's a different pitch. So what would you suggest on that?
I think the time and the energy that goes in, I would spend a little bit more time talking about that subject because I know that's a pain point. You know, it doesn't change. We're doing the same. We're taking the same philosophy with an individual sale as we are with an employer, as we are with an HR person. I'm just trying to find what their pain points are. It's frustrating for HR people to deal with these re-enrollments every year. It just is. And, you know, the employer's dealing with the rate increase because it's their money, right? The HR person is dealing with it from a time and a sweat equity, if you will, into this thing. They're constantly having to answer questions. They're trying to pick the right plan. They're dealing with different insurance carriers. They're filling out a bunch of forms, and that just puts a lot of work on them. So I would probably, you know, start talking from that point of view. This is going to alleviate a lot of those things. It's going to take a lot of stuff off of their plate. Really, that's kind of where I would go with that. I would just find that pain point with a HR person, which is going to be time and energy, and you know, just frustrating trying to logistically put all this together. Every year, they're having to do this. You know, if I get a rate increase of 20% in my company, and I got 20 employees, I'm shopping it. You know, and what comes along with shopping it? You know, a lot of logistics, a lot of paperwork, a lot of conversation back and forth. I mean, we're talking about months of planning and trying to get the right plan in to put in place.
So the appeal for the HR person then to fill her needs would be the removal of a lot of additional unnecessary work that would have to happen.
Absolutely.
And you're controlling a lot of it too, because you're going to be doing a lot of the work on your end, which just removes it from her side. So now we've also added the HR person into our people that we've convinced on this and the benefits for them. We've talked about the employers, the employees, now the HR and the agent. Again, win, 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 win all around.
Right.
Now, obviously, there are different classes, and I keep hearing about this. What are the 11 employee classes, and why do they matter?
So I'm going to read these just because, so I make sure I remember all of them. But it's, you know, full, part-time, salaried, hourly, seasonal, geographic location. Like, say you have some employees in another state. You know, it can get into collective bargaining agreements, and you know, if you have certain waiting periods for certain employees. You know, there can be a combination of a couple different things. So let's back up for a second. So you're an employer, and I'm telling you that what we're going to do is we're going to create this thing called a plan document. And inside this plan document, we're going to spell out all the things that we want to do. You know, first of all, what do we want to cover? We just want to cover premiums. So let's just say we're just going to reimburse or pay for premiums for the employee. We're going to set that dollar amount. And then with all these different classes, you can just say, hey, I'm giving this to everyone. Or you can say, hey, I'm giving $1,000 to the full-time people. I'm going to give $500 to the part-time people. If you're in another state and where you're finding that typically sometimes the insurance might be a little bit more, I might need to give those folks a little bit more money, right? You can say, hey, I want to do more than premium. I want to do some, you know, certain medical reimbursements. Like I want to reimburse for prescriptions. You know, we got some employees that are having a little bit higher prescription costs. So, you know, we can set those classifications up within that, what we call in that plan document. All right. So that plan document is basically what's going to spell out how we're operating within this group as far as ICHRA goes.
Understood.
Yeah.
So it looks like we're down to about 10 minutes left, and I know there's a lot of questions. So, folks, we're happy to do another webinar to continue this with additional information. But I want to make sure we at least answer some of these questions before the end. So let's go through some of these here. Let's see.
Now, also, if you know, some of these are going to be one-off questions. Kind of glancing through these. You know, again, the goal today is to kind of provide you with the basics of what ICHRA is. You know, we're trying to just give you some information. I mean, there's a lot more logistics to it. Obviously, there's regulations that you got to abide by. You know, there's the terms and definitions to it all, and getting familiar with that. Again, I want to reiterate this. You got questions. You know, we've been working with our marketers and our Messer team members for a while now on these programs. So if you got questions, just call one of the marketers, call the number on the chat box there, and get some information, you know, about what, you know, specifically about what you're dealing with, and let's walk through these scenarios. I'm telling you right now, every ICRA scenario is going to probably be different. You got different employee classes, you got different employee sizes, you got different employees in different locations. I mean, there's a lot of moving parts to this. So all we're trying to do is like figure out what your situation is and how can we, help you work through that plan document and provide a summary to those employers and employees and figure out how to write this. But
So I was going through some of the questions here, and I think some of them are actually great questions that we need to clarify. Here's one. It says, so ICRA is good for the marketplace. I thought it was just kind of a replacement of the marketplace. That's not the case, and I want to make sure that we completely clarify that.
right, it's not. All you're doing is redirecting where you're going to get insurance. That's all this really is. If you just think about it in the most simple terms, it's like I'm not getting group coverage now, so I'm going to go to the marketplace, and my employer is going to give me some money for it. Like you said, bag of cash.
What is Messer's process for implementation?
So we use we have a TPA partner, a third party administrator partner. So there'll be basically not so much a census, if you will, but there'll be some forms that you'll have to fill out. Their employer will have to fill out, and what that form is doing is helping us create that plan document and spelling out how we want it to administer this. Meaning, how much money do we want to put toward employees? What employee classes are there? When does this need to start? I mean, you have to be, if you're going to start something like this, you got to be 90 days out. Okay, that's a hard and fast rule. It's going to be 90 days. So if you're starting it now, 90 days from now, that's when everything's going to go into effect. So we have time to develop these processes. But if you call us, we're going to work with you and help you help administer this through the TPA. We're going to answer all the questions. We have people here that can help get on a call with you or do a Zoom call or whatever it is with the employer if need be. So we can help work through the process, but it's not as difficult as what it. I know a lot of things when you're starting something new like this. I mean, we're on the front of this wave, right? ICRA has not been around on the agent side very long. It's been around, but it's not been around very long. And so we're on the front of this wave. So there's going to be a lot of questions. We're kind of moving into this new blue ocean here. So we're going to have a lot of questions. So, we're going to be here to help. The TPA is going to be here to help. They're going to walk you through the whole process. And again, those are drilling deep questions, and we can probably talk about that for another hour or two when it comes to that. But, we're going to walk them through the process.
And that's a great point. And here's a question that I think, and we were discussing this earlier. It says, what about if you have a young group who has employees that are interested in maternity benefits? Most individual policies don't cover maternity. So one thing I want to define is ICRA is not insurance. ICRA is just the structure of the payments and how it's distributed. The actual health coverage is whatever plans you want to market to. But if you're using the marketplace or the ACA or whatever you want to call it, those do cover maternity, and it's still guaranteed issue, and everything will be covered with no waiting period. So I just want to make sure that that's perfectly clear that ICRA is not a health plan. It's just the distribution. Am I correct on that?
Yeah, absolutely. And that's why we say, when we say off or on exchange, as long as they meet those 10 minimum essentials that are required by ACA, they can participate in that plan and get those dollars.
If a group has over 50 employees and are required to provide affordable coverage, what reporting are you required to do for? Is it a 1095?
There's reporting functions that the TPA will require that they'll dole out to the employers. And you'll see that as we're setting this up. There'll be a list of check boxes that, hey, we're going to create this plain document. We're going to identify the classes. We're going to identify how much money. These are the follow-ups that we're going to have. You got to make available the plain document to all the employees. You're going to have to provide a summary of benefits on the plans to each employee. So all that's going to be spelled out, and we're going to do that in that initial process.
Understood. And here's another question: would this apply to businesses that don't offer health insurance coverage to their employees?
Absolutely. Yeah, whether you provide it or not, if you provide health insurance, just compare it. Is it like in the situation with that accounting firm that I'm talking to? Is it more beneficial for them to stay with group, or is it more beneficial for them to choose an ICRA plan so she can fund that business? And she's planning on growing and she's planning on adding new employees, so that's something she wants to do. But in this situation, it just works out where it's going to be less money for them to go and get an ACA plan and fund that money through ICHRA dollars compared to their group plan. It's just, now I'm not saying that's going to be the case every single time. I'm sure there's going to be plenty of cases where you're like, okay, well, they're getting a good deal on their group plan. It's just going to be more expensive on the marketplace. That's fine. But there's still opportunities for all of us. There's one question in here I want to bring up. What are the admin costs on ICHRA, and do we use a TPA? Yes, we use a TPA. There are admin costs. There's a per member per month cost for the TPA to perform that function. So, and again, I don't know exactly what they are. They're, sometimes they're more or less, around maybe $10 to $20. Don't quote me on that premium, or that per member per month premium. I'm just saying there are some fees associated with it. However, I will say that if you're dealing with a group and they are using any sort of TPA function, they are used to that per member per month fee. Whether they're offering a flexible spending account or whether they're offering HRAs, standalone HRAs, a TPA has to be involved to perform that function, and there's going to be fees with that. So they're already used to it. So don't think that this is going to be some brand new thing that you got to sell. But
are there any employer tax benefit contributions? Wait, do the employer get any tax benefits?
Sure. If they're putting money toward health insurance premiums, there's a tax benefit to there, and that's something that obviously everybody's working out with their accountants. But there's tax benefits to if I give you money for health insurance as a business, I can use that as a tax write-off.
And everybody, a lot of the questions are, what platform are we using to quote ICHRA?
We can quote on MyMFG.
There you go.
I'm gonna tell you to quote on MyMFG all day long. There's too many benefits to MyMFG. That's obviously a whole nother conversation, but there's too many benefits to MyMFG, especially when it comes to tracking. If you're not already using MyMFG, I would definitely suggest you really start thinking about it, because tracking all the different carriers and tracking all those commissions, and just for tracking purposes on the agent side, it's a great way for us to have all that data. So
here's a question: what carriers would an agent have to get contracted with to do ICHRA?
Whatever's in your area.
Yep.
So if I pull up, like in South Georgia, I pull up the carriers on MyMFG for certain zip codes. I'm going to see Centene, Allwell. I'm going to see Oscar. I'm going to see Anthem. I'm going to see those are the ones I want to be licensed with. Why would I not want to be licensed with those? If I'm sitting here talking to you and you're like, hey, I really like this Oscar plan, I'm not licensed with Oscar. I'm not saying every agent does this, but they're probably going to be like, oh, well, what about the Anthem plan? But just get licensed, get appointed with those carriers, especially in your area. We all kind of already know. If you're in the ACA market, you already kind of know what carriers are in your area. But again, that brings up the point, like, what if I have people out of state? I'd probably need to make sure I'm licensed for my non-resident license. I probably need to be familiar with those plans in that area and make sure I'm appointed with them. So
I think we kind of covered a lot of the reasons why, but just to answer the question clearly, why not try a level funded plan first over ICHRA?
You can. That's another option. That I'm not saying that's the best option, but there's just certain benefits to the ICHRA plan with the classifications and the ease of use over those kind of things. In my experience, sometimes they can get complicated. But it doesn't matter. You still got to have a plan document. You still got to go down that road. This is just an easier conversation to have. I think it's an easier conversation to have with the employer. It's defined contribution. It's allowing your employees to pick and choose the insurance that best fits their needs for them and their family.
What is commission for agent in ICHRA?
Okay, again, this is not health insurance. ICHRA is just a function of payroll, an accounting function. So don't think of ICHRA itself as this health insurance benefit, okay? It's just a way that allows employers to fund the employee and help them pay for their health insurance. You have to go out to MyMFG and sign up for a plan. And whatever plan you sign up for, whatever your level is with that carrier, that's what you're going to get paid. It's not going to be any different. And Micah, if I wrote you an ACA plan, on MyMFG on an individual side, I'm going to get paid the same thing as I would going over here and using ICHRA dollars. It's nothing changed.
Yeah, when you look at a commission grid, they're not going to say like, "Here's all the different products," and
Yeah.
it had a line for a product for ICRA.
Yeah.
No, that's not it. It's whatever product that you sold them,
Right.
and your commission level for that product with that carrier. That's what you're going to get paid.
Absolutely.
So there's no difference between that and ICRA. It's the same exact commissions.
Well, I think we've reached our time,
Yep.
actually. So I know you all have a lot of questions. Again, I want to encourage you to go to the chat box here. If you don't know the number, if you don't know who your marketer is, or if you have a contact here, please reach out to them, whether it's producer support or marketing agents or anybody like that. They're going to be able to help you. I would reach out to them if you got questions, especially if you got a scenario. Like bring them a deal, bring them a group, a scenario, and walk through the process with them there. But anyway, Micah, thank you for joining.
Thank you, Brandon.
I appreciate you being here with me to go through this stuff. It's always a pleasure, and I hope everybody has a great week. This concludes our webinar, and I hope you have a great day.